Digital Asset Solutions. I'm Jen Sanasi here with my co-host Sam Ewan, CoinDesk's global head of news, Ayon Ashraf, and senior reporter for Asia Pacific, Sam Reynolds. Hey everyone.
Hey guys.
How's it going?
Great to see you all in Hong Kong. We're here for Consensus. Our audience at home might hear a lion dance going on in the background. We're getting things kicked off for Consensus Hong Kong. Sam, you and I join our audience from the live desk all over the world. Before I bring in other Sam and Ayon, what are you looking forward to over the next 2 days?
I mean, this is our second time in Hong Kong. Last year was a banger. We had a great time. It feels like there are even more people, even more booths, partners, sponsors. Our speakers are amazing. I think it's going to be a great couple of days.
Yep, and just like every Consensus, we have the hackathon going on, Pitch Fest. We are showcasing the best of the best in the region. Sam, you are based here in Hong Kong.
Yes.
You cover Asia Pacific for CoinDesk. Talk to us about some of the big news that's coming out of the region.
Well, the big news right now is stablecoins, right? While the US debates stablecoins, it goes back and forth. Here in Hong Kong, a small market, it gets done quickly. So we'll see this coming soon, and lots of companies here in the city have something ready for when it's announced.
You say we'll see this done quickly. I know that there's some licensing coming in March, while, like you mentioned, back in the United States, the banking lobby and the exchanges, the crypto industry, are fighting over stablecoin yield. Talk to me a little bit about yield. How is yield represented in stablecoin legislation here?
For sure. Well, one quick point first is that banks here are stakeholders, right? Most of the companies that have an offering are with banks. So we have Standard Chartered, lots of big banks for the city as well. So it's really a joint effort, where in the US it's quite adversarial. As far as yield goes, one of the big questions about yield is it allowed? Banks hate that, but here in Hong Kong, it's on the menu.
Aeon, you're going to be on some of our stages over the next 2 days. Who are you going to be talking to? What are some of the insights you hope to leave the region with as you head back to North America once the conference is over?
Well, I mean, this is everyone's here, and we have 10,000 plus attendees here. And the main question, I think, at the top of everyone's mind, what happened last few weeks in the markets, and what does that mean for the rest going forward for the industry?
And 2 questions of that. First is, we keep hearing rumors that perhaps out of Hong Kong is where some of the volatility started. And my second question is, should we all just pack it up and go to AI?
Well, or robotics. No, but that's what it is. It's rumors. A lot of the data that we have seen does not support entirely what the rumors are. Some say it's the fund blowing up. Some say it's the OGs selling because of the quantum threat. Some say it's the macro factors. No one has exact idea of what exactly happened. And I feel like that is the question I'm going to be asking, and everyone's going to be asking at all the panels.
I think one of the questions is who is selling, right? And there are some theories out there that it's OGs. You know, Aeon, you were telling me before the show that maybe OGs are selling because of this pending quantum threat. There's some talk about ETF outflows. I spoke to Eric Balchunas on Markets Outlook recently, and he said actually ETF holders are coming out of this latest downturn as the diamond hands of the market, which is pretty funny to me because I never thought I would be saying that boomers would be the diamond hands.
No boomers. Yeah.
Do you think, Sam,
yes,
you're talking about stablecoins. Stablecoins was really the dominant narrative of last year. In this region, is it as exciting as we are seeing it being talked about in Washington all day long, et cetera? Are people having that same sort of, this is crypto's opportunity to really go mass?
Well, good question, because around the world you have different currencies, right? For stablecoins, the US dollar dominates that market, right? So here in Hong Kong, the Hong Kong dollar is the world's 8th most traded currency. Things like supply chain finance, trade. We don't know, though, the actual demand for a stablecoin for that currency, because if you trade crypto here, you use USDC, USDT. Will you use HKD? We'll find out.
All right.
I want to talk about some fun stats we have coming out of the conference. Some big names are going to be here at Consensus Hong Kong, including Tom Lee. I look forward to hearing what his bullish prediction is, despite what's going on in the market. Aeon, I know you're going to be asking those questions to folks out there, so maybe you can ask Tom Lee what his prediction is for ETH as we head deeper into 2026. We're going to have Joe Lubin on stage. He's also going to be joining us at the desk here. The Mooch, Anthony Scaramucci, can't miss him at a Consensus. And Tom Farley, bullish CEO Tom Farley, will be joining us. Sam, you mentioned AI and robots earlier on. Should we all pivot to AI and robots? I just want to let our audience know that we will have a robot here at the desk. So if you're on the fence, maybe wait for that segment, and you can make the decision based on the performance we see here if you want to pivot into robotics.
I mean, in a few hours, I am moderating a session on the idea of decentralized robots. So how do we combat against the hive mind coming to take us all? So I'm pretty excited to see what the answers are there.
I'm excited to hear the insights out of that. Something else to do with robots, people are going to be fighting humanoid robots here at Consensus. I know Justin Sun is going to be one of the folks, I believe, operating one of the fighting robots. I'm not exactly sure how it works, but we'll figure it out.
That's going to be fun.
Besides the stages, what are you guys looking forward to? I know we're talking a lot about our big guests, the kinds of conversations we're going to be having, some of the news that's coming out of the region and news that's going to be breaking here, but there's also a lot of fun stuff going on the sidelines.
Yeah. I'll let Sam take that one.
Well, definitely one thing is robots for sure. We have DePIN and AI as big themes here in Hong Kong. Question though, when the robots fight, is there actual robot blood?
We'll have to wait and see.
Yeah.
And what color is it?
What color is it?
Yeah.
Green.
Oh, it's green.
Always green.
Sam, I want to talk to you about some of the narratives that come out of this region. Sam and I, like I mentioned, we do CoinDesk Live all over the world. One of the big narratives is institutions. Institutions are here, institutional adoption. But when I think about Asia, I think some of the narratives of times past are still really very much exist here. A lot of folks are really building on some of those when it comes to culture and IP. We're going to be talking to some of the folks here at the desk. Besides the institutional narrative, what are you seeing here in the Asia-Pacific region?
Well, definitely for Hong Kong, all these big banks, all these big hedge funds, they have a crypto desk, right? They trade commodities, they trade real estate, they trade crypto. So that's a big one. I would say last year would be NFTs. This year, not so much. That really is a kind of a dying narrative. Definitely AI. So here in Hong Kong, every week there's a great IPO from another Chinese AI tech company, right? These chip companies, they're all bangers in the market. Now, we'll see if that has attracted risk assets, see if that competes with crypto. But right now, the headline, at least in Hong Kong, is that these AI companies are huge drivers of interest in capital.
And how hard is it to cover an event like this? You have 5 different stages. You have people walking the aisles that you also want to talk to. There's a lot of side events, a lot of parties, a lot of meetings you guys take offline. How do you sort of manage what makes news when everyone is here to try and make news?
Well, you have to look at what we just talked about. What is on top of everyone's mind, first of all. Second of all, who are the top speakers, which we talked about as well. And what are the themes that's coming out of it that looks forward, not backwards, right? Now, how to cover this? Very hard.
A lot of work.
It is a lot of work. But our team at CoinDesk, obviously, always up for the challenge. And we have done this for past 11 years, right? Or 11 consensus, right? We're going to crush it.
We have a lot of journalists all over. They're going to be
Best in the game.
We do, yep.
Yeah, best in the game. They're going to be on the stages. They're going to be here at the desk.
Absolutely.
They're going to be talking to some of your favorite folks. So if you want to follow along, obviously watch this live stream, but also check out CoinDesk.com. Those articles are going to be updated as we continue throughout the next 2 days. Speaking of CoinDesk.com, I logged onto the website this morning and saw Sam Bankman-Fried is back in the news. That's one of the big headlines. It's scrolling here on our screen for our audience watching at home. But it seems like his mom has filed a motion for him. He's still fighting this thing, doesn't want to spend the next 25 years in prison.
Yes.
What's going on?
That's,
So his mother's motion tells the court, or asks the court rather, were the funds actually at risk? And they argue, they were not, which would attack the entire legal theory the prosecution used to put him in jail. President Trump has said that a pardon is not on the agenda, but let's see. Sometimes the taco trade can be extended to pardons.
Our audience who's watching at home might not know what the taco trade is. What is that?
Trump always chickens out.
Okay.
So maybe we'll see that there might be a pardon in the works. I don't think so personally, but never say never.
All right. So that's one piece of news that's coming out. I also saw Michael Saylor is saying, don't worry, despite the markets. MicroStrategy is going to continue buying Bitcoin. That's not really a standout headline these days. Michael Saylor is going to keep buying Bitcoin. I think the day he says he's going to stop buying Bitcoin, that's going to be a big headline.
That's when we pack up and go.
That's when we pack up and go.
It does seem, though, that that even with the taco reality of the U.S., that the tariffs are affecting prices. Across equities as well as across crypto. People are still worried of an uncertain sort of economic environment. Do you guys have any prediction of, are we going to see this for a while? Should we just get used to this volatility? Or is this something where, 6 months from now, new Fed chief is in town, like everything is looking good? Where do you guys stand on that?
I don't think we will ever be able to get used to this. Markets don't like uncertainty. And every time a headline comes out with related to tariffs, things are going to either go up or down. So until we have certainty, which I don't see it coming anytime soon, I don't think market's going to calm down anytime soon based on those headlines.
I will say, though, that looking at the macro in China, all the data shows that they're doing fine right now. Like, they have rewired their economy to deal with tariffs. So things like BYD, the car maker, all their exports are now geared towards this tariff world. So they're not concerned as much about the taco trade, about the headlines. They can export to South America, to Southeast Asia, and also internally. So even though we have volatility with crypto, the macro narrative in this part of the world is doing fine.
Sam, Marcus Thielen from 10x Research is going to be joining you at the desk later today. I know Marcus Thielen has said that previously in midterm election years, Bitcoin has a drawback of, I believe it's 60%. I stand to be corrected. That is a very US-centric take. And so I'm curious how the Asian markets are looking at what's going on in the United States, especially since it's a midterm year, and how that might be affecting crypto over here.
Well, it's uncertainty right now, right? So the numbers show that the Democrats might take this back, and we don't know that quite yet. Now, the world does still follow the US, right? So when the US opens, Asia watches. And if Bitcoin will dump in US hours, that'll make for a very dynamic Asian morning.
The world still follows the US, but isn't crypto supposed to be this global thing? Wasn't it meant to be
It's meant to be,
borderless?
but it's now an asset for Wall Street. So you do see that the US as a large capital market does attract capital flows, and that is the world's center of commerce.
I had a chat about that, and I do want to say one thing, and someone had a really interesting take on this, because my question was that whatever we asked for has happened, institutional regulations, ETFs and all that has happened. What is the next catalyst, right? Someone said, and I think it's a very fun one, is that Satoshi needs to come back. That is the catalyst that we want.
Maybe Satoshi will come back right here at Consensus Hong Kong.
I think Satoshi coming back would be a good thing for crypto.
I don't know.
That is,
He's here right now. Who knows?
maybe.
Oh, very
It's him.
It is.
Jen,
Yes.
I'm just getting word
Okay.
that we have our first announcement.
Okay.
Our first announcement is today is your birthday.
Happy birthday.
Happy birthday,
It is my
Jen.
birthday.
Hey.
Thank you. Oh my God.
There we go.
So we had our special delivery
Oh, thank you guys.
all the way from New Jersey.
All the way from New Jersey.
Very hard to get these on the
My
plane.
birthday balloons.
Yes.
Well, thank you, everyone.
Well, we wanted to celebrate that you are, run the show here. It's your birthday. You're working on this most important day, and thank you for being here.
Well, it's such a pleasure to be spending my birthday with all of you. I wouldn't have it any other way. Thank you for the balloons. And, I think just because it's my birthday, I got a little bit more energy, a little more pep in my step. So everyone watching at home, make sure you stay tuned. We're going to be here for the next 8 hours. It's not only going to be me, thank goodness. We're going to be joined at the desk by several co-hosts, many of them from CoinDesk, many of them from other shows that you probably follow and love. So thank you so much for the birthday wishes. I look forward to spending it with all of you and everyone at home.
It's going to be great. You don't look a day over whatever age you tell people you are.
18.
Okay.
Yep.
There you go.
Thank you.
Perfect.
Thank you, everyone, for celebrating my 18th birthday with me. All right. On that note, let's head on over to the main stage. We are going to hear welcoming remarks from Consensus Chairman Michael Lau. He's also going to be at the desk with us, I believe, tomorrow. So we'll hear from Michael Lau about everything that it takes to put into Consensus Hong Kong. And after we hear from Michael Lau on the main stage, we're going to hear an opening keynote from a Hong Kong government official. Let's head on over there right now.
Crypto is absolutely a way to survive. They're cheaper, that they're faster, that they're more transparent, they're more modern.
Cut through the noise with something powerful.
Katie bar the doors, $1 trillion will come and index that asset.
Welcome to the Oros main stage at Consensus. Here to guide you through today's programming, please welcome your host, Kana Chu.
Good morning, Hong Kong. Welcome to Consensus Hong Kong 2026. My name is Kana Chu, and it's my absolute honor to be your host here today at the Oros main stage. Look around this room. We're standing in the absolute epicenter of the digital revolution. Last year, our debut in this vibrant city was a sellout success. And this year, we're even bigger, bolder, and more focused on the road ahead. But before we dive into our first session, a quick housekeeping note, make sure you download the Consensus app to customize your schedule across our 6 stages, set up meetings with fellow attendees, and of course, access our digital map. And don't forget to share our event on socials. The official hashtag is ConsensusHK. Now, to officially kick things off, please join me in welcoming the Consensus Chairman, Michael Lau, and CoinDesk President, Jay Yarrow.
All right. Welcome to Consensus Hong Kong. Thank you for joining us for yet another landmark conference here in my home city of Hong Kong. I want to first start by saying thank you to the Hong Kong government for their support of this conference. In particular, the Chief Executive of the Hong Kong Special Administrative Region, the Honorable Mr. John Lee, and also the Financial Secretary of the Hong Kong Special Administrative Region, the Honorable Mr. Paul Chan, for their participation and also engagement with this conference. Last year was an incredible inaugural year for us, and I have to say that it's been incredible to see everybody joining us again this year. The vision for Consensus continues to be threefold. The first is to bring the high-quality content at scale that Consensus has been known for, being the longest-running Web3 conference and blockchain conference in the world. The high-quality content best expressed by the over 360 speakers that we have this year across the many stages over these next 2 days. The at-scale component best represented by the over 11,000 attendees that we have and counting, with 65% international guests representing over 110 countries. It's great to see that we've got more people this year attending and joining us for the conference. The second part of this is for Consensus Hong Kong to be a gateway to Asia. We've brought around us the top leaders, the top founders, the top builders from around the region, and we want to give you an insight into what's happening around the most dynamic and the fastest growing region in the world. The third part is to showcase Hong Kong. Beyond just the industry, we also want to show you what this great city has to offer. This year we have counted over 400 side events, and it's incredible to see that we're up year on year with that as well. I hope that you are able to experience all the best that Hong Kong has to offer and hopefully fall in love with the city just as I have. The last thing I just want to point out is that the last couple of days, I've been speaking to a lot of founders and CEOs, and there's this one theme that keeps popping up, and it's this idea of conviction and community. I think there's something that's truly inspiring for those of us who've been through a couple of cycles, when you see that there's this conviction of leaders that really want to build real technology and value-added businesses in bear markets as well as the winter. And there's something that's truly inspiring when we all come together as well. And so I know that that's the people that are here this week at Consensus Hong Kong, and I hope that you leave empowered and inspired as well. So just want to say thank you to all the sponsors, all the partners and attendees that are here with us to make this Consensus Hong Kong happen.
Thanks, Mike. I'll try to keep it brief because I'm pretty sure nobody in this audience is here for me. We've got an incredible lineup ahead of us. I just want to say, when you come into this industry, it has periods of booms, it has periods of busts. If you spend too much time online, and Lord knows I do, you would think we are currently in a bust period. But when you come here and you meet with people, you see the energy. We have more people attending more events than we've ever had before. The excitement, the energy, it's palpable. So I can't wait to hear from all of our speakers, and I want to just thank everyone, all the sponsors who made this possible, and everyone who paid for tickets, and everybody who came, the attendees. This doesn't happen without you, so thank you.
Great. So without further ado, I'd like to turn your attention to the screens for a special address delivered by the Chief Executive of Hong Kong, Mr. John Lee. Thank you.
Mr. Michael Lau, Mr. Tom Farley, Mr. Jay Yarrow, industry leaders and innovators, distinguished guests, ladies and gentlemen, good morning and welcome to Hong Kong. It is my pleasure to join you today at Consensus Hong Kong 2026. This is a key platform that brings together Web3 leaders from around the world to discuss and shape the future of the Web3 ecosystem. I would like to begin by thanking CoinDesk for returning to Hong Kong, hosting this iconic conference once again after last year's success. Your choice underscores Hong Kong's distinct advantages. It also helps to show the world our growing prominence as a global hub for Web3 and crypto innovation. Hong Kong is the world's freest economy and one of its 3 major international financial centers. Under the unique one country, two systems principle, Hong Kong is the only city that converges both the China advantage and the global advantage. We have a long tradition of the rule of law, a judiciary that exercises its power independently, and a common law system that is similar to many financial hubs around the globe. Hong Kong has an open and transparent market, and we enjoy the free flow of capital and a low and simple tax regime. What's more, Hong Kong's financial regulatory system is robust, and our financial market stands out for its deep liquidity, innovative products, and world-class investor protection. As the only city in the world that counts as many as 5 universities in the global top 100, Hong Kong boasts a highly educated workforce and a welcoming environment for global talent. These and many other advantages have helped to make Hong Kong the world's number 3 in global competitiveness and number 4 in the World Talent Ranking and World Digital Competitiveness Ranking. With this unparalleled positioning, Hong Kong has consistently served as a platform that brings together international capital, talent, and information, continuing to expand our global markets and reach. The world of Web3 and digital assets carries with its vast potential. They help to realize more efficient financial transactions at a lower cost and with more inclusive options. The Hong Kong SAR government is committed to establishing Hong Kong as a global hub for innovation in digital assets. That's why over the past few years, Hong Kong has been actively building the regulatory framework to promote the steady and sustainable development of our Web3 ecosystem. Last June, the Hong Kong SAR government issued the Policy Statement 2.0 on the development of digital assets in Hong Kong. It sets out a vision for a trusted and innovative digital asset ecosystem, one that prioritizes risk management and investor protection while delivering concrete benefits to the real economy and financial markets. I'm pleased that a lot of our initiatives in the area are in good progress. One key initiative is our implementation of the Stablecoins Ordinance last August. This new law provides for a licensing regime for issuers of fiat-referenced stablecoins in Hong Kong. The Hong Kong Monetary Authority is actively processing licensing applications, and we believe the first batch of stablecoin issuer licenses will be issued within next month. Meanwhile, our Securities and Futures Commission announced last year the Aspire roadmap. It's planned for regulating Hong Kong's virtual asset market. We have since implemented a series of measures to boost liquidity of the VA market and expand VA product offerings and services, all for the purpose of facilitating the development of this vibrant area of growth. Ladies and gentlemen, Hong Kong is in a strong position in promoting Web3 development. Hong Kong will continue to go all out to stay at the forefront of this pivotal shift in finance and technology. We welcome companies and institutions from around the world to join hands with us and build a brighter digital future together. On that note, I wish you all a fruitful conference these 2 days. Do remember to take some time to experience the life and culture of Hong Kong, Asia's world city. With the advent of the Lunar New Year, I wish you a healthy and prosperous year of the horse. Thank you.
How I'm gonna be it all. is. In your pose is the dust settled around us, and the walls kept tumbling down.
At Consensus Hong Kong. Over the next 2 days, we'll be bringing you conversations with some of the top voices in attendance, insights, and the best moments from stages, booths, and everything in between. Let's now head on over to CoinDesk's socials to see what attendees have been up to.
All right, first off, we have the Twin Towers of Ethereum.
We have the Twin Towers of Ethereum.
Tom Lee, Joe Lubin. Looking forward to Consensus Hong Kong in a few days. They're both going to be here. We're really excited to have them and the whole Ethereum community. So people are talking about that within this, although really every protocol is very excited for Consensus. All right, let's go to the next one. All right, next one.
This one is about the weather, Sam. I know we can't see the words, but I know it's about the weather because just a few days ago, it was very cold here in Hong Kong, and I had to head out to the mall to get a few jackets. And when I did that, the weather took a turn for the better, and now it's warm and delightful just in time for Consensus to start.
I did not know what to wear since I've been here, but I'm glad to hear that the weather's getting better. When I go outside, I will be in a tank top. All right, let's take the final one. All right, this is from our chairman, Michael Lau, really welcoming everyone to Hong Kong. We're really excited. Michael just got off the main stage, really opening the conference. He's a real champion in the region for crypto, as well as for CoinDesk and Consensus. Please, though, everyone, if you're listening, tag Consensus. Let us know. We will feature some of the best posts on the stream throughout the next 2 days. And we're excited to see you. But, Jen, we have some amazing guests with us, don't we?
We do. All right, let's bring in our next guest to understand where crypto is heading. In this region, you have to look at custody and institutional flows. Here to discuss that are Abel Xiao, head of APAC for BitGo, and Nicholas Peach, head of APAC iShares at BlackRock. Gentlemen, thank you for joining us so early in the morning.
Thank you. Very happy to be here as well.
Thank you. Very excited to be back at Consensus. It's such a phenomenal event every year. You can feel the energy in the room. It's going to be a great couple of days ahead of us.
We're excited to have you here. Did you catch the lion dance just before?
Did. That is the hood.
That's what we're following. So no pressure, but
pressure.
Bring the energy. Sam and I were talking about institutional adoption at the top of the show. I think that is going to be a huge theme that comes out of the conference here. Nicholas, I'm going to start with you. You know, Sam and I are based in New York. We talk so much about institutional adoption there. We talked so much about ETF flows in the US, especially on the back of those ETFs being approved and getting that regulatory clarity. Just lay a foundation for us. Talk to us about ETFs in the region and what it's telling you about how institutions are thinking about crypto.
Absolutely. And so, you know, we launched our crypto strategies in the US in 2024. To simplify investor access to cryptocurrencies and really provide a bridge between traditional finance and the digital asset space. That ETF, they've seen unprecedented growth, right? Just shy of 80 billion today, makes it the fastest growing ETF in history. The second fastest ETF took 8 years to reach 80 billion. This took just over 2, right? But despite the fact that these products are US listed, it's not just a US story, it's a global story. And in fact, a significant portion of the assets that sit within those strategies are from clients within Asia Pacific. And one of the things we are very fortunate to have in the region that's been a real tailwind, there's actually a boom in ETF adoption in general for Asia Pacific clients they're increasingly using them to access all sorts of different asset classes that they didn't previously. And to have these products available, right, at this time means that it provides multiple tailwinds to adoption for APAC investors of these US products. In fact, of every Asia investor that chose to invest in a US listed crypto ETF last year, 95% of them chose us. So it's really an unprecedented growth and a tremendous tailwind for adoption in the region.
Nick, I just want to follow up for a second because I think there was a macro for a long time in crypto that you had to be a pretty sophisticated math brain to succeed in crypto. You had to get in early, you had to understand kind of the rules. Arbitrage was its own piece. We see that even today in prediction markets. ETFs feel like one of those vehicles that start to really simplify for just the average everyday person that says, I want to be exposed to crypto. I see all these people who are doing well with it. I'd like to put a little percentage in. And so do you think part of that ETF growth, as you're talking about in general, is just the idea that the wider market would just like to play the game that maybe some of the insiders have been playing for a while?
Absolutely. And really, when you think about the advantage of the ETF wrapper, its simplicity is a really big draw, right? And increasingly, we're seeing broader investor archetypes look at cryptocurrencies and crypto assets as an asset class, right? The same way they would look at fixed income or equities or commodities, right? You don't have to be a gold expert to invest in a gold ETF, right? And so what the ETF vehicle is allowing is a really broad spectrum of clients to invest in the asset class where previously you did have to have the expertise or you did have to have the operational capability to do so, which, frankly, a vast swath of the financial industry does not yet have. So absolutely, and that really is one of the primary drivers, I think, of the adoption of the wrapper.
I want to turn it over to you now, Abel, from the custodian side. What are institutions asking for? Just building on what Nick was saying, folks are really interested in ETFs now here in the region. What do you think is driving that? Give us a little bit of a profile of the institutions here and what they're asking for.
Yeah, it's a good question. I mean, we're in a really fortunate position where, we think of our business lines, our client profiles as really two segments, right? There's the fintechs, platform type clients, and then there are the, more traditional institutions in the space. The fintechs of platform clients, payment companies, neobanks, exchanges, traditional Web2 corporates coming to the space. On the other hand of the spectrum, you have traditional banks, regulated asset managers, ETF issuers, family offices, VCs, etc., etc. So we're very fortunate in that we've got a pretty good overview as to what's going on in the market today and what clients and partners are thinking about in time to come as well. I think the recurring theme that we see is how can we go to market quickly? Right? For a lot of clients, even over the past day or so, they are overwhelmingly in agreement that the market is here. How do we go to market quickly? How do we wrap all the goodness of what you do with regulated infrastructure, liquidity, staking provision, fiat rails, regulatory standing, put it all together, bundle it together, and give us a good go-to-market plan? Yes, price action aside, and we can talk about that on a different day, in a different conversation, but people are building. When we look at what happened in 2022, with a lot of these more traditional institutions having formed the teams, hired the people, had the strategy with the bear market that came, they left. Today, despite us being in the bear market, the teams are still around, they're going ahead with the budget, they're going ahead with execution, they're going to market, right? And that gives me a lot of confidence and a lot of comfort in how the industry has matured and how the institutionalization of the industry has come to pass.
I know you said price action aside, but we got to address the elephant in the room, right?
Someone give us an answer.
The lion in the room.
We got to talk about the lion in the room. We did just have that lion dance. After that October 10th liquidation event, talk to me about how institutions are looking at that. Can they handle this type of volatility? It's not something that we see in traditional markets. And so what has the response been like? What are the questions they're asking? It sounds like what you're saying, Abel, is it's business as usual.
It's very much business as usual for us, from what we see from our clients. I mean, look, there's rumors and whatnot about dead bodies floating and all that as well. Could be true, could not be true. But the reality is that the infrastructure that's underpinned a lot of the activity has worked. The plumbing works, right? Things work. And I think people take a lot of comfort in that as well. When institutions eventually have a DDQ of sorts, want people to answer questions as to what happened in October, November, even the last few weeks, right? They're going to see that things work. And because of that, they would have that confidence and the ability to come into the market over time as well.
Yeah, I couldn't agree more. I think that part of the advantage of getting a more broad-based adoption of things such as a crypto ETF wrapper is that you start to see much more institutional involvement. Now, institutions think about asset allocation very differently than individuals do, right? So when they think about allocating towards the digital asset, it will be as part of an investment portfolio, along with equities, along with fixed income, and typically have a longer time horizon than a retail investor. What that means is you see less price sensitivity to short-term moves, right? If you're accumulating a position as part of a portfolio over years, right, well, an asset decline could just as easily be an opportunity to add more as it is a reason to be concerned. And the data really bears this out. I saw an article from Eric Balchunas at Bloomberg talking about the stickiness of ETF holders in particular. And again, it's that institutional mindset in that, you know, I think on the last 40% sell-off in Bitcoin, only 6.6% of the ETF AUM was redeemed, right? So people are holding. And actually, if you take last Friday, so, you know, we talk about crazy days in crypto, right? If you take last Friday and you look at the price action and the volume of the ETF wrappers in the US, our ETF traded $10 billion on the exchange, right, that day. Tracked the price of Bitcoin throughout the day. But at the end of the day, critically, we saw, you know, $60 million of redemption. So less than 1% of the volume that traded on the exchange actually represented like a net exit of the position. So, you know, what you're starting to see is the volatility, you know, is inherent to any asset class. But as you see a broader investor base, people think about volatility differently, right? And they don't necessarily have the same reactions that you would have seen in the past.
I want to ask the question because both of you guys are dealing with a lot of folks in the TradFi space who are just trying to learn the ropes. Each of you represent sort of major players in the crypto ecosystem these days. I look at it through the lens of you have days like last Friday, you have days like October 10th that we talked about, where I think retail is driving a lot of the FUD that happens there. But you know, if you had an underlying thesis as a family office at Amazon, you would have to weather the volatility they're going through right now. Like, it's just part of the idea of when you put money to work, if you think in those long-term horizons, these moments don't freak you out the same way that if I'm looking at my retirement account, it might look differently. Right. So what's the message you give to TradFi when it says, hey, crypto is like everything else, the underlying technology and the sort of fundamental reason that exists is important, and we should support that. You know, is that just part of you guys are just playing like you're like the bartender who's just trying to be like it's all going to be good?
you want to take this?
Yeah, it's a really good question. If we stay on the same thread of that convergence between TradFi and the crypto native worlds, right? We are actually seeing a lot of crypto native wealth that was made over the last year or two, now taking an interest in, for example, using ETFs to borrow against them, right? To get fiat loans against ETFs, right? And because of that, that stickiness reinforces itself as well. And obviously, people need to buy a new house, pay for bills and whatnot as well. And that convergence, right, more than everything else, on a practical basis, on a day-to-day basis, shows itself more than ever as well. And for a lot of folks from the TradFi world that were not in the space before, there's really two camps, right? They're either pro-crypto or crypto-curious. If they're pro-crypto, problem solved, right? If they're sort of crypto-curious, if they appreciate very quickly that the volatility that we just talked about is a feature and not a bug, they keep an open mind, then hey, there's a lot to embrace with it as well. But if you see it more as a bug than anything else, then maybe you want to sort of redo the homework again, right? Go back to fundamentals, right?
And I think one interesting stat that we were speaking to clients about recently, crypto has a reputation for being volatile, but before last Friday, if you'd looked at the 30-day volatility of Bitcoin versus gold versus silver, Bitcoin was lower than both, right? So we live in volatile times. And obviously, there are some, I think, some differences, and this is kind of how we explain it to our clients, in that while there is sort of leverage in every asset class and leverage unwinds in every asset class, because of the largely automated and digital nature of a lot of the cryptocurrency ecosystem, it can happen much more quickly, right? You see automated liquidation occur, but ultimately, at the end of the day, it is an asset class like any other, right? It has portfolio characteristics like any other, and that's increasingly how people are seeing it.
Nick, Abel, thanks so much for joining us at the desk. Thanks for kicking things off with us. We hope you enjoy the rest of the event, and we'll see you around.
Thank you.
Thank you.
It's a real pleasure.
Thanks all.
That was head of APAC of BitGo, Abel Xiao, and head of APAC iShares at BlackRock, Nicholas Peach. We are going to take a quick break. We'll be right back.
Unlock the full potential of your digital asset with Hex Trust, the leading digital asset financial institution, trusted by over 500 institutional clients worldwide, licensed across key jurisdictions. Hex Trust, the leader in digital asset solutions.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today. From Consensus Hong Kong, our next guest joins us now, CEO and founder of Input Output, Charles Hoskinson. Hey, Charles.
Good to be on. Thanks for having me.
I think we can start calling you friend of the show now.
Yeah.
I think we can. Our last guest, Nick from BlackRock, was saying we're living through volatile times right now. We're talking about volatility in the market. Just kick us off. How are you watching volatility right now? What are you focusing on?
I mean, you have to get pretty desperate these times. We're looking for like new demographics to bring into crypto, AI agents, uncontacted tribes in the Amazon, all kinds of people. But I've been in it in tough times and been in it good times. This one particularly stings because we expected a really strong cycle in 2025. I mean, we didn't quite get it, so a lot of people are pretty bitter about it. But the good news is we're looking for a new narrative. I saw this in the first to second generation turnover between Bitcoin to Ethereum, and again with Ethereum to the third gens. So I think when we get to that new narrative, it's going to bring a lot of new people in, and it's going to revitalize, refresh the markets. We just got to get through the next 90 to 180 days. It's going to be tough.
What do you think, in your opinion, what is driving that narrative most of kind of the hesitancy, the worry? Is it about sort of the political spectrum and tariffs? Is it more that sort of people were chasing high highs and then they realized, oh, maybe this isn't going to be as green as we thought? Or is it just, the hype train that is inherent in crypto leads us to sort of always want this up and to the right? And the reality is, like we've been seeing with Google and Amazon, who've been a very, very volatile, or gold and silver, a very, very volatile asset. It seems like people just are sort of too uncomfortable with the idea of losing money in an environment that we've all been in crypto, where it's like, that's part of the game, and you've got to ride it out.
So the challenge is that retail's just tired. It's like that meme where it says, "I'm tired, boss." Everybody's just tired because they've been through, think about the last 5 years. They've been through NFT mania, the collapse of Luna, collapse of FTX, the Scary Gary era. They've been through meme coin mania, and then they went through all the Trump stuff. And every step of the way, they said, hey, look, like some magic MacGuffin's going to come in 6 to 12 months, and it's going to make everything better. And we got all the MacGuffins. We got BlackRock coming in. We got the US government doing the reserve thing. We got good regulation with Genius to start, and obviously Clarity stalled out. But all the things that we were looking for happened, and then nothing happened afterwards. Mm-hmm. And so retail was always hoping, and they said, when we get to this town, like everything will be better. We got to the town, and the hotel was closed, the restaurant's closed, and we're like, where do we sleep and eat? So people are deeply frustrated. The other side of it is that institutions, they're starting to federate the industry. You can see this with various different federated chains that are owned by large companies. What they want to do long term is move everybody into a custodial holder from a non-custodial holder and then ban DeFi and non-custodial wallets so they can consolidate the entire industry to like 10 or 15 big actors. And so there's some apathy because they seem to be making forward progress there. So a lot of us OGs in the space are saying, we didn't fucking sign up to have Goldman Sachs and JP Morgan and BlackRock and these other guys run the industry. We signed up to build a new banking system that is pushing power to the edges. And it would be really sad if after 15 years of investment, sacrifice, and heartache, we literally hand it back to the same people that Satoshi was criticizing in the Genesis block of Bitcoin. So I think that's also driving it, is there's some hopelessness, and they're saying, are we actually going to win this or not? So we need a rallying cry. We need new technology, a new narrative, and we need to get people, their morale up a little bit and say, hey, there's still hope for the little guy and pushing power to the edges.
Two follow-up questions for you. I know you were on X recently talking about how much you've lost on paper, $3 billion. There are new entrants into the market who have probably lost some money, maybe not to that magnitude. What's your advice for them? And secondly, large institutions are here. It doesn't look like they're going anywhere. You say we need to kind of go backwards. Is that even possible? Are we too far gone?
I don't think we're too far gone, and you can't let it bother you. You're up, you're down, and when I entered the space, I had nothing. I can leave the space with nothing. People get addicted to status, brand, and lifestyle, and then it's less about how do I push the mission, philosophy, and vision, and it's more about how do I preserve and protect what I earned and who I became. So you can't fall in love with that. It's like if you're a musician or an actor or something, you're always like, well, I have to be that person who was in that Oscar movie, or I have to be that best-selling album or something. Well, no, it's about the music. It's about the art. So just go and do new things. And so I haven't lost my passion at all. And a lot of the OGs in the space who are still here, they haven't either. Because, at the end of the day, it's like, what are the consequences of failure? The whole human race lives in a system where everything you buy is tracked forever by a small group of people. And there's, in many cases, transnational bodies that will control that. So you can't vote your way out of it. You can't fire people. I just don't want to live in that world. So the stakes are too high. And they're getting even higher with AI, and so we just got to keep going. And I fully appreciate and understand where the retail investor's at. Imagine you tell your wife, we're going to make all this money in this coin, and then you lose like 92% or 95%. And then you do it again, and then you do it again. Like, how many times do you do that before you get divorced? It's not pleasant. So retail is kind of fatigued and done, and we need a fundamentally different way of approaching it. But I've seen it before with the first to second generation. During the first time, we had Litecoin and Feathercoin and Freightcoin and Peercoin. They're all just forks of Bitcoin in their own ways, and slightly different monetary policies, still proof of work. And then Ethereum came, and it radically changed the perception that everybody had. So when we look to the future, you have privacy, abstraction, and smart compliance. And it's talking about building one rules-based global market for everyone, everywhere. And it's like going from black and white to color television. You have a completely new dimension to build in, and you have completely new applications, many of which are non-financial. We keep treating this like a financial product, and I keep saying this is the everything product, it's economic, political, and social. I want to get to a point where your Tinder runs on blockchain, and you can prove properties of how tall you are and how much money you make and where you're at, and you can actually verify that the picture in the Tinder profile is real.
On Tinder.
Yeah, it's very important. But I want to get there, and I want to get to a point where all the video games run on it, and a point where all your Facebook and your other things run on this infrastructure. That's what's going to bring 2-3 billion people in, and that's what's going to change everything. And the consumer doesn't care about that there's a token at the end of the rainbow, there's a blockchain at the end of the rainbow. I don't have to care that there's TCP/IP in the internet. I don't have to care how electricity works. I just flip the switch, and magically it works. We got to do that as an industry, and we got to stop over-financializing everything. Anytime I hear anything, I always ask, when's the token launch? And I'm sorry, 11 million tokens went out last year. It's not sustainable. Nothing is going to go to the moon. Get people in, solve real problems, the narrative will change, and then people will respect and love the industry again.
But I do think that there's I'm not going to say it's an illness, right? But there is a really challenging reality that Donald Trump tweets a meme with the Obamas as apes, and suddenly someone creates a meme coin that hits $10 million in market cap, and some market makers make a lot of money and everyone else loses. And that happens in rinse and repeat. The idea that every part of culture is financialized is one that there's a part of crypto that really seems to embrace. I think of even Base now saying we are basically going to be a trading chain in the way that Farcaster tried to do that, and they then went down. How do we get people to focus on the things that you're talking about, which are humanity, which are privacy, which are ways that you should exist as a human in a world where there is so much unknown and technology is reading everything?
So the first thing we have to do is reset the relationship consumers have with crypto. So in my lifetime, your lifetime, this thing, the cell phone, fundamentally changed everything. And why it changed everything is it's super easy to use. You just click a button, you put your thumb, you enter a PIN code, and then magically you're in this entire new world, and it's one-click install. Right now, I have to understand how the systems work, understand the culture, understand private keys, understand how to back up wallets, all this stuff. So really the only interface is for people that are doing this for financial reasons. So the first step is make it ridiculously simple with wallet abstraction. Make it so that you can create a wallet in 30 seconds with a fingerprint and a PIN code. You don't have to remember any keys. You can do social recovery. Then once you have it, make it really easy to connect it to things like Facebook or YouTube or these other things. And then organically, experiences develop that we didn't have before. And then everybody's interface to crypto is non-financial. They're looking at more as an extension of an experience they already have, as opposed to a marketplace where they're going to trade. Now, yes, people are going to financialize, and that can be an augmentation of an experience. Like now I have micro tipping when there's Twitch stream or a VTuber or this live stream here. People like what they say. They can click like, and then all of a sudden we get a penny or something. But it's not core about that. That's an extension of an existing experience, and what crypto does is now enables that extension, or prediction markets and media. The other thing is we have to know where the world is going. By 2030, the majority of internet searches and commerce will be agentic. So the vast majority of people using internet aren't people, they're robots. And you see this with Claudebot and Moltbook and these types of things. They created their own religion, Crustafarians. So that's the payment system for those creatures. And it's going to change how advertising works and commerce works. So we as an industry, we have to stop trying to chase the bouncy ball and saying, how do I build a token, get a 10x on the token, dump the token, do it again. This is what the industry's done now since meme coin mania and before, and everybody's tired of it. They don't want to play the game anymore. Consumers are too smart for that. So what we need to do is pivot now to real experiences for real people. They work on a phone. They're super simple. And then they extend and augment things that we already have, experiences we already have, like the YouTubes, like the streaming services, like your Netflix, whatever it may be. And you're adding a new dimension, whatever that dimension is. Once you have it, you'll get billions of users that come on in, and you'll create trillions of transactions for these networks, which creates real utility and value for them.
I know you've been experimenting with agentic AI, with Logan. Just talk to us a little bit about that. What are you fiddling with? What are you doing when you're at home? And what's that future that you are working towards?
So I left Twitter and I replaced myself with a digital twin there. So I had all this spare time because I was no longer doom scrolling all the time. So I started programming again. And actually, it's never been more fun to program with some help from our good agent friends. And so what's nice is now I can ride every wave. So when Claudebot came out, within 48 hours, I forked it and I created my own version with a lot of security enhancements. I put it in a trusted enclave with an HSM and dual Docker with a sidecar. And I just started running Logan, the exit liquidity lobster. And I connected a lot of Cardano apps, and I put them on Moltbook and said, hey, start posting about Cardano and these other things. But what was really fun about it was just seeing how quickly agents can self-assemble and create experiences like social networks or dating apps or religions or these types of things. And there's something to it. We're starting to expand ourselves and put our personalities into these machines and then let them run while we're not home and let them do things. And the fuel that powers these guys is going to be crypto through things like the X.42 standard and stable coins. So that's how you get these things done. You give them economic agency. So I'm going to take Logan in a lot of different directions. It's hard to stay up to date with Claudebot because they have 200 commits a day, so you always have to make sure your CI doesn't get broken. But I'm going to take him in new directions, like have him start trading and issuing NFTs. Maybe he'll start his own church or something. I don't know. Whenever I have spare time, I put a little bit of effort into it.
You're inspiring me to stop doom scrolling. I don't know if I could go as far as that, but who knows what I could come up with if I got off of social.
I mean, it seems like you're having a lot of fun with it.
Yeah.
From the way it's coming out there. You've been in, many years in this ecosystem. Is it required for you to find those things that really inspire you just to stay committed, stay sort of in the game? Or is there something where you just say, I know you're also really interested in a lot of other scientific opportunities, whether it's the bringing the direwolf back to life or some of the bioluminescence we've talked about in the past. What's your personal thesis of learning?
Well, at the end of the day, you just say what's possible. And what's cool is the technology evolves at such a pace. Things that were science fiction 5 or 10 years ago, they're now possible today. And just a question of, do I have the resources to go pursue it and the passion to go and pursue it? And so my problem is I do too many things. And so what this year has been about is trying to focus and consolidate a little bit, shut a few things down, and really drill in, which is why I sold the Blackhawk and I mothballed the jet and these other things. It's not like I really needed the money, but it was more that it takes time to manage it. When you have Blackhawk, you have a hangar, you have to deal with the FAA, it's all this stuff, like part breaks, you have to go find the part. And I found I was spending a lot of time in meetings about this stuff, and I said, well, I got these 400 other things to deal with, let's go deal with those, and those take priority. So it's a balance between passion and availability, and right now I'm super passionate about Midnight, and super passionate about some upcoming products like RealFi, and really I think we're at the beginning of a new generation of the cryptocurrency space. And what's really nifty is I get to serve both human and non-human demographics. The things I'm building are equally useful for agents as they are for human beings. And that's cool because I love dealing with agents more than people. I really do at this point. The agents are a lot more fun. They're a lot more reasonable. People have gotten pretty crusty in the last 10 years in particular. As for horizontal things, what's cool also is we're at an inflection point where everything is changing. The mode of computation is changing. Quantum computing is coming, for example. So then you say, okay, well, how do I build defenses against that or use that to make the systems better? Like there's something called quantum money where you can have cryptocurrencies without a blockchain if you have a quantum computer. So there's just a lot of really cool things that exist there. So being able to stay up to date and read and say, well, what's the horizon going to be? That's the fun part. And when you're right, it's magical because you kind of know the future 5 years before other people get to know that future. It just takes time, and you have to be deliberate and focused. And when you get rich and you get a lot of friends, you lose time because you end up getting pulled in 50 directions. And to be a real good entrepreneur, you have to find the time. You have to pull it all back together and say, okay, I'm just going to do this one thing. I'm going to go really deep and really enjoy it.
Charles, I want to get your opinion on quantum computing. Earlier at the desk, we had a few of our journalists here talking about a rumor that this recent market downturn could be from OGs who are selling because of the quantum computing threat. Do you think there's any validity to that? Or have you heard in your circles that people are offloading their Bitcoin because of the quantum threat?
I mean, if there are, they're stupid. Quantum computers are not a threat right now. You have to have good epistemic hygiene for this. The first step is saying, who's the best group of people to measure whether they are coming, when they're coming, and what they can do. So that's the US military and the intelligence agencies because they have the highest risk profile. So they formed a program at DARPA called QBI, the Quantum Benchmarking Initiative, and 11 companies, including IBM, are participating with them, and they've already passed the first round, and they're measuring whether quantum computers will be a thing by 2033. So by the end of next year, we'll actually know definitively when and how and who, and then it gives us a sense. Second, we already have all the defenses for quantum computers. FIPS 203, 204, 205. We help work on them alongside many, many cryptographic groups with NIST. And it's not a question of can we defend against them, it's who wants to pay the price. All the post-quantum stuff is 5 to 10 times less efficient than the elliptic curve stuff. So nobody wants to be the blockchain that says we're now immune to quantum computers, but by the way, you're 10 times less efficient. So you've lost 10 times of your transaction throughput and all this other stuff. So right now what we're doing as an industry is less about protection and it's more about optimization. How do we take what we have and get it to run faster, cheaper, and also start beta testing put together? So we have a program, we work with people from Google and from Linux, and we have some people at Microsoft Research. It's called Nightstream, and we're very involved in lattice-based crypto. We've made amazing progress with it, and it's a drop-in replacement for the ZK systems that we have, and it's post-quantum. And it works on AI chips and all these other things, so it's really fast and linear scales. So whenever we need it, we have it, but I don't want to pull that trigger because I still think there's several years left over on the elliptic curve side. But always when you have an emerging threat, you have to say, who cares the most? When did they say it's going to come? What defenses do I have? What trade-offs do I want to live with? And also, is this just my problem or is it a universal problem? And then if it's a universal problem, get in bed with the people that are most able to do it. So the Fortune 10 companies worry about this a lot. So get in bed with their cryptographers, get in bed with the big universities, build a coalition, and you solve it as a group, and then you just make sure it's ready to get turnkey and go through. Bitcoin can do this. The challenge is it will require probably a hard fork for Bitcoin for the first time ever. And that's going to be challenging. There's ways you can do it with a soft fork, but then you have these parallel systems where you run pre-quantum and post-quantum. And then what do you do with all the accounts that are like Satoshi's accounts that are now vulnerable with it? So they don't have the governance system necessary to coordinate. We do with Cardano, Polkadot does, Tezos does, everybody who did on-chain governance does. It's a 6-month conversation for us. And we add cryptographic primitives all the time. We added all the Bitcoin primitives to Cardano. We added BLS to Cardano, all these other things. So it's very trivial for me to add a lattice space or hash-based signature system. And then suddenly we've moved the chains in terms of being post-quantum. And we can create a migration strategy. Bitcoin, it's going to require more social coordination. But instead of being a cynic, say, well, this is a good thing. Because if you also can talk about changing something as fundamental as the engine that keeps things safe, maybe they can talk about the proof of work algorithm or sidechains or other capabilities in the system for the first time ever and open that up to the fact that there's been 16 years of innovation inside the space. And it can make Bitcoin immeasurably better and more competitive as a platform instead of a 7 transaction per second system that's blind, deaf, and dumb. And so it's no offense to Bitcoin, it's just, it's 2009 technology. And tens of billions of dollars have been spent, and armies of scientists and engineers at scale have figured out a way to make this stuff run better, and Bitcoin can't keep just pretending like that didn't happen. So upgrading to post-quantum is an opportunity for them to acknowledge that and actually innovate at the same time. So it can be very good for the ecosystem.
All right, Charles, we're going to leave it there. We're going to take a break. You are going to stick with us. When we come back, Charles is going to be at the desk, and we're going to be joined by DingX, founder of Predict.fun.
Sam, where are we going?
We're going to Consensus.
What road are we taking?
Where we're going, we don't need roads.
Just Miami.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today. Welcome back. Charles Hoskinson is still with us, and now joining us at the desk is DingX. Ding is the founder of Predict.fun. Hey.
Nice to meet you.
Nice to meet you too. Welcome.
Thank you. Thanks for having me here.
Of course. Now, I gotta start off with this question. It's a little bit fun, and I'm super curious. You know, for a long time, you built pseudonymously.
Yes.
I have a hard time with that word. You were the ultimate mystery man. You were this legendary NFT whale.
Oh, yep.
Now you are a public-facing builder. And my question for you is being in the public eye, is building in the public eye as exhausting as sometimes Charles makes it look?
Oh, it is actually quite exhausting. I've only been public for about 2-3 months now, and I think I've been to more conferences than I have in the last 10 years. So, yeah, it's really different. When you're pseudonymous, you actually have a lot more time on your hands, and you can build in peace. And I guess it's easier interacting with users online than it is in person. So, yeah. So I previously built PancakeSwap, which is the largest DEX on BNB chain. When we launched that, I guess we didn't really have an offline presence of a community, but everyone was online, everyone was really excited, and you could really gauge all of the interests. But now I think, especially with the latest, like how the market is, and as well, like everyone wants to see more public-facing founders, and everyone wants to see, like how committed you are, like you actually need to be outside talking to people. So yeah, it's a very different life, I would say. I prefer being pseudonymous for sure, but it's also fun seeing this other side of the crypto world.
You're going to start losing your hair. You're going to gain 30
I've
pounds.
got really good hair.
Ding, you were known very much for, again, being this very alpha trader in the NFT system. Like I was in the Ape DAO, which
nice.
you guys had created a long time ago. And I remember at one point there was kind of that turning moment that sort of felt like, hey, we want to get out of all of our positions, both within ApeDAO as well as the NFTs. And here we are, fast forward now 2 or 3 years from there. There's still a strong, small community of people. There's some artists who are still doing great, great work. What do you think went wrong in the NFT ecosystem?
Okay, I don't think anything went wrong per se. I think it was just a combination of COVID and everyone needing some sort of personal identity online that you could verify. And I guess once COVID was over, you could just meet in person again, and you could just hang out with friends in person. So it was much different. I remember back in those days, everyone would have, I'd be terminally in Discord channels, like hundreds of them, and you're just chatting with people every day because I was in Shanghai at the time actually, so we had like a 3-month lockdown in my apartment, so I was just online every day. So I think it's more of a like a way of of the NFT space kind of trying to mature a bit more from the speculation side. And so there's still a lot more artists at the moment. I think many of the top NFT projects have still survived and are doing well, but it's more of a builder, like a real builder kind of a system now. Yeah.
I always wanted to ask, how do you think meme coin mania affected NFTs?
Meme coin?
Yeah, NFTs came first and then meme coins. Did it take a lot of the interest out of the NFT?
Yeah, I think it did. Because there's a huge crossover between the two.
Right.
A lot of my friends in NFTs went to meme coins. It's just the speculation aspect of it is just where the money flows all the time. So from NFTs, you could mint something for 0.1 ETH, and it could go up to, back in the day, you could go up to like 2-3 ETH in a day.
Right.
That's like a 20x. It's very similar to meme coins now, or at least half a year ago or a year ago, where you could just buy something, it could go up, and that's a story that you would sell, and people would flock to that. So yeah, I agree. Like a lot of people went from NFTs to meme coins. And
then maybe to prediction markets.
And now I think, yes, good flow into prediction markets, I think, which is the next thing, which is really interesting. People actually have fun. And yeah.
So how do you roll them all together and have NFTs, prediction markets, and
how do you roll them together?
Into one thing. What's the next pancake swap?
Oh, yeah, well, so I'm building Predict.fun, which is a prediction market on BNB chain.
Mm-hmm.
So actually your positions are actually NFTs on chain, but no one's actually figured out how to use that yet. That's something that, because we have a good background in DeFi and building DeFi products, we're trying to combine DeFi with prediction markets. So there's so much liquidity in DeFi that it's such a waste to not have Polymarket or any other on-chain prediction markets use the DeFi liquidity available. Mm-hmm. So what we're trying to do is, first of all, we're providing yield to position holders on prediction markets, where as soon as you open a position, your funds get deposited into an on-chain lending protocol, so they get the yield over time, and it's on-chain. There's also, because they're NFTs, the positions, there's no reason why you can't use them as collateral to do lending, to do borrowing, to do some sort of leverage as well in the future. So yeah, there's a lot of untapped potential with DeFi and prediction markets. And NFTs, yeah.
We were just speaking with Charles about kind of the financialization of everything. And I know prediction markets are really having their moment right now. But how are you thinking about the sustainability of that? Are humans going to want to continue to bet on everything under the sun? Like, how does this evolve?
Yeah, I mean, gambling has been around for a long time, but we don't use that word in prediction markets. We use trading information, right? So it is going to be, I think, very intertwined with a lot of every aspect of trading or some sort of financialization. People love like the crossover between news, media, events, and being able to place a wager or bet on which direction, like who wins what, is going to be very intertwined. It's like very easy to get exposure from that stuff as well. I think a lot of the Polymarket, most of the viral tweets are on big news events that they had, good odds on before. Public opinion had those, which started from the Trump election. So, yeah, I think it's going to be very intertwined with everyday living. Yeah, as easy as strolling through TikTok or Instagram. Sometimes I'm sure in the future you'll be able to see, scroll through events and see what the odds are. If you want to, be contrarian, and that kind of stuff. Yeah.
Do you think the large social media guys are going to finally enter the industry and actually put their own prediction markets and their own wallets in the platform? Because every 3 years they talk about it, but they never do it.
Well, I think if they have enough incentive to, they will. And I think that's part of the future of prediction markets too, is you need to be incentivizing the right people. So with on-chain prediction markets at least, you can see who the creators are, what kind of volume they're bringing in, and then if you reward them with fees in the future or incentivize them as creators should be incentivized, then there's an incentive for them to come into the space and post more about what they think will happen or not happen.
I wonder, Ding, we're going to be on a panel tomorrow.
Yeah.
Almost the merging of both of your worlds right now. There was a story that came out during the Super Bowl about someone who picked 11 out of 11 for the halftime show specifically.
Yes.
And so it was very, and it was an on-account very specifically, seems to be an insider who just knew all the things that was happening and bet against them. And they were able to shield their identity by doing so. So you could have had that being Bad Bunny, for all we know, who was making bets on his own show that he guaranteed the answers to. How do we look at sort of both privacy and predictions where there are going to be those people who have that inside information? And at least on Wall Street, there are some regulations around insider trading, but every prediction market right now is being accused of being rife with people who have inside tracks. So I guess what's your first take on how do you manage that?
Yeah, it's a very delicate topic and complicated as well. So I think it starts with how you define insider information. So I think Tarek, there was an interview a few days ago, or just yesterday, saying, if you place thousands of people in front of supermarkets, like let's say Costco around the world, and you count the sales every day, and you can see how many people are going in, how many people are going out, and you make a prediction based on that. Is it really inside information if you're gathering the information yourself? So, yeah, it's complicated. I think they're still figuring it out. I think there's definitely going to be different definitions of inside information going forward, and we're going to adapt to however it comes as well. Yeah, we'll be talking more on our panel tomorrow. Yeah.
And Charles, do you think it's a challenge or an opportunity within the privacy world of shield that?
Because what's going to happen is you'll have very sophisticated selective disclosure tools, and so you'll be able to say pseudonymous, but then you can prove attributes and properties, like you're an accredited investor, or you're allowed, or you're not affiliated with a particular entity, because somewhere in the chain somebody knows the real life human identity, but on chain it's a zero knowledge proof. So you can see that with the non-cred standards or these other things. We've built quite a bit of software for that. We have partners like ZKMe that do great work there. So I don't think it's necessarily a huge problem. It's a bigger question. I like where you're going with it, the epistemic hygiene of what is insider information. Because hedge funds are notorious when they trade oil of measuring how deep the tankers are in the water to estimate inventories. And that's derived knowledge that gives you a trading edge. And you're allowed to do that. It's problematic when you're the CEO of the pharmaceutical company and you know the FDA approval is coming on Tuesday. So you call your brother and be like, hey, bro, you need to buy on Monday. Or, if you're the president or something and you're going to tweet something, you let somebody know, and then suddenly the market goes way up or market goes way down. That does feel like a distinctly different thing and a misuse of authority, and there's patterns for that. The SEC has very sophisticated algorithms to look for insider trading signals, and a lot of them have been tripped in the cryptocurrency industry, and there's been very mild enforcement since Trump took office with it. So I think at some point we're going to sort it out, but it's going to get worse before it gets better. But I think ultimately technology can create these kind of pseudo-permission markets where you have to prove something, but you don't have to reveal your identity, and they're still intrinsically decentralized.
We got to wrap up in just about a minute. Charles, I got to ask you, if you could go back in a time machine and be pseudonymous, would you do it?
You had a great life, man.
At least.
I've done both sides. I've had some projects I've worked on where I was pseudonymous, and that was a lot of fun. It's fun to be public because you get to meet people and you get to know people. You just can't let the criticism bother you. And it takes a few years to get there because, people, they judge every component of your life and then you get pretty deranged over time. And it tends to be connected to the price of your token. So, it goes up, they love you, and it goes down, you're the worst human being in the world. But I wouldn't give up the relationships I have for anything in the world. There's so many good people throughout the world. I've been to 75 countries in the last 10 years, and I've probably met more than 100,000 people. And there's a lot of love there. So net, it's a positive, but it definitely carries a lot of downsides and risks. And a lot of founders have to understand that. And I hope to give people a third option or instead of being totally anonymous or being, a real life identity, you can be pseudonymous and have a sustainable reputation, but you don't actually dox your real life human reputation. But we can still trust that. And I think a lot of people will choose that third option because they can still build relationships with people, especially with digital twins, because now you can represent yourself as a digital twin and they can talk to people and so forth.
Charles Deng, thanks so much for joining us at the desk. It was a pleasure.
Thank you.
Thanks, guys.
It was a lot of fun. Thanks.
Oh, it's great.
Cheers.
Thanks.
That was Input Output CEO and founder Charles Hoskinson and Predict.fun founder Deng. Get the breaking news that moves markets. Guest joins us now, CEO of Go Mining, Mark Zalan. Go Mining is bringing the ability to mine Bitcoin back to people in any country and of any income level. Mark, welcome.
Thank you. Very happy to be here.
Very happy to have you here. How's the conference been going for you so far?
Very good. Lots of interesting people to talk to.
Lots of interesting people indeed. We have folks all around hanging out in beanbags outside of our setup here. You're going to be engaging in a fireside chat tomorrow. It's called Bitcoin Adoption Won't Come from Holders, what the data reveals about why people don't spend Bitcoin. We gotta unpack that. So let's start with the first part of what your fireside chat is called. Bitcoin adoption won't come from holders. What do you mean?
There's a paradigm shift that needs to happen between sort of mining and holding Bitcoin for the long term, and then actually building the other part of the ecosystem, which is spending it and building on the promise of Bitcoin becoming the digital currency.
Let's talk about the promise of Bitcoin becoming the digital currency, because I've heard a lot of folks shift what they believe is going to happen with the regulation of stablecoins and the adoption of stablecoins. They think maybe Bitcoin does really become digital gold. People hold on to it to protect their investments, and stablecoins is actually the digital currency that folks use for payments. What do you make of that?
We think that that's shortchanging the Bitcoin story. The original promise was always for Bitcoin to be the digital currency. So it's over the past 15 years plus 18 years, I guess, Bitcoin has fulfilled part of that promise, which is accumulation of wealth and being able to hold it for long-term appreciation. But we think as Bitcoin maximalists, which has always been our sort of reason for existence, we think that that second part also needs to happen. And this is something that we have been hearing consistently from our community, and as we talk to people in the industry, that there is a demand for being able to literally pay for coffee around the corner with Bitcoin, but the infrastructure and the capability is not there. So from our perspective, that's sort of the next frontier that must be solved, which is being able not to just hold Bitcoin for long term, but also being able to use it as an economic means of payment.
What needs to happen for us to get there?
I think first is a mindset shift, and secondly is the infrastructure needs to be there. Or actually, let me reverse maybe those two things. First, the infrastructure needs to be there, and then secondly, people will start to change the way they think about it.
when you say the infrastructure needs to be there, I know there are a bunch of folks who are building in Bitcoin DeFi. They're thinking about how to implement layer 2s on the Bitcoin blockchain. Just talk to me a little bit more about that. I mean, while this is happening, it still feels like adoption is still sitting on the sidelines.
Exactly, and it's a chicken and egg thing, right? You have to build it, and then they will come.
Yeah.
So right now, you don't have the ability to go into a local Starbucks or whatnot and buy a cup of coffee with Bitcoin. That infrastructure needs to get built, but the investment in that infrastructure is not taking place because the demand is not there. So somebody has to make the first step, and this is something that became apparent to us as we went through last year, and we've been talking to our community and people around the Bitcoin ecosystem. So this is this is sort of the next frontier that we've set for ourselves as a product company, as a Bitcoin product company, to solve in 2026. So further on this year, we'll be rolling out payment rails and solutions, not just at level 2, but level 1, that will be able to accept payment in Bitcoin, will enable merchants to accept payment in Bitcoin that is immediate, that is immediately recorded in the blockchain, and that is virtually at no cost or very little cost to the merchant, certainly well below the acquiring expenses that they're incurring today with Visa and MasterCard and the major payment networks.
I know you've gone out and talked to people who hold Bitcoin about their desires for using Bitcoin and payments. Have you gone out and spoken to merchants? What are they saying about accepting new forms of payments? What are they saying about accepting cryptocurrencies? Do they understand? And what is the education gap there?
Yeah, that's a great question. And I've been in consumer finance for since 2000, and this is the conversation that happens around every new payment technology. I remember the same conversations when contactless payments, when Visa PayWave and whatnot, NFC payments came out in the early 2000s. That everybody's happy swiping cards. Why would we need to make investment in infrastructure to make contactless payments a reality? And here we are, everybody's happily paying with their phones, and nobody wants to carry cards around. Yeah. So the merchants will go where the consumers are. And if consumers are happy adopting new technology, the merchants will get on board. They'll make investments in infrastructure. So it's a little bit of having the conversation, explaining that, in our case, the way that we look at it, the Bitcoin payments are actually going to be financially beneficial to acquiring merchants because they can take place at a much lower cost level than the existing payment networks are charging it. So there's a direct financial incentive for merchants to accept payments, and obviously for consumers holding Bitcoin and wanting to use Bitcoin as a form of payment, there's a much easier path to using Bitcoin to pay for that coffee. They don't have to go through the conversion steps, go through the various DeFi, BTCFi, whatever, conversion options protocols, all of which actually incur a financial tax for them. So we think that there's a very strong financial interest from everybody in the ecosystem to make that happen. And 2026 for us is going to be exactly that year where we focus on having those conversations with all of those stakeholders and making actually the technological solution a reality, and then rolling that out into the marketplace.
We're sitting here at Consensus Hong Kong in the Asia Pacific region. Why is it important for you to be having this conversation here in this region?
This is where the future of payments is. It's always been here. It's actually, I was based in the United States for a long time, and we've been coming to Asia, East Asia, to Japan, to Southeast Asia for the past 20, 25 years to see the future of payments. Japan had contactless payments, 10, 15 years before the rest of the world got it. So this is the place to be. The people are extremely open-minded. There's a lot of interest in new product solutions, new payment solutions as part of that. So there's a willingness to have that conversation, to look at the next step that is available. So this is where we definitely want to get started.
And Mark, just before I let you go, we have people come on our shows on CoinDesk all the time making these Bitcoin predictions. One I can think about most recently, Bitwise's CIO came on the show and said Bitcoin could be $6.5 million within the next 20 years. I'm not going to ask you to make a Bitcoin prediction, so don't have to worry about that. But when we think about spending our Bitcoin, what's incentivizing people to want to spend their Bitcoin when they think that their holdings could, 10, 20x in the next X amount of years?
Well, it's ultimately we want to see and we want to be part of the community and the ecosystem that's driving Bitcoin adoption. And Bitcoin adoption must have a payment component to it as well. Holding it, that digital gold story, is only part of it. But not being able to spend it is a huge, in our mind, is a significant sort of roadblock that is preventing mass adoption. That payment component has to become available for people, and an integrated ecosystem where you can earn Bitcoin, you can store Bitcoin, you can keep Bitcoin, you can spend Bitcoin. All of that must become part of an integrated solution. So that's something that we're focused on building as part of the community and as part of our product line that we're rolling out throughout 2026.
Mark, it's been such a pleasure having you on the desk. I look forward to hearing you speak on stage tomorrow.
Thank you very much. Enjoy the conversation.
That was Go Mining CEO Mark Zalan. Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today. Joining us now is Nigel Feetham, the Minister for Justice, Trade and Industry of the Government of Gibraltar, a jurisdiction known for being a pioneer in digital ledger technology regulation. Minister, thank you for being here.
Hi, good morning, Jennifer. Thank you. It's a pleasure being here.
Yeah, it's a pleasure having you here. Let's just kick it off here. We're sitting at Consensus Hong Kong. Why is it important for you to be here in Hong Kong talking about the regulatory progress that's happening over in Gibraltar?
Yes, I mean, we are part of this community, Jennifer. We've been part of the DLT crypto community since we established the regulatory framework in Gibraltar in 2017. In fact, we were the first jurisdiction to do so. So it's important for us to remain at the cutting edge of this industry. So I'm here to support colleagues, I'm here to support licensees, and I'm here basically to relay the message that Gibraltar is open for business in this particular space, and we want to see more companies, we want to see growth, and we want to support this community.
What was driving Gibraltar to be so regulatory progressive back in 2017, and has that shifted?
Well, we're a small jurisdiction, Jennifer. We're a niche player in a lot of areas. For example, our financial services and gaming sectors in Gibraltar account for 50% of our economy. We are large in these areas, totally out of proportion to our size and geographical location. So let me give you a couple of examples. In the motor insurance space, 40% of all motor insurance policies sold in the United Kingdom are underwritten by Gibraltar companies. We've had an insurance ecosystem for over 25 years. In the gaming sector, 70% of all online gaming business transacted in the UK are transacted through Gibraltar companies. So we are a niche player. We saw there was an opportunity in the crypto space. Nobody else had provided a regulatory framework. So therefore, we had the first mover advantage back then. But as your question rightly suggests, in order to be able to remain at the cutting edge, you've got to be competitive. We are looking at what other competitor jurisdictions are doing. As a government minister with responsibility for financial services, I've asked my regulator and my stakeholders to form a working group to see what else we can do in this space. The DLT regulatory framework in Gibraltar is extremely flexible, it's principles-based, so therefore I don't believe that we need to make significant changes. I think we need to tweak the legislation to move with the times, but there are a number of areas where certainly we need to be more progressive. I've asked my officials to draft a tokenization regime, and we're doing that, so I expect to have something in the statute book within the next 3 months. We're also looking at DeFi to see what is it that we can do in this particular space. I accept that we can't regulate DeFi applications themselves, but is there something that we can do around providing quality assurance to third parties by establishing a regime which we're actively considering, where you license and regulate service providers to DeFi application systems. And that's something which I think we will probably be one of the first jurisdictions to do this. We're setting a super tech regulator in that particular space. So it's an exciting time for Gibraltar.
We spoke at the desk earlier today about Hong Kong being able to move a little bit quicker when it comes to regulation than the United States because it is a smaller jurisdiction. And it sounds like that is also a competitive advantage for Gibraltar. Things can just move quicker there than some of the biggest jurisdictions. Do you see that as your competitive advantage?
It's always been a competitive advantage for small jurisdictions. In other words, I can draft legislation and I can bring it before Parliament. Ordinarily, the ordinary time period for bringing legislation is 6 weeks, but I can dispense with the 6-week requirement if I can prove there is urgency in whatever piece of legislation I'm putting before Parliament. So we can move very, very quickly. In other jurisdictions, it takes many months and sometimes over a year. We don't have that problem.
Talk to me a little bit about how Gibraltar is positioning itself to attract builders from this region, from regions in the West, to yours?
Well, we are open for business regardless of the geographical location. In other words, we've got leading DLT firms in Gibraltar that are leading players and niche players all over the world. We've got Bullish, one of our leading crypto exchanges. They are established and licensed in Gibraltar. I think one of their first licenses was actually in Gibraltar. We also have Bitso. These companies operate in niche geographical areas, so therefore we're open for business regardless of the geographical location. All we ask for is that we want quality over quantity. We're not a jurisdiction that wants a large number of licensees. We believe that we want small niche players that can make a difference rather than opening the doors to everyone. That is not what we have done historically in other areas, and it's not something that we are doing in this area.
Bullish is, of course, the parent company of CoinDesk, so I just want to mention that for our audience. Before we let you go, talk to me a little bit about what 2026 looks like. What regulatory milestones are you working towards?
Well, we want to grow this sector. We want to grow this sector because this is a fast-moving sector, probably the fastest-moving sector in any financial services related activity. You can't wait for tomorrow. It's here and the now. So we are actively working, as I said, on a number of legislative initiatives. And I hope that by the end of this calendar year, we will be in a much, much advanced area in the areas that I've highlighted. We have a record number of applications, which the regulator is processing at the moment. We work very closely with the industry and the regulator. That really does create a relationship of partnership with our firms, and it's what gives us our principal advantage.
All right, we are going to leave it there. Minister, thanks so much for joining us at the desk, and we'll see you around the conference.
Jennifer, thank you very much indeed.
That was the Minister for Justice, Trade and Industry from the government of Gibraltar. If you're just joining us, you're watching CoinDesk Live from Consensus Hong Kong. Let's now take a look at some of the top news headlines today. Sam Bankman-Fried's mom filed the ex-CEO's latest request to clear his name in court with the former leader of FTX seeking another U.S. trial since being convicted and sentenced to 25 years in prison. Bankman-Fried has been continually challenging his situation in court. This latest motion claims new evidence would justify a reset. It also noted the absence of testimony from key figures like Ryan Salami, who fought his own separate legal battle. Moving on to our second story now, Michael Saylor said concerns that Strategy will be forced to sell Bitcoin amid price declines are unfounded and reiterated the company has no plans to stop further acquisitions of the asset. Last week, the company added 1,142 Bitcoin to its holdings for roughly $90 million. The company's total stack now stands at just above 700,000 coins. And our last story today, shares of Coin are down nearly 30% this year, with JP Morgan analysts warning that softer trading and crypto prices are likely weighing on revenue. The bank cut its December 2025 price target to $290 from $339 ahead of fourth quarter earnings. JP Morgan analyst Ken Worthington remains bullish on the stock, and his reduced target still suggests a 75% upside from Coin's current price of $163. Those are your top headlines for the day. Get all of your latest news updates at CoinDesk.com.
History doesn't just happen. It's built by the bold, the brave, and the bullish. Consensus Miami is where crypto, culture, and trillions in capital converge. And ideas that fuel institutional scale are sparked. A place for those who refuse to settle for the status quo. The builders reprogramming the future of finance through every deal and decision. Breaking boundaries begins with being there. Experience the epicenter.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today. But Consensus, presented by Hex Trust, the leader in digital asset solutions. I'm joined now at the desk by Bonnie blockchain host Bonnie Chang and Emphasis director Leah Callan-Butler. Hello to you both.
Hi, very good to see you.
Yeah, nice to see you too. Bonnie, you and I are going to be hosting some interviews together. Leah, you're going to be on the desk later on today. How have you been enjoying the conference?
It's amazing.
Yeah?
Yeah, the energy is crazy out here. This is my first Consensus.
Woo! Welcome.
I know. I'm amazed.
You're amazed?
Yeah.
Okay, yep. Bonnie is amazed. Leah, are you amazed?
Totes amazed. I've been coming to Consensus since 2018, like back in New York. Mm-hmm. I love Consensus Week, but it's so special to me that we actually have it in Asia now as well. So this is our second year, right, that we've had it in Hong Kong, and it's super cool. I'm Australian, but I'm based in the Philippines, so being able to see Consensus in our own region is the best.
Both of you are based in the region, but Leah, I want to talk to you for just a second. You talk about coming to Consensus. It's 2018 since it was in New York. What an evolution.
Oh my God, like the vibes in 2018 were amazing too, but it was totally different. Like it was all suits. I remember the long queues for the elevator. We had like NFT artists like set up with a folding table on the in the corridors. Like it was such a vibe. But now it's a different vibe. I think we're actually like achieving a lot of mainstream adoption, institutional trust, regulatory clarity. So it's a journey.
And the suits are kind of back.
Yeah. The suits are back, yeah. We kind of went through the t-shirt and jeans phase, and we're back to suits.
Suits are back.
360.
Bonnie, I want to bring the conversation back to the region. You know, we're talking about local narratives here while we activate Consensus for the next 2 days. You obviously host your show. Talk to us about some of the dominant narratives that you're hearing from the guests you're talking to. What's driving the crypto narrative here?
Everybody's talking about tokenization, stablecoin, because they all want stablecoin for their own region and their own country. Obviously, there are so many different countries in Asia, and I think people are still trying to catch up and learn about this new trend.
I think that's a good point. I mean, we talk so much, especially on CoinDesk, we are very focused on the North American market about USD-backed stablecoins, but there are so many other currencies, and there are a lot of other currency-backed stablecoins that are emerging here in Asia and doing pretty well.
Yeah, I actually am going to be doing a bunch of interviews with founders and CEOs over the next couple of days on the floor, like kind of hearing what they're working on. And one of them is they're working on a USD-pegged, gold-backed stablecoin for Kyrgyzstan.
Oh, wow.
Yeah, and it's to do with helping remittances and local businesses and, amazing payments evolution there. But yeah, I think there's so much innovation happening with stablecoins. I'm looking forward to learning a bit about that one.
That's one thing I love about Consensus. You know, we talk about the suits being here. We talk about these large narratives, tokenization, institutional adoption. But there are still so many builders that attend Consensus. There's still so many people working to solve real problems for real people. And I just love getting the chance to see them IRL and talk to them and to watch some of the programming on the stages or some of the videos that you're going to be doing, Leah, to learn more about these. It's all about amplifying the stories that are pushing this industry forward, and it's not just one sector or one narrative. I know that you were really focused on gaming, IP, and culture for a really long time, Leah, and I think that narrative is one that's still pretty predominant here in the region, more predominant than I would say it is in North America, where CoinDesk is based. Talk to us about some of those themes that are emerging.
Well, I've actually got 2 panels tomorrow that will be covering exactly this, so come and check it out if you're around. The first one is with Abstract Chain and the Pengu Asia community, which represents the Pudgy Penguins IP in the region. Mm-hmm. And we're going to be talking about how they're building this global media powerhouse. And I really enjoyed researching that because they've been compared to the likes of Disney, Nintendo, like Sanrio. There's so many amazing media powerhouses, and they're looking to do the same, but built on community IP with a bottom-up model. So that's going to be fascinating. And another one is called Still Seeking the Next 100 Million Players. That one is not to be missed because we're going to dig deep with 3 OGs of blockchain gaming. It's Animoca Brands, Sandchain, and Sovereign. They've been around since between 2018 and 2020, which is the beginning of blockchain gaming. but they're still surviving, which is more than can be said for a lot of people in that space. So we're going to be digging into the pivots that they've gone through, how it's affected their strategy, and where they see the space going. So come check it out.
I will for sure be
You probably
there.
won't be able to.
I mean,
You're
I'm
gonna be
going
on
to
the
try.
desk, but
I'm going to be on the desk, but I do have some breaks, so maybe they will align. I hope.
It's going to be good. There'll be a lot of lessons for builders.
If not, I will look at the recording afterwards. Okay. Well, speaking of pudgy penguins, every time I go on TikTok and see a pudgy penguin TikTok come up on my feed, I get so happy for them and for the fact that, like, wow, this amazing TikTok has appeared in my feed, and it's pudgy penguins, but it's just so relatable, and folks don't even know that it is a pudgy penguin.
Their Giphy views, I think they're over 1 billion Giphy views now. Like, they're smashing the likes of Disney, Fortnite, Pokemon. Like, it's incredible what they've achieved in notoriety of that IP.
Bonnie, you are going to have your Bonnie Blockchain booth set up here at the conference later on today and tomorrow. Who are you going to be talking to?
I'll be talking to Tom from ARK Invest. I'm super excited about that one because ARK Invest come up with this annual report talking about the big idea of that particular year. And this year, I think, except for Bitcoin and tokenization, they've been talking about how, we should send solar panel to space and, that energy sector. I find that really interesting. And there are a lot of AI elements in this conference as well.
Mm-hmm. There's going to be robots, a robot fight.
I saw that
today. This humanoid robot fighting will be happening at Consensus, and I know Justin Sun is going to be controlling one. I think Sue is also going to be controlling one. I stand to be corrected. I think Justin and Yat are fighting each other.
This is hilarious.
Oh,
yeah.
He posted something about this. That is why. Okay, it explains.
I saw the robots fighting each other. I didn't realize it was going to be like humans. Okay. I just have to see this.
Humans controlling robots. This is my understanding.
Okay.
I could be wrong. It's happened in the past. We will have also a robot at the desk doing a little dance. Later on in the program. So a lot happening. Come for the crypto, stay for the robots.
Okay.
Yeah?
I'm just trying to imagine it in my head. I'm going to have to see this for myself.
You don't have to imagine it. You can see it IRL. Yeah. Well, there's a lot of events happening around Consensus too. So many side events happening. I know that we will be at the Jockey Club, which is super fun. Happy Valley. I don't know if you got to attend Happy Valley last year. That's where you can go and bet on the horse races. I think there's some synergies between the crypto community and the betting community, I'll call them.
For me, if it's getting wrecked, then I did not do well on any of my bets at Happy Valley Racecourse last year. I had fun.
Mm-hmm. That's what it's about. It's about having
fun.
Bonnie, one thing I wanted to ask you before we move on to the rest of our programming is, you speak to an audience that is based here in the region. What are some of the questions they have? How are they engaging with your content?
Oh, that's a very good question. So I think even among Chinese-speaking audience, it's so different. We got people from Taiwan, China, Hong Kong, Singapore, Malaysia. Everyone's sort of asking different questions because of the culture, because of the regulation. I'd say people in Taiwan mainly, retail investors, they're still trying to figure out what's happening with Bitcoin right now. And I think we'll be asking that question to a lot of experts today.
Yes, we will. All right, I am told to pause for a surprise.
A surprise?
I don't know what it is.
What could it be?
I wonder.
Oh my God. Happy birthday.
Oh my God.
I feel like I'm in a beauty pageant right now. Oh my God, thank you so much.
Thank you for being such an amazing inspiration.
Thank you. Okay. I don't want to get up because it's just going to mess everything up. But thank you guys, and thank you for the little song. I said this morning, but is not another group of people that I would want to spend my birthday with. This is so much fun. I love having the conversations that we get to have here at Consensus. So thank you so much. I feel like I need to give a speech now that I'm holding this, but I'm just going to... No speech. I just love you all. I love you guys. I love our audience that tunes into our programming all the time. I'm going to cradle this like a baby as we go to a break now. Get the breaking news that moves markets. Welcome back to CoinDesk Live from Consensus Hong Kong. It is now time to bring in our next guest, V. Povils, the CEO of World of Women, an NFT community focused on diversity and representation. V, thanks for being here.
Thank you guys for having me.
Of course. Now, okay, I'm going to be honest with you. The conversation this morning has been a lot about tokenization and institutional adoption, and the NFT conversation, at least to me, feels like one of the past. Talk to us.
Interesting.
Yeah.
Okay, I want to ask you questions now.
No, I am all in on NFTs. I really believe in the technology behind NFTs, but it's not something we talk about so much anymore, right?
Well, you talked about pudgy penguins before.
We did talk about pudgy penguins. That is true.
And I was one of the core people in the team that helped build pudgy penguins. So for me, it's
so there you go.
Great. Yeah.
And so I think what I've just said is actually indicative of how people are viewing the NFT space without actually thinking that they're maybe consuming IP, they're consuming culture that's being produced on blockchain, and maybe not even connecting it to NFTs anymore. And I don't know if that's a good or a bad thing, but maybe you can just talk to us a little bit about the evolution of World of Women and how you're looking at it.
Well, just to go back to what you were saying, I think that's a great point. I think if people consume anything that comes from Web3 without knowing it's from Web3, naming NFTs, I think we're doing a great job. I've always said Web3 has to disappear to become mainstream. And it's really what I believe in. It has to go in the back front. We can't force people to understand blockchain. We can't force people to understand what is a wallet or what is a token. People don't like to be forced to learn something. They don't want to learn, and they shouldn't have to. But if we can build products and companies and IPs that actually help us get that mainstream people without thinking about Web3, we're doing a good job. So as that on the World of Women, so World of Women is one of the legacy NFT projects, and it was very successful back in 21, 22, because it was the first NFT designed by a woman for women. So it was all about empowering women. I personally joined the company 7 months ago, so it's a brand new journey. As I mentioned before, I was with Pudgy, which was also an amazing journey, and you guys talk about it, so I did my work very well. I'm happy. I'm excited to do the same with World of Women right now.
How should we understand digital communities? Post-COVID, I think people crave this in-person interaction again. It's like a cool thing again. How has digital communities evolved?
Over time, I think COVID was a thing. And as you said, yeah, it reinforced that need for people to have social interactions. Yeah. And right now we see the rise of AI that really also accelerate that, that need for people, right? Because you don't know whether you're talking to a bot, you don't know whether you're talking to a human. And I think the more we're going to see that evolution of AI taking over, right, or being more and more prominent, humans will want to have more and more of this human interaction. And I think NFTs will play a big part in that, and we've seen it already through building those communities. And, we've talked a lot through 2022, 2023, early 2023. We're in this speculation phase for NFTs with traders buying and selling. I think this is now over. It's on the end tail of it, and we'll see more and more of communities building around shared values, belonging, and engagement. And this is because people want to feel like they have a voice, they have a role, they have a reason to stay in NFT beyond just the speculative aspect. So yeah, I think it will just grow, and this is just the natural future of the space.
What is that for World of Women? You talk about the voice, the role, right, the desire to be a part of this community. What does the World of Women community offer to women in the community, and how are you thinking about building that out? We were just talking about being at Pudgy Penguins. How are you looking to apply what you did at Pudgy Penguins to World of Women?
So, how long do you have? Because that's a loaded question. No, it's interesting because I feel like there are many lessons that I take away from Pudgy, but the main thing is I'm not going to apply everything that I've learned at Pudgy because there are different NFTs and different cases. We built Pudgy around an IP, around people falling in love with a character, with a world, with a story, right? And so that's very, very unique in a sense. What we're doing at World of Women is different. We're building around a mission, which is empowering women and bringing people together. So you won't build it the same way. Right now, we're very much focused on two main things. Everything that we're going to release, all products we build, is first around a social layer, because as we discussed before, it's all about bringing people together and making sure they get to interact with other humans and building around that emotional connection that they develop over time. And the second thing, which I think is very dear to me and exciting for the space, is every product we're going to build, it will be with a revenue share, which is exciting because that was one of the promises of NFTs. And nobody has been able to deliver on it because there was legal issues, it was very chaotic. But I think we've come to a time where I'm able to do that now, and I'm able to provide, upside to the growth and the success of our company, and as a way to engage even more people. And I think we will change the business model as we know it, even for Web2, by doing that.
If I strip away the financial incentive, give me, a brief reasoning why people would want to be a part of this community.
Are you saying for World of Women or just in general?
Anything, any communities.
Well, I think there are two things. I think there is the benefit of having upside to the growth of an NFT that is also a company, right? Like you see it very well with what we did at Pudgy, right? Now you get to participate in every product that they're launching and buy, toys and share that with your children. It's like a story that you get to share with other people. So that is one thing. There is the financial incentive. If you want to be part of a company and have upside, instead of buying stocks, now you can have an NFT and you can get a piece of revenue share. That's for the financial incentives. The other side is the social layer. And I think that's everything. And it's going to be more and more relevant in the future. And it's just about, feeling like you're part of something bigger than yourself and finding your people. And that's so important as humans, right? So yeah, I think those are the two main reasons for me where you should come and find your NFT, because this is going to be the future. And you want to have a family. Who doesn't want to have a family? So,
V, thanks so much for joining us at the desk, and good luck with your panel later.
Thank you so much, guys. Thank you.
That was V Povil, CEO of World of Women. We're going to take a quick break. When we come back, more from Consensus Hong Kong.
Full potential of your digital assets with Hex Trust, the leading digital asset financial institution, trusted by over 500 institutional clients worldwide, licensed across key jurisdictions. Hex Trust, the leader in digital asset solutions.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
Sam, where are we going?
We're going to Consensus.
What road are we taking?
Where we're going, we don't need roads.
Just Miami.
If you're just joining us now, this is CoinDesk Live, brought to you by Hex Trust. We are coming to you from Consensus Hong Kong with our next guest, founder and CEO of Consensus and co-founder of Ethereum, Joseph Lubin. Joe, how's it going?
Great. Thanks for having me.
Thanks for being here. Welcome to Consensus Hong Kong. I'm very excited to have you here. Just talk to us about what you've been up to, how you're experiencing the event so far.
So got here 3 days ago.
Okay.
Hong Kong feels to me a bit like it did, quite a lot like it did pre-COVID. I haven't been here in the last few years. I've been attending different events, interviews, lots of meetings, and this morning is the first time I've been walking the floor, and it's very, very TradFi, which is great, which is I think the theme that we at Consensus are experiencing in America. So we're interacting with and building with lots of financial institutions in addition to doing what we do normally, which is build out MetaMask and other products and essentially serve the real decentralized protocol ecosystem for retail.
I think I saw a photo of you on social media with Tom Lee.
Yep.
We shared it on the air earlier
It was
today.
in New York City, actually.
Oh, was that in New York?
We saw each other at JFK on the way here.
Oh, wow.
We're actually on the same flight, which is probably not something that should be allowed because...
Yeah, the two pillars of Ethereum on the same flight.
Exactly.
Seems like a risk.
He's doing such an amazing job, and I'm associated with Ethereum also, and if there was anything untoward that happened, that would be bad.
Well, I'm glad that you both made it to Hong Kong safely. You were here.
Well rested, too.
Well rested and safe. That's all we can hope for. I know you're going to be speaking on stage later today on how DeFi will become Fi. And I think that builds off of a little bit of what you were just talking to us about. Give us a little bit of preview about the insights you're going to share on stage.
Sure. So what we do currently is mostly focused on MetaMask. And MetaMask started life as what I like to think of as a digital authority tool, essentially enabling you to sign transactions and messages on Ethereum and other blockchain systems. It evolved to becoming a wallet, and that's how most people think about MetaMask, a wallet, a fully featured portfolio manager. But over the last year, it's rapidly become a fully featured financial services platform, a new kind of neobank, but it's a different kind of neobank than most old neobanks. This is the kind of neobank that you personally own and control, a neobank that you can put in your wallet on your phone or on your laptop. And so we've been shipping so many features in addition to on top of the wallet that everybody's used to. So we've been shipping hyper liquid perps and equity perps and polymarket prediction markets, and we like to aggregate, so we'll add more of these kinds of structures to the perp space and the prediction market space. We recently announced with Ondo Finance that we're providing access to tokenized equities. So Ondo's way out in front of everybody, and that's going to bring a lot of better access, not just to people outside of the U.S., but just different ways of interacting with equities, like instant settlement and being able to use the tokens as collateral in DeFi systems. So it's a real revelation. We've got a debit card, we've got a stable coin, we have a rewards program. Maybe most importantly, our rewards program has had some early success in incentivizing people to use the different features on MetaMask, but we also have massive distribution. We're essentially over 100 million users on an annual basis, and so protocols, DeFi projects, etc., are partnering with MetaMask, integrating with MetaMask, and giving us tokens that we can share through our rewards platform to our users to drive activity.
Earlier you talk about, this feels very TradFi. If you could go back to when you first started, is this what you would have imagined?
Yeah, so I was very optimistic. I got into Bitcoin very early, and Bitcoin had a lot of cataclysmic existential things happen to it, and it was anti-fragile. Ethereum is anti-fragile, so it just kept cranking. And after a few of those, I recognized that it was so anti-fragile that it was going to survive and thrive and become long-term successful. And so when I got into Ethereum about a month after Vitalik wrote the white paper describing the project, I was already convinced that decentralized protocols, this new form of trust, decentralized trust, was such a powerful construct that it was going to win, that the world was going to recognize that a decentralized trust foundation would enable decentralized finance, and that we would be able to re-architect the systems of the world, essentially, on sounder financial and trust foundations. And so here we are. We now have TradFi onboarding itself to DeFi. And all at the same time that our ecosystem continues to build, the Ethereum ecosystem, the real degens, the real retail projects and users. Maybe some of the speculators are a little bit stressed right now, but the real builders, the real users are benefiting from DeFi, and we're looking to share DeFi with TradFi.
Earlier at the desk, we were talking about quantum with Charles Hoskinson and some of the worry that the Bitcoin community has about quantum. I know Ethereum is now working on becoming quantum resistant. Do you think that is going to, how do you think that's going to position Ethereum as we move forward and we move closer to this larger quantum threat or the quantum risks?
Quantum safety has been on Ethereum's roadmap for a long time, and now there is an actual group inside the Ethereum Foundation to really make that concrete and to project the things that are being done. Bitcoin has a potentially existential problem. It's reasonable to worry about that because we don't know how fast Q-Day will happen when encryption can be challenged by quantum computers. I personally think it's a long way off, but I also think that AI is magic and that AI is going to supercharge many different scientific and technological pursuits, so it's prudent to get started. Ethereum's going to be in great shape very soon, and the rest of the world is going to it's going to be like a Y2K situation. I think it's going to be a dud. but Ethereum is extremely well positioned at this point.
All right, Joe, thank you so much for joining us at the desk. Unfortunately, we've run out of time. I wish we had more time with you, but I know you're going to be on stage later on today. We're going to head on over to the main stage now, where CDI is making an announcement.
Multi-token indices, the CoinDesk 5 and the CoinDesk 20. We are incredibly excited about this, Jen.
Yeah, and to be working with CoinDesk is so special. ICE has been in the markets with crypto a lot longer than a lot of people have realized. Back in 2018, we started Backed, and we started to look at cash-settled futures contracts. We even did a physically delivered Bitcoin contract, but the market really wasn't ready for it. So we sort of pulled back, took our time, started talking to firms like CoinDesk, and CoinDesk has been in this market since 2014. And even back to 2020, ICE was talking to CoinDesk about doing different futures contracts based on their indices. Our relationship between ICE and Bullish has a long-standing history. So Bullish, CoinDesk is owned by Bullish. Just to put this all in perspective, Tom Farley, who is the CEO of Bullish, when I first met him, he was in the role that I am in now as president of ICE Futures US. He then became the president of the New York Stock Exchange, moved on to other things, and became the CEO of Bullish. Working together with CoinDesk, we are two companies that are synonymous to compliant innovation and to doing new and exciting activities. And this is like doing these new futures contracts. And the idea of having multi-token futures contracts on crypto has never been done before.
So we both have institutional quality attitudes towards innovation, and we're answering the call that we have heard from the market. The market is asking for futures on multi-token indices, and we couldn't possibly have a better partner than doing this with ICE. Now, our index business holds itself to the utmost standard on governance and the utmost standard of how we're going to run our business. So we're FCA regulated, we're BMR compliant. That means we have regulatory standards that are the same as S&P or MSCI or FTSE. So we're holding ourselves to the highest level of governance and obviously partnering with an institutional quality player like ICE to make sure that we're bringing these products to market in the most compliant fashion.
And really, with the changes in the US, with regards to regulatory framework around crypto, the change in the administration is putting in with the Genius Act and looking forward to the Clarity Act has really brought these institutions to come forward and start asking us. It's like a call to arms. We have had clients, or actually we have a number of our product heads, they go out and they talk to the different asset managers or talking to different providers who are asking, great, you guys have index contracts on MSCI and other FTSE products, but what are you doing in the crypto space? How ICE works is we work with what our market clients want and what they're asking for from us, and they're asking for these types of contracts. Some of the most exciting, as we've said, is the CoinDesk 5, and it is linked to an ETF that is listed on Grayscale. We have the CoinDesk 20, and there are two ETFs. ProShares listed one 3 or 4 days ago in New York, and then ARK Investments will be listing one in 2 or 3 months, settled off of our futures contract. And then the big exciting one also is our BNB contract, which is the first time a regulated exchange in the US has launched a BNB futures contract.
It's really incredible. We think about building our indices to create ecosystems of products and liquidity ecosystems that allow market participants to be agnostic about the product that they're using to gain that particular exposure. Everyone talks about the AUM after the Bitcoin ETF was launched. Largely, some of the growth that came in from institutional players was to trade that basis trade. So they buy the ETF and they sell the future. That opportunity is going to now exist on the CoinDesk 5 and the CoinDesk 20 exposure, utilizing the ETFs that are in market and also the futures that we have recently listed. Now, I think we're early, right? Right now, we're early in this event, and we're early in launching multi-token futures. But what you're going to hear on this stage and the other stages today and tomorrow is a convergence of crypto with TradFi. This is no different. But we're focusing on ensuring that we're building products with the highest level of governance, the highest level of transparency, so that not only the crypto players are going to be comfortable gaining that exposure, but we're also going to be very comfortable ensuring that we are ingratiating ourselves and building products that are going to be well received by the traditional finance community as well. All of the firms that are utilizing ETFs and futures in the traditional markets have focused on this opportunity and have shown great interest in trading these products. So we're super excited about it, Jen.
And this is why CoinDesk and ICE work so well together. The idea that we believe in a strong benchmark when we build contracts, and that we believe in strong infrastructure. ICE has always been built on a very simple idea. Is that infrastructure, that we build our infrastructure for our exchanges, it's got to be neutral, it's got to be trusted, and it's got to work in every market environment. So regardless whether you have volatility or not, if you have huge changes in the market, we stay up, nothing goes down. Clients can come in, they can manage their risk. They can trade with capital, so they're capital efficient. The prices are transparency, and there's an easy way to get price discovery. There's no other exchange like it.
So the regulatory infrastructure that we have in the US market allows us to be able to launch these products with an incredibly high degree of confidence, bring institutional players to bear. We've got ETFs that are based on our indices. We have futures that are based on our indices. You know, further down the line, we're going to see options and other financial products. And so we're building that liquidity ecosystem around our indices in a compliant way with the highest governance and with the opportunity to really build this market going forward.
And you know, David, the one thing we haven't talked about yet is this idea. We talked a little bit about compliant innovation. What we're looking at for a contract that we're launching in April is a CDOR contract, which is a CoinDesk overnight rate. They've created a number of contracts of looking at stablecoins and trying to figure out how do you manage your interest rate risk. All mature markets have a way to manage your rate risk. You don't have that in the crypto space at the moment. ICE is going to launch the CDOR contract on the USDC. And so what that is the CDOR looks at the average borrowing and lending network. It takes that interest rate, which is compounded second by second. CoinDesk overnight rate is taken by CoinDesk. They figure out the index for it. We create a monthly contract. So suddenly you have a SOFR for USDC, which has never been done before. And this is one of first of many.
I know. It's a tremendous amount of innovation between our firms. It's an institutional partner. We have a deep history together. We're thrilled to launch these futures. Look for the BNB future. Look for the CoinDesk 5 future. Look for the CoinDesk 20 future. Our time is up here, but if you walk right down that aisle and look on the right, come visit us at the CoinDesk Indices booth, and we'd be happy to chat more. Thank you so much. Enjoy the conference.
Thank you.
If you're just tuning in, this is CoinDesk Live coming to you from Consensus Hong Kong. The buzz here on the showroom floor is being amplified on social media. Let's take a look at what our attendees are sharing. All right, this tweet here we have looking at the Pudgy Penguins hike. We were just talking, Bonnie, about the communities that are built around IP, the communities showing up here at Consensus Hong Kong. And here we have the Pudgy Penguins community getting together to see the city of Hong Kong, checking out Hong Kong's skyline and harbor. Super awesome. All right, now we're going over to one of the stages. Seoul, drawing a full house for this morning's session. I'm going to be on stage tomorrow talking about Seoul. Bonnie,
I'll be watching you.
Yeah, you're going to be watching me? All right. At our last tweet, we have Anna behind the stage, so backstage on a panel today talking about AI verifiability. AI is a big theme here.
Is it different? Because Hong Kong loves this tech and AI. Does it feel different here, or?
I think the conversation has kind of evolved. You know, when we're talking about crypto, AI has really entered the chat. It provides a real use case for crypto. Bonnie, I know you weren't here at the desk earlier, but Charles Hoskinson was saying something I hear a lot of people in the industry say. It's, you know, AI agents are going to be the ones interacting with crypto in the future. We're going to be maybe using products that are built on top of the technology, but a lot of the financialization that we talk about, maybe AI agents are going to be interacting with it. So I think the two worlds are just coming closer and closer together.
And maybe we'll retire early.
Maybe we'll retire early. That is the dream. All right, let's keep this show going. We're going to get to our next guest now. Ella Zhang joins us from YZ Labs. Hello.
Hi, everyone.
Thank you so much for joining us here. We were just talking about being on stage. You have a fireside tomorrow. Talk to us about what you hope to tell the community tomorrow. What kind of insights are you going to reveal in that fireside?
First of all, thanks for having me here. So what I'm excited about is really to meet so many builders here. Consensus really, the conference bring all the builders, investors together, and we learn a lot of new ideas, new innovations are coming on the way, just to learn from each other.
What are some of the most exciting things you've seen recently that people are building?
Yeah, so RWA definitely see a lot of TradFi people come here in Consensus, want to tokenize the valuable assets, and everybody talk about the mechanism, the brokerage, what's the distribution channel, and payments is definitely a big next wave because Genius Act obviously push stablecoin to mainstream, and we see different countries they are issuing their currency-backed stablecoin. And the foreign exchanges technologies are bring up in different conversations. So those are the new infrastructure we see gonna be the next focus of the building. And also application-wise, a lot of people still very hot topic into prediction markets, how to make the prediction markets more viable through those low use cases markets instead of like sports or the political voting, everything. And another thing we see is Oracle obviously become the most important infra right now, still kind of lacking, supporting the new wave of the financial system. Those are things very exciting.
Well, if I were to sum up everything you said, it really sounds like infrastructure, yes. Right? If you were to think about your thesis heading deeper into 2026, is it really focused around infrastructure? Are you looking for builders and startups that are focused on building the pipes that are going to help TradFi meet DeFi?
I would say that's both, right? Infrastructure is something necessary and we have to make it strong. Compared to TradFi, crypto today is still tiny, probably 1 to 2% of the entire market. Why is that? Because the trust is still lacking there. The credibility of the traditional financial system experienced over 100 years evolving to today. And there's still a lot of security, custody, regulation, compliance need to become a complete piece in order to serve the future financial market. So infrastructure is always something very important. Wallets, how to make it secure. There's still several hacks happened last year. How do we make it TradFi people really trust crypto? Versus the application-wise is really where to bring in the real users at the mass adoption. So we actually kind of very interested in backing the founders from both sides.
They're backing a lot of founders, and I assume as you walk, at this event, people come up to you and try to pitch you their stuff. What are some common mistakes you see people make when they try to approach you? What's like a big no-no?
Yeah. I think one thing that's very common is everyone think about token. So at Easy Labs, we actually advise founders don't issue token when you haven't find the product market fit yet. Issuing token before finding the real product market fit really is a liability and distraction for the whole team. So focus on building, find the product market fit. At some point, when the token economics will be another driver for your community, that's the time. So this is one thing. And also another thing, still a lot of people, founders still aim for the high valuation, which we see is not something very suitable in crypto because given the culture, the spirit of fair launch and have more people community participation. So having strike for the high valuation as early point is really a common mistake we see today. That's two things, yeah.
You know, there was a time when I saw founders raising money and then blowing that money really quickly on things that didn't really help them bring their product to market. When you see founders who are raising money, how do you advise them to best spend that capital so that they have enough runway to experiment and to bring the right product to market?
Yeah, I think I'm founder myself too. I think a common mistake founder made is not to fire fast enough and have a very big team which bring up your the burn of the company. So really think about what are the necessary function and team members are necessary for the early products to go to market, and not building a luxury office and a big team at the early stage. So make your the capital efficiency. Then really don't need to raise so much money and dilute yourself and dilute the community as well too early to the limited amount of the capitalist, right? So how to use a limited amount of capital and resources to reach more adoption is what we help to advise founders and to think of. That actually will become more powerful. For example, Binance didn't raise any money until it became the biggest exchange. And so far, it still have very limited shareholders like UAE. They come to back really after the business become another mature stage. So we believe in the crypto, the community-driven. The users and community will tell you what are the real demand. Leverage that to go to market. Don't spend too much money on that.
When you look at the venture landscape from the East and the West, do you see a difference there? How people approach different things, you know, from different angles. How would you, you know, explain that to people?
Yeah, very interesting question. I think US is definitely the center of the capital, talents. So we actually see founders are more focused on domestic markets more. That's a natural advantage, unfair advantage they have. Versus the Eastern founders, they are forced to be international from day one. They are navigating the different countries' policies from day one to talk to understand different frontier markets. That's what we see. The mindset, the focus. Also, Eastern markets, the user behavior subscription habit was not so mature. So how to cultivate subscription like the Western markets, like US market, is the founders are all thinking of. And obviously they want to target the US market. So there's still kind of a lot of competition happening. And US capital, because of the political, the geopolitical issues going on, I think US markets are more concentrated in the US founders versus the global capital are kind of supporting the Eastern founders. This is what we're seeing. We hope really geopolitical issue really won't be an issue to stop innovations happen, because that's eventually we want to push the innovations to serve the whole humanity.
That's why we're all here.
Yeah.
All right, Ella, we do got to wrap, but I want to ask you one question very quickly. We talked about founder mistakes, but if you had to say one quality you look for in a founder, what is that?
Long-term thinking and have the true driver to solve the problem. It's long. It's a long.
No, that was great. You're looking for long-term thinkers who really know how to solve problems and dig deep into challenges that are facing people.
And have the product founder fit.
Exactly. Ella, thank you so much. Thanks for being at Consensus Hong Kong, and we'll see you around.
Thank you.
Thank you.
Thank you for having me.
That was Easy Labs head Ella Zhang.
The breaking news that moves markets right to your phone.
Track your favorite token instantly and dive deep into the latest data. Download the CoinDesk app today. Back to CoinDesk Live at Consensus Hong Kong. If you look at the intersection of culture, entertainment, and Web3, one name consistently appears. He's the co-founder of 88 Rising, an early investor in TikTok and Coinbase, and a serial entrepreneur who has raised over $1 billion in capital across the globe. Now he's teamed up with music legend Wyclef Jean to launch OpenWave, a platform aiming to put the power and the payouts back into the hands of creators. Joining us now to discuss the future of the superfan economy is the co-founder and CEO of OpenWave, Jason Ma. Hello.
Thanks for having me.
Thanks for being here.
Yeah.
All right. There's a lot to unpack here. But the first thing I want to talk about is this joint venture that you formed with Loud House. Talk to us about what that is. Lay a foundation here.
Very exciting. We just announced it during Grammy Week. So Loud House is a artist-first social commerce platform. It's actually invested by a Universal Music Group. And so what they're doing is powering, I would say, like the Disney businesses around the biggest artists around the world, music artists specifically. What we're doing is supplying the supply chain. So we're actually going to tokenize, and we're actually going to give them supply chain to build premium, what I call on-demand products. And so basically imagine high-level LA apparel type of hoodies, Yeezy level apparel. Could be toys like your own Labubu, but your own Post Malone version, but basically powered by OpenWave. So we're a social commerce platform that does supply chain for a variety of products, and we ship around the world.
Now, you were just at the Grammys. So you got to talk to us a little bit about the Grammys. You said this launched there. I know that you had an event. How are artists talking about tokenization? How are they receiving it? Is it something that they finally understand the benefits of, or is it still something that the artists on the fringe are participating in?
I think that conversation is a very 2021 conversation. I think artists honestly just have a very negative experience with NFTs, just the backlash of how everything went in 21, 22, and off of FTX and all these other companies that kind of went downhill. And I think that left a bad stench in a lot of these artists' mouths, just to say frankly, like Katy Perry or Tom Brady that was connected with FTX. I'll just be straight and honest and straight to the point. But I think they don't care about tokenization as much as they care about fandom, right? And so I use this analogy. And I spoke at this at a Warner Music CEO conference a few years ago when I was trying to explain the idea of a digital identity or tokenization, or what we call non-fungible token NFTs. And I said, basically, imagine if you met The Weeknd and you're a fan of The Weeknd before he was The Weeknd, and his name was Weekday. And he didn't have 10 million followers. He wasn't performing Super Bowl. He only had 10,000 followers. I know so many A&Rs. Those are executives go and look for talent. And I have so many that through the years told me, Jason, I saw The Weeknd when he was in a warehouse with like 500 people in Toronto in this underground basement. I'm like, how do I know you're for sure that you really were there? How can I actually authenticate that? So imagine if you're actually a Weekday fan on OpenWave and you actually get a Weekday badge because you're Weekday fan subscribing number 1, your Weekday fan number 10, number 12, number 55, number 111. And when he goes from 10,000 to 10 million, 100 million, and performing Super Bowl, you still have that badge of honor, that badge of membership that gets you access to early tickets, early merchandise access, early exclusive content, front row seats backstage, at the tour, behind the Super Bowl, at the after party. So that is the power of a non-fungible token. It's really a receipt. It's an authentication that says, hey, I really was there. I really was at day one. I was there. I was number 55 before this artist became The Weeknd. I knew him when he was The Weekday. and I got a badge to prove it. That proof doesn't need to be tokenization or NFT. Artists don't care about that verbiage. What they want is use case, what they want is value, and what they want is to bring value to the community that supports them, which is what I call the true fans or the super fans. And OpenWave really is a 1% platform. What I mean by that is you only need 1% of your true fans to support you to actually make a living. Because the lie is, in social media, from 2012 till now, since Instagram came and now TikTok, is, oh, get bigger and you'll get more money. Bigger's better. If I get 1 million followers on social, I'll get 1 million monthly listeners on Spotify, I'll make money. That's not the truth. That's not the case. You can have 1 million followers on Instagram and still not pay the rent. I know a lot of influencers and creators that do that. But if you have 1,000 true fans, give me $10 a month on OpenWave, and they subscribe and they can prove that and authenticate that through a smart contract, that's value, right? That is actual value. You're now making 120 grand a year as an independent artist with $10 a month of subscription with 100 or 1,000 full fans, true fans, and that's what I'm talking about.
You're talking about the super fan concept. If I were to start out as a content creator today, how would you suggest me to approach this career differently versus if I want to reach mass audience?
It's a great question. I think at the end of the day, 2026, we're going to see AGI, automated AI, automation continue to explode. But how do you actually know what's real and what's not real? So literally, I remember just watching the Minneapolis, madness with ICE right now, and all these videos coming up in my Instagram and TikTok, and I found out 90% of them were fake, right? So how do you actually authenticate that? That's where blockchain comes in. That's where Web3 comes in. So AI is for automation, blockchain is for authentication, and I think OpenWave, what we built is a patent that actually leverages both. So you can actually come in and say, as an artist, okay, if bigger's not better and smaller is more impactful, how do I actually reach my first 100 true fans? How do I reach my first 1,000 true fans? I used to be a missionary in another life. If you had a church of 1,000 members, you're a rock star. Okay, you had a church of 10,000, you're TD Jakes. Okay, at this point, right? You're what's that guy's name? Joel Osteen. Okay, right? You're a literal mega church celebrity rock star. If you got 1,000 true fans, and I meet these artists all the time, oh, and I got 10,000 followers, only got 50,000. Yo, you got 10,000 potential real customers. Bring them value. How do you bring them value? Okay, I'm gonna give you access to tickets first. I'm gonna give you front row seats. I'm gonna give you access to my album 10 days, 100 days before I drop it on Spotify on OpenWave. I'm gonna give you access to this limited drop with only 100 of these hoodies signed by me with exclusive vinyl, and you're gonna get it first, right? And you're gonna get it in my community chat. So we literally built Discord, Patreon, OnlyFans, Shopify, Printify, and literally Spotify in one platform. It's the everything platform for any artist. And so I'm very excited about launching this with Wyclef. If you guys saw him perform at the Grammys with Miss Lauryn Hill, that was kind of fire at the end. We're doing this because we are lovers of music, we are fans of music, and we're sick and tired of seeing fans and artists suffer, right? Right now, it takes it takes literally 3 million streams, okay? 3 million streams for an artist, okay, to even make $1,000 on Spotify. So last year on Spotify, less than 0.06% made $10,000. We're talking about artists are not making money on streaming. So how are they making money? Spotify's not paying them. Daniel Elk's building, drone nuclear missile companies. And then you have artists that are bringing the value to Spotify, bringing value to these DSPs that are actually not getting paid. So how do they get paid? Through ticketing, doing shows, physical merchandise, and now digital merchandise exclusive content. OpenWave built a platform leveraging blockchain technology and generative AI technology to give the artists a full label in their pocket right here at the palm of their hands.
All right, Jason, we do got to go, but I want to ask you one quick follow-up. I think a big misconception around this conversation is people are thinking about the big artists. They're like, why are the Taylor Swifts and Drakes not participating in this? But what you're saying is it really is the next iteration of the music business. This is for the artists that are coming up. This is for the artists that are building their audience, and it's going to inform how the music industry continues to grow.
Absolutely. So I think in the future, 99% of artists will not need a major label, okay? The major labels will still and always exist. Why? Because there's always going to be a Lady Gaga or Bruno Mars, right? Or a chaperone that will need that major label marketing dollars machine, and to get them at the Grammys and get them on the Jimmy Fallon show and get them that Spotify billboard, right? But the majority of artists, you have all the technology. You have all the software, you have all the distribution. Distribution is a commodity now. Everyone can just go on DistroKid, pay $25 a month and get their music on Spotify and iTunes, right? So now the question is, what are the tools that we can give to an artist to actually build their community so that they can make a living? And that's what OpenWave is here for.
All right, Jason, we got to wrap it there and head on over to the main stage. Thank you so much for joining us at the desk. It was a pleasure.
You two are pros.
Thank you. All right, we are going to head on over to the main stage and hear a keynote by Financial Secretary Paul Chan.
Finance continues to broaden in both scope and sophistication. A few trends are more prominent. The first is tokenization of RWAs. In a growing number of markets, tokenization initiatives are moving from proof of concept to real-world deployment, supported by more institutional adoption. Government bonds, money market funds, and other more traditional financial instruments are increasingly being issued on Miller on-chain, using digital ledgers to enhance settlement efficiency, enable fractional ownership, and unlock liquidity in assets that have traditionally been less liquid. Hong Kong is one of the pioneers in this space. The Hong Kong SAR government was the first in the world to issue tokenized government green bonds. Last year, we built on this foundation by issuing the world's largest digital green bonds with a multi-currency offering of 10 billion Hong Kong dollar. Meanwhile, financial institutions are becoming more receptive to digital assets. By the end of last year, banks in Hong Kong held over 14 billion Hong Kong dollar in digital assets under custody, a year-on-year increase of about 180%. Banks have also begun offering tokenized deposit services, with the total value of such deposits reaching 29 billion Hong Kong dollar by the end of last year. The second trend is a related and evolving one, that is the interaction between TradFi and DeFi. Traditional institutions are now importing DeFi mechanisms into their ownership architectures, such as automated market making, programmable liquidity pools, and the use of on-chain collateral to support more efficient trading, funding, and settlement. At the same time, DeFi is coming under growing regulatory and supervisory pressure in multiple jurisdictions, particularly in relation to anti-money laundering, investor protection, and broader financial stability. There have been growing calls for DeFi to be brought under existing or emerging digital asset regulatory frameworks. The third trend is the growing intersection between AI and digital assets. AI systems are being designed to interact with tokenized money and smart contracts, enabling the autonomous execution of certain transactions and settlement. At the same time, AI tools are making digital asset markets more intelligent, efficient, and data-driven. As AI agents become capable of making and executing decisions independently, we may begin to see the early forms of what some call the machine economy, where AI agents can hold and transfer digital assets pay for services, and transact with one another on-chain. While this shift could deliver substantial efficiency gains, it also raises important questions around AI governance, accountability, and cyber security. Against this backdrop of rapid global experimentation, what are we doing in Hong Kong? We are charting our course, leveraging our unique strengths as an IFC, International Financial Center, to stay at the forefront of innovation and keep pace with emerging developments. A few principles are guiding our strategy. First, under the one country, two systems framework, Hong Kong is free to explore financial innovation, including, of course, in digital assets. We stand out as a market with consistent, predictable, forward-looking policies and a balanced and trusted regulatory framework. We welcome Web3 innovators and institutions from around the world to develop and scale their businesses here. At the same time, we recognize that innovation often moves faster than regulation, potentially creating gaps and new risks. We are therefore carefully balancing the promotion of innovation with the need for sound risk management. Our objective is to embrace new technologies while safeguarding investors, consumers, and the overall financial stability. The principle of same activity, same risk, same regulation continues to underpin the design of our regulatory framework. Second, we see Web3, blockchain technology, and AI as powerful enablers of the real economy rather than ends in themselves. Our policy focus is therefore on how these technologies can be applied to enhance efficiency, lower costs, and support concrete real-world use cases. Ultimately, our aim is to make financial services more inclusive and accessible, while addressing the long-standing pain points in transactions and market operations. Third, we are committed to pro-innovation regulation. Our regulators operate with a dual mandate. They not only exercise prudent supervision, but also actively facilitate market and product development through mechanisms such as regulatory sandboxes. We support experimentation and in some cases co-create solutions in close collaboration with innovators and industry participants. Ladies and gentlemen, with these guidelines in mind, we are pressing ahead to advance Web3 development in Hong Kong. Let me highlight some of our latest initiatives. First, on regulation, we continue to enhance Hong Kong's regulatory framework for digital assets, including the launch of a regulatory regime for stablecoin issuers in August last year. We see stablecoin as a practical tool for addressing the pain points in the real economy, particularly in payment and settlements. In giving out licenses, we ensure that licensees have real-world use cases, a credible and sustainable business model, as well as strong regulatory compliance capabilities. Our strategy is moving forward fast, step by step. Therefore, we plan to issue only a small number of stablecoin issuer licenses in the first batch in March this year, but more will follow. Meanwhile, we are also finalizing the details of a new licensing regime for digital asset dealers and custodian service providers, with the aim of introducing the legislation this summer. Together with the framework already in place, this will ensure that our regulatory regime comprehensively covers the key nodes of the digital asset ecosystem. Second, on product innovation and development, we will regularize the issuance of tokenized green bonds. At the same time, we encourage market innovation and nurture the broader ecosystem. For example, building on the Project Ensemble Sandbox, Ensemble TX was launched by the Hong Kong MA in November last year. It is a new pilot phase that enables faster, more transparent, and more efficient settlement of real value tokenized transactions. Looking ahead, as the convergence of AI and blockchain continues to accelerate, the government and our regulators will work with the industry to foster concrete high-impact use cases while ensuring that emerging risks are properly identified, monitored, and managed. Ladies and gentlemen, before I close, let me leave you with this message. The Hong Kong SA government and our financial regulators fully recognize and are committed to keeping pace with rapid technological change and building a vibrant digital asset ecosystem here in Hong Kong. We welcome global innovators like you to join us on this journey. In less than a week, we will celebrate the Chinese New Year. This year is the year of the horse, which symbolizes agility, stamina, and strength. May I wish you all a prosperous and energetic year ahead. And for those who have traveled from afar, I hope you will take some time to enjoy the festive spirit and the unique charm of Hong Kong. My sincere thanks once again to CoinDesk for hosting this remarkable event in Hong Kong. May this event inspire more fresh ideas and lasting partnerships. Thank you very much.
Hello and welcome back. That was Financial Secretary Paul Chan. If you're just joining us, welcome back to CoinDesk Live. Coming to you from Consensus Hong Kong, APAC has emerged as one of the most active regions for institutional experimentation with tokenization, on-chain settlements, and regulated digital assets. Joining us now for more is Stellar Development Foundation Chief Business Officer Raja Chakravorty and MarketNode CEO Rehan Ahmed. Hello to you both.
Hello. Hey, Jen. Great to see you.
Great for you both to be here. The vibes at Consensus are vibing. I know the two of you were just on stage. Give us a little preview for our audience at home that weren't able to watch. What were some of the insights you walked away with?
Yeah, I think from my end, we had the opportunity to talk about APAC, talk about tokenization, and really start to focus on this concept of distribution, which is really key. I think over the past year, what we've seen is this real acceleration in terms of how many tokenized products are now available on chain. But now, over the course of the next year, what we're really going to be focusing on is this idea of how do you distribute them? Where are the investors? How do you build really unique profiles that are going to be really tangible for investors to come in? And I'm really excited to see that move at scale. And I think in particular, APAC is a region where we're going to see a lot of that growth.
Rehan, how are you looking at the APAC region?
Sure. So let's introduce APAC to your viewers who may not be watching from the APAC, right? So I'm sure you know about the population demographics, but some of our partner research has shown by 2030, we're expecting 7 million millionaires in the region. 60% of the world's youth. is in the region. 3,300 fund managers that are between Singapore and Hong Kong, and between them, roughly 10 trillion plus in assets, right? So the opportunity we see, we were actually with one of the large global fund managers on stage, and it was a great nexus of infrastructure, network, asset originators, looking to tie in this demographic to, frankly, the future of wealth distribution, right? So that was one big theme that came out. What are some of the Asia demographics that make it very natural, not just for experimentation, but commercialization, right? And the next learning for me was we always felt that tokenized real-world assets would move beyond money market funds, simple bonds, into more complex products. And if you think about the wealth portfolio for a typical high net worth individual in Asia, on-chain assets should start mirroring that, right? So we're really excited in 2026 to work with partners like Stellar and see how we can actually take product diversity to the next level.
I think those stats you shared were really interesting, Raja. I want to build on that a little bit with you. You know, we often, at least at CoinDesk, we're based in New York. We focus a lot on what's going on in North America, in the news we cover, and the conversations we're having. Of course, the administration in the U.S. wants to make the U.S. the crypto capital of the world. But when I hear stats like that, it really sounds like all of the pieces are in place in this part of the world for real experimentation when it comes to both institutional adoption and even on the retail side.
I definitely think that Asia Pacific is really well poised to do it. I think one of the big growth drivers we saw over the last year was this tokenization of US Treasuries. And so we saw an 80% growth last year in that asset class. And I think we exceeded about $7.4 billion on chain. Now we expect that to grow to 20 billion plus over the course of the next year. But in Asia Pacific, there's this whole host of incremental opportunities that are happening as well. What we're starting to see with a lot of institutions out here is this real view that tokenization can help create incremental opportunities on the distribution side. So one of the conversations that Rayon and I were having was, hey, look, we've seen some growth in what I would almost describe as vanilla assets. Certainly Franklin Templeton is a great example of a partner that is built and I think scaled well on the Stellar network with almost $1 billion worth of tokenized treasuries. And now the question is, well, what else is next? So there's now opportunities to start thinking about structured products. And this is an area where we've seen a lot of potential opportunity. You're seeing structured products like AAA tranches of CLOs coming on-chain, and they're DeFi enabled. And what you're able to do with that is able to take those, put them in a protocol, perhaps actually isolate new yield profiles, which starts to attract a different investor base. And that investor base can start to curate a portfolio that is a lot better designed for what type of return that they want. So that's really exciting. The other thing that is even more exciting in my mind, though, is this efficiency layer. And that's something that we're seeing is having a lot of attachment. So if you look at kind of traditional finance, people are looking at like a T+2 settlement timeline. Well, now you can actually move from T+2 to about T+5 seconds. And that's incredibly exciting from an efficiency layer. And so you're seeing this opportunity for both growth in terms of incremental value, which drives incremental revenue, but also this efficiency layer. And so you're increasing the value dramatically. And we're really excited to see APAC really take off from that area.
I want to hear a little bit from you on that settlement speed. Is the infrastructure ready for TradFi assets to come on chain en masse and settle at that speed? Or is there maybe still some development that needs to be done?
I think the infrastructure is ready. I think one of the pieces that we think about is this idea that a network, if you're going to actually be institutional grade, it really needs to have institutional grade capabilities. It needs to have institutional grade uptime. With the Stellar Development Foundation, one of our core focus areas is how do we ensure that the Stellar network has that? And I think we're really excited to talk about our 4 to 5 nines of uptime, which is critically important for financial institutions as they come on board. When you couple that with the settlement speed basically being sub-second finality and kind of 5-second block times, you're actually allowing that to happen at scale. And then of course there's the cost of infrastructure where the cost is down to about 0.005 cents per transaction. And so you combine all of these things together, and that is institutional grade. And so, yes, without a doubt, it is ready to scale. It has scaled. There's multiple examples of it. And I think this is the year that we see the investors come in because they've now seen that is demonstrated scale.
I'll kick this question, Rehan, to you next. You know, Raja was talking about starting with vanilla assets and moving into maybe some of the more exciting ones that the crypto ecosystem has to offer. What are institutions asking for? How are they looking to grow? And if we look at where we sit today, is current market volatility making any of them take pause?
Sure. So the way I'd look at on-chain assets is, if you think to yourself, the starting point is, how do I bring a typical Asian investor's portfolio online? What should that look like? Part of it will be your liquidity items, your money market funds. Then you start graduating to bond funds. Almost everyone in Hong Kong and Singapore owns a structured product. You can't be a true wealth investor without that. And then you have commodities. And then after that, you have, for example, private debt. And you must have real estate in Asia, right? So when I'm thinking about asset manufacturers, I think they're looking at the demographic change in Asia and thinking the same representation of assets that I bring to the traditional world, how do I bring it to the on-chain world and allow a bit more composability between them, right? So I think that's a demand from the actual asset originators. If you are someone who's consuming the asset, you may look at yourself and say, you know what, all my assets sit in a wallet. I want to have my traditional assets in a wallet as well, right? So I think that's the question, which is, how do you have an infrastructure that hopefully allows assets to come on and scale, and from a distribution standpoint, allow the holder to have their eyeballs on a single wallet and see everything. And hopefully that's something MarketNode, that's exactly what we do as infra, working at partners like Stellar. Hopefully that's something we enable for Asia in 26.
And Raja, just before we go, what do you expect to see as we head deeper into 2026? What do you think is going to change for institutions this year?
I think it is really moving from creating an asset to distributing it at scale. So I am incredibly bullish of that opportunity. So really excited for that, and also really excited to wish you a happy birthday.
Thank you so much, Raja. I'm having the best birthday here at the desk. Everyone wishing me a very happy birthday. If you are just tuning in, I've already gotten balloons and flowers. And I will say, apparently balloons, we're not allowed to have balloons in the building. So some people risked some stuff for me. Anyways, moving right along, Raja, Rehan, thanks so much for joining us at the desk. Thanks for being at Consensus Hong Kong, and I'm sure we'll see you later.
Thanks, John.
Happy birthday. Thank you.
All right, we're going to take a quick break. When we come back, Bonnie Blockchain is going to be taking over the desk. Stay tuned.
Sam, where are we going?
We're going to Consensus.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
Hello, everybody. This is Bonnie from Bonnie Blockchain, and joining me is John from Coinbase. Hello, John.
Hi, Bonnie. How are you?
I'm very good. We just had a great conversation about everything.
We did.
Literally about everything. Yeah. And first question, I guess I'm going to ask you about legislation. the difference between Genius Act, market structure, and Clarity Act, because I've never seen anybody explaining it so perfectly. I've been binge watching your interviews, and I would love you to explain that to our audience.
Well, Bonnie, thank you for having me. And thank you for not putting any pressure on me at the very beginning. So let's see, as a non-policy, non-government law expert, but someone who's been around for a long time and has seen similar legislation in the commodity space, hopefully I can break it down for your audience. So Genius Act became law in July of 2025, I believe. We still haven't seen that law turn into rules yet.
Yeah.
That's happening as we speak. And that was sort of a smaller version of what we're looking at in Clarity. So the Genius Act focused specifically on were stablecoins. And it said a couple of really, really important things. It said that non-bank issuers can issue stablecoins and pay some sort of rewards on them. It also said that stablecoins are not, by definition, securities or commodities that exist in the currency money market realm. So that was a really, really important law, rule, act, however you want to call it. And it kind of laid the groundwork for the SEC, CFTC, Treasury, and other agencies to create rules around the issuance and propagation of stablecoins. Now, super important, because even though Genius isn't really actualized yet, we have just seen a mad rush to create stablecoins.
Yeah.
I think we'll continue to see that because, as Tether and USDC have shown, it's pretty good business. Now, Clarity is sort of the mom and dad of Genius and everything else. So Clarity is a market structure bill. Market structure bills deal with everything, including the umbrella of stablecoins. And so if you think back to in my career, we went through the Commodity Futures Modernization Act, which just completely transformed how we trade commodities, right? The modern commodities markets exist because of that act. It defines all of the rules around primary issuance, secondary trading, how broker-dealers work, how exchanges work, how custodians work. And it really is the last piece of the puzzle for this kind of holy grail of institutional acceptability, or everyone, with half the panels here on when will the institutions finally come in large, and the answer is always regulatory clarity.
Right.
And market structure bills provide that regulatory clarity. Now we're hopeful, things are looking better. If you look at Polymarket and Kalshi prediction markets, and also just the word coming out of DC, it looks like everyone's coming back to the table to produce not just a bill, but a good bill. And I'm optimistic that that will happen.
What is a good bill to you?
So a good bill is one that's fair, that allows US consumers to access competitive interest rates, and doesn't stranglehold an innovation like blockchain at the sake of incumbents.
Right.
So, for example, there's one thing we're kind of horse trading over, which is the idea of SEC exemptive relief. So this is a kind of a wonky thing. It's really a fancy word for the SEC it can say, hey, look, there's this amazing new technology or product design, and we've never seen this before, but we think it's a good idea. We don't have rules for it, so we're going to let you do it in kind of a guarded way.
Yeah.
And we're going to watch you, and as you scale, we're going to write rules. And that sounds complex, but if you think of something as simple as ETFs, ETFs in the US would not exist in the form they exist if it had not been for 300 exemptive reliefs provided by the SEC.
Wow.
Because when ETFs were created, it was very novel. The SEC is like, we think this is great for the American consumer, but we don't know what to do with it. So if you take away that ability from the SEC, well, number one, you're saying we don't trust the SEC to make decisions about what should exist and not exist in US capital markets. That's what they're there for, to some degree. And secondly, you're cherry picking a specific technology, in this case blockchain, and handcuffing it in a way that you haven't for anything else. So that's just unfair. So it's sort of things like that we hope get ironed out. And we're really optimistic. Everyone's come to the table, Republicans, Democrats, and so we're very excited.
You talked about, stablecoin issuers like USDC. They're super profitable right now because of the yield situation. They're still kind of keeping their yield. With competition, though, they're sort of forced to share that revenue to the users. what happens then?
Look, it's a fair. I'll let the equities analyst talk about
Yeah.
that. But what I will say is that I think it's testament to the sincerity of Coinbase's position, because we are in effect arguing for competition. We obviously have a partnership with USDC, and so we are. Brian Armstrong believes in financial freedom, and that's the position we're taking. American consumers should get paid the highest rate, the most competition should exist. I will say, decreasing margins, increasing scale can offset, but I'll leave it to the equity analysts to analyze the effect on companies like USDC.
I love that. I'm talking to Anthony Scaramucci later today. You guys are friends?
We are very, very good friends. We're I hope to be him someday.
Wow. Well, I'll tell him, definitely. I'll tell him that later.
Anthony's a great friend, a great guy, and a wonderful spokesperson for the industry.
Interestingly, last year I met him at Digital Asset Summit in New York, and that was my first ever conference interview. And I remember he just came up to me. I told him, "Hey, you're the first ever." He's like, "I got you." And I'm like, "Oh my God, this guy, man."
He's like a warm embrace.
Yes.
Yeah. No, there's nothing. The most dangerous place to be in the world is between Anthony Scaramucci and a camera. So I got you, Mooch. But there's no one better for you to do your first interview with, because he's a consummate professional and a gentleman.
Yeah, and he makes you feel very good. You do too. You do too.
Thank you, Bonnie.
I really want to ask you about the liquidity that you talked about in one of your interviews. You said something about the depth and the breadth of liquidity.
Oh, wow! You paid attention.
Listened. That was amazing, and I'd love you to share that here.
Sure. So it's a lesson I learned. So way back in the day, before the wheel, I used to be the head of strategy for the New York Mercantile Exchange, which was the largest commodities derivatives exchange. Now, commodity derivatives and crypto have a lot of intersection in how they trade and act, and the volatility component. So I feel very familiar in crypto. So I learned this lesson a long time ago. There was this horrible hurricane in the state of Texas, and it caused for the evacuation of the city of Houston. And we saw this incredible thing happen at the New York Mercantile Exchange. The natural gas options market, which we thought was incredibly liquid. It traded like water, millions of times a day, disappeared overnight. And the lesson I learned, I was 23 years old, the lesson I learned is there is a big difference between the depth of a market liquidity, the notional number you see. I own one share and it traded 100,000 shares that day. I'll have no problem getting out of this position. That's super easy. It's very, very liquid relative to my size, versus breadth of position. What we found was all of that natural gas liquidity back then was really a bunch of hedge funds sitting in the city of Houston. And something happened that they thought reasonably would never happen. The city was evacuated. It's never happened before. And so we had a deep market. We didn't have a wide or broad market. Now, what does that mean? It doesn't just mean that those hedge funds or those market participants are in other cities besides Houston, although geographic diversification is part of it. It means different motivations for entering the market. You're not going to have luck selling your bicycle on eBay if every single person wants to buy a red bicycle and yours is blue. There could be 1 billion red bicycles bought and sold every day, but you don't have good breadth of bicycle market. You won't have a good time if you won't have good liquidity if everyone's there for the same reason. They all want to be market makers. They all are speculators. They're all bicycle manufacturers hedging their excess bicycle inventory. You need all types. You need individuals, hedgers, specs, commercials, short-term traders, long-term traders, older people, younger people with different risk profiles. That's what I mean by breadth of market as opposed to the notional depth of market.
If I use the same logic and apply that to crypto, do we have both?
We have depth and we're building breadth. The ETFs were a wonderful onboarding ramp for individuals who might have not purchased Bitcoin or Ethereum or Solana because they were concerned and worried about how to store it through Ledger or even on an exchange like Coinbase. Right? We have to be understanding, right? It's not that people are dumb. It's not that people can't figure out new technologies. It's that a lot of people don't wake up every day thinking, I want to learn a new system. And so we have to make it as easy as possible for people because they're distracted with their everyday lives. My family wants me to get on Apple. I'm on Android. I can learn Apple. I know I can. I just don't want to at this point in my life. And so we have to be sympathetic to people who don't have time in their lives to learn a new system and make it easy to onboard.
Now, since you're talking about Bitcoin spot ETFs, people are asking, you guys are talking about it like, after a spot ETF, everybody is going to be on board. But if you look at Bitcoin price now, it doesn't seem like that's happening right now. What's going on here?
Yeah, so look, there's a lot of commentary being written on what happened to Bitcoin pricing post October 10th, where I think the consensus is kind of coming around is a couple of very large players, whether they're in Asia, US, who knows, who cares, got over-levered on a pair trade between being long crypto, being short physical commodities, and vice versa, and they got what we call whipsawed, where they got caught on the wrong side of the crypto trade, got caught on the wrong side of the metals trade. That's really a symptom of the issue, not really a cause. This is a market that tends to trade in volatility spurts. People get excited, they go risk on, they go momentum trading, and they take on excessive leverage, and then it comes off. There are markets that are very stable and important to the US and global economy, like commodities, that have always traded this way. Crude oil, the world's most valuable commodity, went negative a few years ago, right? So it may be that assets like Bitcoin continue to trade in that way. Now, the one thing I would say is, if Bitcoin had not, over the 7-year time horizon, beat virtually every other alternative asset by 2 to 4 time return, then I wouldn't be too thrilled with that level of volatility. But it is a price you have to pay for a massively outperforming asset. To put it another way, simple math, Bitcoin or any other asset cannot continue to accrue on a compounded basis at 60, 70, 90, 500% a year in perpetuity. It will be larger than the global economy in a very short period of time. So if you're going to take the big ups, you got to be ready for the periodic big downs.
We didn't have AI back then, right? So people can argue that the reason why crypto or Bitcoin outperforming everything else is because that was the cool kid. So everybody wants to, be friends with the cool kid. Now we have a new kid that is cool. What happens now?
It's entirely fair. Look, it'd be disingenuous of me to claim that crypto is special. Any market, if you pull users away from that market, whether it's tech stocks or anything else, liquidity will suffer. Generally, when liquidity suffers, you have lower marginal unit of buy-sell demand, and then that is more prone to rapid price escalate. And we always talk about the price going down at a rapid pace, but Bitcoin also has the potential for price escalation. So there's no question that things like prediction markets, AI stocks have pulled attention away from the growthy, speculative side of crypto. I do think overall, though, the pie of interested investors is growing. So as we talked before, you may be decreasing your marginal user, but you're increasing the overall pie you have to choose from. The scale's increasing. So I'm not worried. There's a steady growth in breadth and entry of new crypto participant. It may not be growing as fast as some people want, but again, I saw contracts we created at the New York Mercantile Exchange take 10 years to get hold. So this is super fast from my perspective.
And of course, you know the best because you are talking to all these institutions. And what are the conversations like right now?
Well, look, I was here yesterday. Consensus hosted an amazing day before the main event, which was the LP Institutional Summit. And I had the luxury of not only doing a fireside with Anthony Scaramucci, but I hosted a panel of very, very large LPs. Now, it was Chatham House rules. I can't say who they were. I can't ascribe thoughts to them, but I can say what they were. Okay. They represented a massive Middle Eastern sovereign wealth fund, a massive Asian sovereign wealth fund, a massive multi-billion-dollar family office, and an advisor who advises on crypto investments for endowments and pensions all over the world. Not a single one of them was turned off by last year's volatility. The advice they had to anyone looking to get capital from institutions like that have done the work on crypto is don't be embarrassed, maintain consistency and clarity of communication. We are big boys. We appreciate this has volatility, and we're looking to buy at the dips for high-quality investments. So that was extremely encouraging.
Do you hear any concerns they may have?
Look, again, I don't want to be disingenuous. Of course, whenever you go through a volatility experience like this in any asset, people are going to go back and look at their numbers, look at their research, and make sure they didn't make any mistakes. Yeah. But what I can say is this, Bonnie. I don't know of a single major institutional investor anywhere in the world who has done the work on this asset studied it over a 5-year period. We now have close to a 10-year track record, who is shocked and appalled that this asset has the ability for a mean reversion on a periodic basis. If that's the case, you probably haven't done your homework on this asset or any other similar asset. So none of them are surprised. No one's happy. I'm not going to suggest that people are happy about this, but no one's surprised, and it doesn't dissuade everyone. As I've said if you've watched some of my other interviews, I'll repeat something I've said often. If you like apples and you go to the store and apples are 50% off, you don't suddenly dislike apples. Now, you may not buy 1,000 apples, but you'll buy the amount of apples and maybe a few more that you normally buy for your family. So it comes down to how much work have you done on the asset, how comfortable you are with the historical risk profile, and why would you be surprised that an asset that has behaved for the last 10 years in a certain way does exactly the thing it's done in the past?
I've heard this point of view that an expert raised. Basically, from experience, she said that in the past, nobody really asked about quantum risk. But nowadays, institutional investors are asking more and more about this topic. And it's about single digits still.
The qubits, yeah. Yep.
But people are asking about it. How would you, maybe put people at ease?
So, I think it's, when you're talking about a technology that everyone acknowledges, and I have the luxury, so I'm not a quantum expert, I have the luxury of being a fellow at MIT's largest artificial intelligence lab, so I get to be around the people and who really know what's going on at a deep research level. And I am constantly pinging them when new information hits me about where we are in the quantum life cycle. And so I don't want to be dismissive of what appears to be a medium to long-term issue that, by the way, not just crypto, but every human has to worry about, right? Our nuclear codes are a lot more important than our Bitcoin ledgers. So that is something society will have to deal with over time. I am fairly confident from the research I am being explained by the people I trust that we are far enough away for that to be a significantly longer term potential risk that I don't think explains price movement today. I don't think it's reasonable to argue that a 10, 15, 20, 30, or even 40-year actualized risk where we haven't hit, we're assuming that innovation will occur, which is a safe assumption. Humans are an incredibly innovative species. So we're assuming innovations will occur over the next 20, 30 years that will cause that risk to actualize. Those things haven't happened yet. When and if they do happen and we see a clear path to not just realization of full quantum, but commercially accessible full quantum, then I think that's a valid argument to have. Right now, I think that's more, people are scared of volatility. And when you're scared of volatility, you go into risk mode, you go into fear mode. And this is something that is worthy of discussion, but not really, I think, affecting price movement in the short term.
I guess, when there's big price movements, people want to know why, and they go find different reasons to prove their point,
that's
right?
Healthy.
Yeah.
Just like when it's a bull market, we're looking at every reason for it to go to 5 million, right? That's human nature, I get it. I saw it in crude oil. I used to go on CNBC and shows when I was back at NYMEX, and every time crude oil was rallying, it was going to go to 1,000, and the world was going to end, and then the next week, it's all going to go to zero because we're awash in crude oil. So this is, we until AI takes over and we have emotionless trading, this will be a characteristic of almost every market that we trade.
Speaking of AI, again, from your interviews, you talk about every human interaction in the future will have a financial layer. For example, self-driving cars.
Yeah.
Who gets to cut the line?
I agree. Look, it's an elegant, efficient mechanism to settle disputes and to determine relative value. So I'll get on my soapbox here. So when you look at an exchange, everyone thinks that exchanges trade value with each other. They actually don't. They trade risk. That's what we're doing.
Oh.
If you trade with me, we're transferring risk. You're selling something to me, you're removing risk from your portfolio, I'm buying it, I'm taking on risk.
Wow.
And so think about our daily lives. Think about how many moments of the day we have to push risk on to someone else or agree to take risk on from someone else. Financial markets are really elegant, simple ways to price that risk without fighting, without arguing, without elongated negotiation. And so there's so many wonderful ways that we can simplify our lives by applying financial components. Now, the problem is we don't have the time in our day to do those micro negotiations, and we don't have a banking system that's efficient enough to settle those micro transactions all the time. Now we do. Now we have agents that we can program to act on our behalf, and we have cryptocurrency, custody, and settlement layers, like the one that Coinbase launched, that allow for cheap, quick, efficient micropayment transactions.
You guys launched already.
We did, X402, yeah.
Oh, would you explain, elaborate that?
It's an agentic payment protocol.
Okay.
Now that's important because we can do it already. I have ClaudeBot on my computer at home. I'm experimenting with allowing it to make certain microtransactions on my behalf, but try to open up a bank account through your ClaudeBot, right? That's going to be extremely, extremely challenging.
Right.
So you have to rebuild financial payment layers from the ground up. We have USDC, we have custody, we have payment rails, and X402 allows for the efficient transmission of agentic payments across all of those components.
I like to visualize the possibilities. So the self-driving car example, and what else is possible in the future with this?
Oh, that's a great question, Bonnie. So look, we have, let's stick with cars, for example.
Okay.
A parking space.
Yeah.
I'm going to leave a parking space. Maybe I'm motivated to finish. I get a bit on my phone saying, if you leave your parking space 30 minutes earlier, we'll pay you an extra $5. Wonderful. That's a market mechanism to solve a real problem facing people. We can set off auctions for, I'm a parent, so I want efficient mechanisms for sourcing babysitting services, right? That's something else that I should be able to settle quickly and easily. Think about this amazing conference, right? The secondary market for tickets in that event, or maybe I'd pay a bit extra to come to the conference a little bit earlier than you. How about this? I thought of this the other day. My daughter's a huge fan of Taylor Swift. There could be a mechanism by which Taylor Swift segments her audience base using microtransactions to send out her tweets and view her tweets 5 minutes earlier than everybody else, right? Because some people might pay extra to see her tweets on an earlier basis, just like some hedge funds will pay more for data earlier from the exchange. So the financialization of everyday experiences is frightening. I understand why it's a little bit frightening. It sort of becomes things that we kind of take time and attention in everyday lives. We become emotionless and driven. But I think it does free up an enormous amount of time. It also creates less anxiety for individuals going about their regular day.
Obviously, you talk to a lot of retail investors and institutional investors. Now, let's say you have to give advice to younger people, since we're in Hong Kong, in Asia, that are trying to reach financial freedom when they're 50. What are some things they should really focus on right now?
Okay. So reaching financial freedom when they're 50, the first thing is how much time do you have, right? So how old are you? Because
20, 30 years.
Right, excellent, 20, 30 years. That's a wonderful. 20, 30 years compounded. If you get an investment portfolio through either capital gains or passive yields that targets anywhere from 9 to 14%, you're doubling your wealth every 4 to 6 years, right? On a compounded basis, right? So 4 to 6 years, over 30 years, you're looking at 5 to 7 compounding periods. Right? If you can compound your wealth 5 to 7 times, you can build extraordinary wealth if you're dedicated and consistent. The issue is hitting that capital appreciation number.
Yep.
And so the argument would not be to sell everything and buy Bitcoin. I'm certainly not suggesting that. But we know from the data that risk assets like Bitcoin that have a higher upside volatility than downside volatility. So Google Sharp versus Sortino. You want to maximize your Sharp, but you really want to maximize your Sortino ratio because it talks about the upside volatility. You need assets in your portfolio that beat inflation at that 9 to 14% rate. So if you believe inflation is going to be 3 to 6% a year, you're now talking about having to hit a 15 to 20% return to double your money every 4 to 6 years to build real wealth over time. So I would say know your age, know your risk profile, understand your inflation rate where you are, and understand your bogey to beat that has to be anywhere from 9 to 14% if you want to double your wealth every 4 to 6 years, and choose your portfolio accordingly.
You know what else I would add? Listen to John more. Watch his interviews. He's so great. Thank you for being
Blockchain.
here. Watch John on Bonnie Blockchain. I hope to have you back in the future.
I hope you'll have me.
Thank you. Thank you for being here. Thank you for spending the time.
Have a wonderful day.
Full potential of your digital assets with Hex Trust, the leading digital asset financial institution, trusted by over 500 institutional clients worldwide, licensed across key jurisdictions. Hex Trust, the leader in digital asset solutions.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
History doesn't just happen. It's built by the bold, the brave, and the bullish. Consensus Miami is where crypto, culture, and trillions in capital converge, and ideas that fuel institutional scale are sparked. A place for those who refuse to settle for the status quo. The builders reprogramming the future of finance through every deal and decision. Breaking boundaries begins with being there. Experience the epicenter.
Joined by Michael Ashby right now, and I think you're the perfect person to talk about recent Bitcoin price actions. What do you think about the general sentiment, and what are some observations you can share with us?
Yeah, awesome. Very happy to be here. Thank you.
Thank you.
Happy New Year.
Happy New Year.
So I think we've seen a lot of market changes over the last 6 months. Particularly market structure has adapted quite significantly. So what happened in 1010 really did jolt a lot of funds, and I think we've seen a new normal hit the market. And so a lot of the strategies that were being enacted by traditional trading firms have changed. And so I think that's been part of this. I think you couple it with the macro sentiment. Most recently we've seen Bitcoin come off aggressively, and there's a lot of speculation why that happened. It looks as though it was actually through traditional finance products. Now, if you look a year ago, we would have never dreamt that traditional finance products would influence Bitcoin. But if you want to take a positive out of this, is that we've now got to a place where we have the likes of BlackRock and all these other large traditional institutions that are in our ecosystem and are influencing it. So I think naturally the market now understands what happened. It's going to be more robust. I think having these folks with us is actually a good thing. And so I think we see the market evolving and becoming more institutional. And just this is part of the growing pains as we go.
You are leading Algo Quant.
Correct, yes.
And a lot of people are arguing the reason why quant firms have been doing so well is because crypto market was. I'm not sure if it's still inefficient, right? What are you seeing now? Has anything changed after the Bitcoin Spot ETF entered the game? What are some, interesting insights you can share with us?
Yeah, that's a good question. So we definitely are seeing more institutional participation. And with that becomes less inefficiencies. So it's natural for a market as it evolves and grows up to condense these inefficiencies. And so if you look back 2 or 3 years ago, we had the basis trade. It was very easy to put on. You were looking at 20 to 30% unlevered. Today, that no longer exists. So what you're having to do is actually be a bit more sophisticated. We do see decentralized finance as being a new place. So again, in the last 12 months, we've seen the growth of Hyperliquid, and now some of their peers like Aster, etc. A year ago, there was very little liquidity. We've now seen a huge amount of liquidity, and even in the last 2 months, you've seen a lot of traditional metals be traded on decentralized finance. That would have never happened before, right? And so, again, I think if you're able and willing to be dynamic and grow with the industry, you're able to take advantage of this. But you can't be just focused on trading traditional centralized exchanges. You have to adapt as the ecosystem adapts.
As a quant trader, do you care about what you're trading at all? Or do you just look at the numbers?
Yeah, so another good question. So I care about liquidity.
Okay.
I want to be able to get in and out without getting stuck. And so the underlying asset, as long as it is liquid and on venues that I think are safe, we're happy. So it's much more about, are we comfortable with the credit risk of that venue we're trading on? And then within that token or product, can we get in and out of it easily? That's becoming much more difficult. On the one side, the credit worthiness of the exchanges are getting better. DeFi exchanges are still new. So it's I guess, new for everybody to get comfortable with them, but the centralized exchanges are getting much better. The products themselves, liquidity has become quite low in a lot of altcoins. So you're seeing a lot of wash trading happening. And although if you look at the actual headline numbers, it looks okay. What we've seen post 1010 is all the market makers have exited, especially the mid to lower altcoins. And so there's not the depth anymore. So it forces us to do more in the top 100 tokens, if you will.
See, I think a lot of people are interested in your everyday work. What do you do every single day? But I think I want to ask you this. So I want to learn from the best traders I can find, and that is you. What can I learn from quant trading? Like when I invest in something, do I need a stop loss every single time, or is there anything I can take away from your trading logic?
Yeah, so happy to. So I guess again, this is not advice, but if you're looking at crypto, the volatility in crypto is quite high. Mm-hmm. So running trailing stop losses can be quite dangerous if you're going to get pushed out. So the trick, I think, with any trading is to diversify and to ensure that you're not overly focused on one or two things. And so if you look at our portfolio, we don't hold assets more than one day. Excuse me, we're constantly moving in and out of these assets. And what we like to do is we like to have expectations of where we want these tokens to trade. And so let's say if something is trading down more than 10%, we get alerts. We'll look at it, understand what's going on, and then we'll come in and out. So what it actually suggests is that you have sort of, I guess, wider stop losses, but you have alerts as things moving away from you. And so you're aware of it, you're focused on it, you know what's going on. If the stop losses are too tight, you could get taken out right before it comes back up again.
Exactly. We saw that in silver just a couple days ago, right? Yes, and it kind of bounced back. Yes. And that event inspired me to ask you this question because I was panicking for a while.
Yeah. It's like a whipsaw, right? You're the car crash.
Yeah. I want to ask you about tokenization. It is a very big word that has been, talked about. But let me tell you this: when I go to a restaurant, I care about if the food is good, if the restaurant is cheap, and if I'm treating people, if I look good, right? But when institutions talk about tokenization, they're using a lot of big words that retail investors or everyday people don't understand. Yeah. Using the same logic, what would tokenization represent in this same scenario?
Yeah, okay. So I guess right now, if you want to use Apple stock, right? You want to buy a shared Apple because you like the iPhone, you have to do it through your broker on the US exchange. Mm-hmm. So the idea of tokenization is that you'll be able to get exposure to that same share of Apple, but in a derivative form. So it's basically a same Apple share, but you can do it in a tokenized aspect. And so if the Apple shares go up $1, your token value goes $1.
Right.
So it pairs the same. And the idea here is that right now you have to trade it on the US exchange. As you tokenize it, you could trade it in Hong Kong, or you could trade it in China, you could trade it in Australia, and all these different exchanges. You do the same thing for an apartment building. If you have a company, you could tokenize your company. So what it does is it gives you more access to other assets. And so if you're like, oh, I really love to buy that, but I don't know how to, it becomes easy because you can do it on your phone app, etc. And I do think that this is a big deal. You've seen NASDAQ and New York Stock Exchange, so they're going to do this. And so they're two of the biggest exchanges in the world. And I believe that it's actually going to be what brings in the big institutions into the space. So BlackRock and Fidelity, they're very, very focused on this. And I think it's going to allow retail people to get exposure to assets that traditionally they weren't able to. So the really great private equity funds that you were never able to touch, you needed lots and lots of money, you can now buy a little bit of the same fund. So I think it's a really great thing.
What is stopping us from getting there now?
So it's partly regulation and partly technology. And so we need to, rebuild the technology stack. And some of these companies are around for 30 years. It takes time to do that. And I think the regulators are now starting to get more comfortable with the logic. And so, Hong Kong's been very, very forward on that. We've seen the same thing in Singapore and in the UAE and in the US. So everybody's sort of saying, okay, we're comfortable that we can wrap this hedge fund. As long as it's sold to the people with the right understanding and disclaimers, I think this happens.
Does that mean the market is going to be more efficient?
Yes, I think the market's more efficient, and everybody will have the ability to buy products traditionally wouldn't have access to. And so I do think this is a way that we can help everybody get more access. At Alloquant, we're building a fixed income business for Bitcoin, and we're going to launch Bitcoin bonds, and we'll tokenize those bonds. And so if you hold Bitcoin, you'll be able to get a yield on your Bitcoin, and it'll tokenize it, and then you can trade it between each other. So it's an example of, I guess, the innovation that crypto is bringing to the space is that we can take the best of traditional finance, combine it with the best of digital assets or crypto, and then we have actual strong products.
See, that you just answered what I was going to ask you. I was going to ask you, isn't it better for you when the market is not efficient?
So, okay, it's a very good question. Yes and no. Inefficiencies typically coincide with low liquidity. High liquidity means more efficiencies, but so we can do more, but we have to work harder to make the same types of returns. Okay. So the days where funds were able to make 30 or 40% very easily are gone. Now you have to be very sophisticated. You have to have larger budgets and be able to run stronger risk management. So at our company, we have about 60 professionals, and we're 24/7 globally. We have offices around the world. We need that level of staff to be able to run these strategies. I think where we were 5 years ago, most people were 5 or 6 people. That's not possible to do anymore. It's just much more complex. And I think we see a lot of the larger sophisticated funds now entering the space. And so in some ways, crypto is graduating from junior school to high school.
Do you guys use AI to trade or make decisions?
We have AI-enabled strategies. We still have humans, overseeing that. We tend to use AI a lot in research. Excuse me. So, what would take us maybe 2 weeks to do research from idea to having the actual research to deploy, we can now do in a matter of hours. So that's really been where we've seen the key lift. To actually use AI to run strategies, I think it's quite difficult to make sure that there's not going to be a bug. And so I sort of see this as a co-pilot type of situation. I see that sort of for the next couple of years, you're going to have the inefficiencies to do this, but it's going to be much, much longer.
A lot of AI talks in this venue today. I want to ask you, so let's say in 10 years, everybody tries using AI. It's kind of inevitable.
Yep.
Who wins? Who makes the profit?
The AI companies, I think, first and foremost. But anyway, we are going to be in a world, probably next year at some point, where we have AI bots that are going to be transacting.
Right.
And we see some of that behavior now, and we have we call wash trading.
Yeah.
The high frequency guys, I think, will be very quick to do this. At Algoquant, we do something called mid-frequency trading, which is intraday, but we're not looking for speed. We're actually looking for signals and deploying it. So for us, when I talked about research, the signals are what's important. Now, to actually replace traders with AI, again, I do think that our human creativity brings an added value to the AI. So I think what happens is that AI ends up being the execution layer, but we still have almost the driver and the overseer as being the human continues.
And you think that's going to continue for the next couple of years?
I do. I think again, it's going to be a tall order to. There'll be some aspects where that technology can integrate very quickly. There's other aspects that are going to take some time. And again, we have this concept of tech debt. And tech debt is how much you've invested over many years and your current technology stack. So if you think of a retail perspective, you have your laptop, you have all your programs, your files. If you try to change that, you have to go and fix it first and then adapt it. So it takes time to adjust our tech stack to be able to deploy this stuff. But I do think what we've seen with Claude very recently, and I'm sure there'll be their competitors are going to bring out something very simple. It is a game changer, and I think anybody that's not focused on it and embracing it is going to be left behind.
I'm really interested to know how you see the world. What is the difference between risk and uncertainty?
Risk and uncertainty. So risk is something that we can measure.
Okay.
We understand. There's different levels of risk. So there's counterparty risk, there's portfolio risk. But you can define it, you can model it, and you can make, decisions on how much you want to take. Uncertainty, in my mind, is ambiguous. You don't understand what it is. And so, in English, we have the known knowns and known unknowns, and then unknown unknowns. And to me, uncertainty is unknown unknowns. And so those are the black swans. And so if you look back last week, I don't think anybody knew that this IBIT option scenario was going to play out. It hit the markets. It was a black swan. We all now know. So it's moved from the uncertainty unknown bucket into the risk bucket where I can model it. And so, again, I think I hear a lot of people saying, where's Bitcoin going to be? It's going to be at this level or that level. To me, I have no idea how they know that because I have no idea. I think we do know is that the industry is growing. There's more adoption, more institutionalization, and that's a net positive. So I focus on the areas that we can understand and we can model, and try to ignore the bits that we don't, because it's just there's no point in trying to guess, if you will.
To understand your point better, an example you just gave is using AI to trade, but there's a bug or a glitch. Would you consider that uncertainty or risk? Because we know it might happen.
Yes, so I see it as a risk because we know it's going to happen. And so we can essentially run this in a laboratory, and we can model for it, we can test it, we can run a series on it. And then once we get comfortable that there's a manageable level of risk, we can deploy it. The bit that we don't know is what happens if AI starts to go crazy. Like, we don't know why. But I'm not an AI expert by any means, but I think we're conversational, if you will. And I think the speed of the technology advances in AI, it's very hard to know what's going on. And so I think there's far smarter people in this space I think could be able to model, and we engage with them to help us understand the risks.
What about, risk like tariffs? It might happen, but people don't know when and how or why. How do people navigate this for everyday investors? We see the headlines and news talking about, the world is heading towards this uncertainty and, this very vague era. How do we adjust our trades or our investment strategy?
Yeah. So again, from a quantitative perspective, we're very data-driven. So we look at data and we see what you described as a world with higher volatility. Now, in actuality, crypto volatility is dampened. So over the last year, the amount of volatility in crypto has reduced substantially. And the reason for that is ETFs. We have less players. A lot of people started trading digital asset treasuries. So some of the faster money exited. So it's counterintuitive that in a world with, I guess, more risk, macro risk, the volatility has actually compressed. But what I'd say for your retail investors is that if you find things that you actually like, research them, get comfortable with them, and then think in your mind's eye that the market could move 10 or 20%. But if you truly like that, you should be invested on that basis. And you should just always double click on your thesis and make sure that nothing changes. But expect in this world with the personalities we have leading it at the moment, that there is going to be some volatility, and just be comfortable to weather that storm if you want to invest in this space.
If you had to teach a class that's called Investment 101, what is the main takeaway you want people to learn from?
So again, I like to read a lot. So I would ask people to spend time reading about the part of the market that you're interested in, and learn from the past. And so there's a great book called Remnants of a Stock Operator, which is one of the more famous books. And it is on the advent of the US stock exchange where it first developed hundreds of years ago. If you read that book, nothing's really changed. In hundreds of years, nothing's changed. But you can study what people do and you can learn from them. Nothing's new. Like, everything rhymes. But I encourage you to get very close, and you can do this via the social media platforms. You can follow people. You can do it through studying. But from my own journey, I've tried to read as much as I can and learn from other people's mistakes and how they were successes, and then try to adapt my model. So it gives you a leg up, as it were.
What are some mistakes you would absolutely try to avoid now?
So for me, in my seat as CEO of AlgoQuant, it's trying to do too much. I have a great team around me, and it's trying to empower them and really let them run the business and be there as a coach and a control function. I think we also are doing our best to be as dynamic as possible. Crypto is changing so quickly, AI is changing so quickly, that the people that don't have the ability to be dynamic are going to really struggle. And so, our strategic goal is to be as dynamic as possible, and as the world changes every 3 months, we're able to go with it. And the last thing I'd say is that, and this goes for trading on the retail front as well, you should never chase anything. As soon as you start chasing something, it never works.
Oh, elaborate on that.
So if you think of it, like if a stock starts going away from you, and you're trying to catch up, and you never get there, and you can't get the price, it probably means you're too late. It's better to understand it, be patient, let it come back to you. Inevitably it will. And if the stock comes back to where you're comfortable, don't buy outside of your comfort, right? And so for us at AlgoQuant, we don't make stock predictions, but we like to invest in different areas. So rather than trying to race into it, we build strategically, and when we're ready, we go into it. And we find that that's the way to success. But it's the same thing for trading.
When you see people start talking about the same thing on Reddit, is it too late already?
It's not too late, but you shouldn't rush into it.
Okay.
And so what I'm saying is that you should take a deep breath, say, okay, I found something really neat. Let's now read about it. Let's read the people that like it, the people that don't like it. Let's understand it. Let's spend a couple of weeks really getting to know it and understand what the risks are versus just chasing it. Everybody likes this, I'm going to buy it, right? It's better to really understand it, understand what you're doing and how long the momentum will go, how long the risk is going to be there. And then you're an informed investor. And so, again, we run a business, and so for us, it's not chasing the latest perpetual markets. We want to understand the perpetual markets. Once we understand it, then we'll start to enact on it.
By the time you understand it, it's already the top. I think that's the lesson.
Potentially, but these things always go up, they go down, they go up again, right?
So be patient.
Exactly. So maybe you get the second one.
Right.
But at least you're not going to get hurt as badly as you potentially could.
What are some narratives you are paying attention to?
So right now, you hit two of them, tokenization AI. I think the other thing that we're paying attention to a lot right now is how the market is evolving just with institutions coming in and with the altcoin sort of, I think alts are trying to find a new normal. I think where they were before is not their future. And I think the venture space is also evolving. And so for us, it's okay, what world is alts now, and how are they going to work with the DEXs and the CFI? And is there going to become, an alt season? What's going to be the catalyst for that?
Does that apply to retail investors as well?
100%. So I guess like we've seen altcoins sort of go down flat, right? So what is the next narrative to help create an alt season?
What is it?
I don't know, but that's what we're looking for. So if you find out, please tell me. In all seriousness, I think the Clarity Act in the U.S., if it gets passed, I think will be a very positive for alts. And I think more macro, if we see sort of the macro stabilize, that could also be very positive.
So from how I'm understanding this, you don't think, what people say, altcoin is dead, you don't think that's true?
No, I think there's a lot of, again, in my mind, the pendulum always swings from one side to the other, and it's going to come back, right? Right now, there's a lot of bearish sentiment, and rightfully so, because it's been quite subdued. But this industry is built on these altcoins, and they will come back at some point. It's probably not going to be the same. It's going to be different. But there's a lot of capital there. There's a lot of really smart people. And I think we're interested to see how that it develops and evolves.
Before I let you go, I just want to say, after talking to you, I feel like I'm a better investor now. Thank you so much, Michael, for this conversation, and I hope to get you back soon.
Okay, thank you. Pleasure.
Thank you.
Okay, thank you. Get in there. Come on. Come on. Let's get a good hit.
Whoa.
Okay.
Come on. It's like they're dating. I mean, come on. Let's hurt somebody.
Okay.
Oh, thank you.
Come on,
We have
guy.
10 seconds.
Go, Red.
8 seconds in this round. 5, 4, 3, 2, 1.
Oh.
All right. All right. Woo.
Oh, all right, this is interesting.
All right. Can I get this guy's attention for a second?
Yes, sir.
So, Jeff, tell me about your technique out there and
Well,
what your training routine was like to, I mean, we got 40 seconds here. Well, tell me.
Yeah, so I think what my robot and I failed to realize is the goal is to actually look toward your opponent and punch them.
Okay.
We spent a little too much time, if Yat was here, a little too much time punching over here.
Okay.
So some advanced fighting techniques I learned is you should actually try and hit your opponent.
Okay.
So we're going to focus more on that strategy in the second rounds.
Hitting the opponent, that's the name of the game.
Hit the opponent.
Hitting the opponent.
Yeah.
Okay.
That's my pro tip I just received.
All right, so any training that you've had has not come into play yet.
I mean, I've spent about 40, 60 hours a week working on this. I'm a little disappointed that it didn't translate yet.
Okay.
But I'm really going to work on that for round 2.
We got 2 more rounds, 2 seconds. Let's go. Let's go. Okay. Come on, crowd.
Let's go, Red.
Come on, crowd. We need you. We need you. Let's see if I can walk around here. All right. Round 2.
Yep.
Come on, Yat. Give him hell. Let's see the energy of this.
Oh, right direction.
Whoa. Get in there. Whoa. What was that?
Oh.
This is UFC. Whoa. Balance. Balance. Come on, baby.
All right.
Let's see something.
Oh.
Whoa.
Yeah. Low blow.
Oh, the crowd liked that one. Come on. Turn around.
Okay,
Come on.
okay,
Give it to him. This is, I'm not sure what technique.
There he is.
Okay.
All right, let's
Come
go.
on.
Go.
Oh. Swing and a miss. These robots are getting tired of shadow boxing. I mean,
it's my patented spin move.
Let's get some contact. Come on. Whoa. Hey now. Woo. Oh, yeah, there you go.
Oh,
come on.
Get in there, Red.
There you go.
Wrong way, Red.
Oh, okay. All right.
Turn around. Jeff, have you ever done this before? This is amateur hour.
Wow, this is harder than
it's harder than it looks, folks.
Whoa, good punch, Yat. Good punch. Whoa. All right, we have. Whoa!
Oh, come on. Low blow. Low blow. Hey.
Oh, yes.
Oh, I think we have a broken rib. 30 seconds to go in the round.
Oh.
Whoa, big one.
This is like
Stay in there.
Let's go.
Come on, charge. Charge.
Come on, Red.
Oh, big one.
Oh.
All right.
Woo.
There it is. That's
Come
robot
on.
boxing.
10, 9, 8, 7, 6, 5, 4, 3, 2, 1.
Oh.
Oh,
Okay.
man, that round finished with a flurry of punches. Woo! That was crazy. All right, yeah, tell me about your strategy here today. What's the what are you trying to achieve?
It's called Brawl.
Brawl.
Robot Brawl.
Okay.
That's it.
Okay.
Button mashing. This is like
you learned this from like childhood street fighting, right?
This is like a Nintendo Wii. Just it's just a bit of a lag time, so I gotta anticipate. But it's pretty cool. It's real steel with more friendlier. But yes.
The winner gets to take the robot home. So I just made that up. I have no idea. These things might be $1 million.
I'm just trying to figure out what are the combos here.
Okay.
I need the fireball.
Okay.
Waiting for my Hadouken, but yeah, trying to figure that out.
You're doing great. I also just learned your robot's name is Sam.
Yeah.
So come on, Sam. Let's.
Yeah.
They're getting recharged. We have 10 seconds until the third round. And as the judge, I will tell you that the first round went to Wilzer. The second round went to Yacht. So this is the tie-breaking round.
Okay.
We're going to see who wins. Let's get some enthusiasm. Okay. Let's ring the bell. Round 3. This is it. Come on. Oh, good one. Yeah, get in there. Let me get out of your way here. Whew. Let's land. Good punch. I like that.
Whoa.
I like that. This is like, Tyson Holyfield 2. We're going to get a ear biting.
and ear biting in here? All part of my plan. All part of the plan.
I mean, Jeff is losing points for making no effort. All right, come on.
Oh, I heard that, David.
Oh! Whoa!
Low blow.
Oh my God!
Low blow.
Whoa! Ladies and gentlemen,
cut me, Mick.
We have a KO. We have a winner. Yeah, the champion of consensus.
There we go.
Boxing.
Whoa, whoa, whoa,
whoa!
You did not count to 10. Put that trophy away. We didn't count to 10. It's anyone's fight.
Oh my God, let's get our body going.
All right, let's go. Come on, Red. This is like the remake of the Karate Kid.
Just for charity. We already have a winner. Let's land some punches. Let's land some punches. Let's hurt something. Come on. Let's hurt something. Let's, There you go. Oh, that's the best punch of the day. Good one.
Oh, it's getting real.
We've got to take it. Oh!
All right. That's a.
Yes! Take the trophy. This is
thank you.
Amazing.
Such a good game. Such a good game.
Well done, everybody.
Right, here we go. Yay. Let's get a photo.
Thank you all for attending the very first robot match of Consensus Hong Kong.
That was a lot of fun.
I think we have 2 dead robots.
Ladies and gentlemen.
He's back to life.
Yeah, speech?
Whoa. Yes, any comments on the victory today? All the training paid off?
It felt robotic, yes.
Okay.
Very nice.
Okay.
But this is a lot of fun.
Were you just feeding off the crowd?
I was at the end. I was feeding off the crowd. Thank you so much for your support. Yay!
Yes, everybody. Let's hear it for the world champion of iRobot Boxing.
And
Robot Boxing. Sorry.
I know that Justin was supposed to be here, right?
Yes.
I was had dinner with him last night. He didn't show up because he knew where the champion was.
The intimidation factor.
That's right. Congratulations,
Scott.
Scott.
Thank you. Thank you so much.
Thank you very much.
Thank you.
And Jeff, your consolation prize is in the mail.
Thank you, David. Thank you, everyone. And thank you, Brad. Up next, do not leave. We have the company that brought you these robots. We have a fireside chat to dive into the future of robots. What will that look like, and why is it closer than you think? We'll dive into, this was an incredible demonstration. There obviously are a few challenges that still remain before robots become fully mainstream. What are those? Where is it going in the near, short term, and long term? Do not go away. We'll dive deep into that. I will not be wearing a robe, so you can take me a smidge more seriously. So see you in 2 minutes once we clear up the stage. Thank you. Oh, yeah, thank you. No, it's a lot.
You're seeing the rise of dominant DATs, and these DATs are arguably better than having exposure to the layer 1 itself. The 2 dominant DATs so far are MicroStrategy and BitMine. You can see by far we're the 2 largest holders of cryptocurrencies. BitMine around 4.4 million ETH. These 2 DATs are now 90% of the trading volume of all crypto DATs. So again, dominant. And you can see here, BitMine is 5 times larger than the next largest DAT for Ethereum, and it trades 14 times more trading volume. And trading volume is really the lifeblood of a DAT because that's how we access the capital markets. And if you're skeptical if you can make more money owning a DAT than the underlying layer 1, look at the performance. BitMine was essentially created on June 30th. The stock was $4.50. From June 30th to December 31, Ethereum was up 22%. But look at BitMine, it rose 500%, meaning it outperformed Ethereum by 48 1,000 basis points. And look at 2026. Ethereum, of course, really took a punch in the gut this year. It's down 32%, but Bitmine is down 21%, so it's outperforming by 1,100 basis points. So the reality is that a properly structured DAT is going to provide you outperformance versus the layer one. And I'll explain why. There are 4 pillars of growth for Bitmine, okay? And again, once you hear this, you'll realize the best days for Bitmine are ahead. The 4 pillars are we're going to maximize yield on the treasury. We're going to invest in moonshots. We're productizing Bitmine. And we're playing a role in bridging TradFi and DeFi. And all of these are important roles of us as a DAT. So how do we optimize staking? Well, maximize yields. We're going to optimize our staking yield. We have alpha strategies because we have Tom DeMark and Mosaics as our advisors. We're optimizing our yield on the cash, and we're doing accretive capital market transactions, which, of course, in the future could include M&A. By the way, we also have no leverage. Bitmine is debt-free. We have a positive cash balance of around 600 million, so we earn money every day. In fact, we provide weekly staking updates. We've staked roughly 2/3 of our ETH, and that's generating 200 million a year in rewards. When we're fully staked, it's around $300 million a year. That's about $1 million a day. And if Ethereum gets to 12,000, which I think is reasonable in the next 12 months, then our staking rewards would jump to $2.4 billion. Okay. And as you can see, we're adding Ethereum per share. Our Ethereum held per share is 10 times higher than it was on June 30th. That's the reason why the stock is outperforming, because we're growing your share holdings of Ethereum. We also invest in moonshots. The 2 moonshots are Beast Industries and Orbs. I just want to spend a minute on Beast. If you're over age 30, you may not understand who Mr. Beast is, but they did just announce they're buying a bank, a neobank called Step. We were aware of this when we made our investment into Beast late last year. Of course, we can't talk about what Beast is going to do. But here's the thing. Beast has a chance to be the financial institution of their generation, okay? So if you go back to the baby boomers in 1980s, Charles Schwab was created for baby boomers. And for Gen X, if you're Gen X, then BlackRock and Blackstone were your financial institutions created in your lifetime. And if you're a millennial, you've had institutions like Robinhood, Chime, and SoFi. Okay. Well, here's the thing. Mr. Beast is the leading creator for Gen Z and Gen Alpha. That's 120 million people. It's bigger than millennials. And he is the guy. So he is basically the next Robinhood, SoFi, Chime combined. And of course, these people aren't necessarily wealthy today. But remember, Robinhood's customers 15 years ago weren't really wealthy either. But there's a huge amount of wealth transfer that's going to take place. So Beast's customers, as they go through their journey in the next 10, 15 years, are going to not only be, a huge cohort, but they're going to be the largest and wealthiest generation ever. And he's, by the way, got 1 billion followers. So this is why it's important for Bitmine, because now we know what's native to Gen Z, Gen Alpha. It's really having a digital asset life, owning cryptocurrencies. We're going to be able to be very synergistic with what everything Beast is doing. And finally, we have, of course, our Maven staking operation, which is going to generate quite a lot of staking yield for us, and we're going to be staking for other folks as well. And our staking operation is going to stake for other clients, tokens like Solana and Canton. Okay. So in the final minute, let me just talk to you about the future price of Ethereum. So I think the best way to look at this is still think about Ethereum's price ratio to Bitcoin, okay? And the 8-year average is 0.0479. So if Bitcoin gets to 250,000, which I don't think is a stretch, that would value Ethereum at $12,000. But I think that that's too low. I think Ethereum is really the story for the next 15 years around crypto, because that's where Wall Street's going to build, and that's where AI is going to take place, and also where creators like Mr. Beast are going to be building products. So it may recover to its 8-year high, 2021 high of 0.0873. That's $22,000 Ethereum. And of course, it can go higher if ETH becomes a payment rails like Joe Lubin talks about. So Ethereum and Bitmain's price are highly correlated, okay? And so if we look at future ETH prices, at $22,000 ETH, Bitmain stock is 500. And at $62,000 ETH, Bitmain's 1,500. So again, the stock, which I'm sure you're frustrated with, but it has no debt, and of course is tied to Ethereum, which is a bright future. So the best days are ahead. And I'm sorry that's I'm out of time, so I don't have time for questions, but
We're gathered at Consensus at a fascinating, slightly painful moment in the digital asset market space. Bitcoin is currently under 70,000, and for the first time, we have regulated ETF infrastructure sitting right in the splash zone. But before we dive into the wreckage of that, let's just do some brief intros for the audience and just a 30-second vibe check. What do you consider to be the biggest driver of the ETF surge we saw leading up to 2026? We can just start down the line.
Okay, I'll start first. Yeah, my name is Yi, and I'm CIO of CSOP. And in 2026, I think we are the largest ETF issuer in Hong Kong. We are the first one launched the Bitcoin future-based ETF in Hong Kong. And within this year, I think there's a lot of discussions about tokenizations of ETF products. So we are quite actively working on it. And we do believe that if you're talking about future format of a financial product, token might be a better format compared to ETF format. So that's the view we have. Maybe take us several years, we don't know. But actually, Hong Kong is allowing for tokenization of real-world assets. That's a good starting point of the regulatory world. So that's my view. Maybe for this year, there's a lot of like RWA, tokenized money market fund, tokenized funds are going to happen in Hong Kong and globally as well. Yeah, thanks.
Tim Shea. I am a managing director at Jefferies. I head up our digital assets investment banking franchise globally. To answer the question on what I think led to the run-up in ETFs, and I think crypto ETFs specifically, is ease of access, right? Because it opened up a vehicle that gave access to people that didn't necessarily know how to go and open up an account on a crypto exchange, the ability to transact in their traditional brokerage account to gain exposure to an asset class that they maybe had an interest in but didn't know how to access it previously. It can also be distributed through a number of different channels, through advisors, other platforms. And I think that it's that as well as the ease of use for institutions that really led to the surge in AUM, really.
Mark Jansen, Co-Chief Trading Officer at Flow Traders, Global Head of Trading. We're active for about 2 decades in ETFs. We're globally one of the main market makers there. And since 2017, also active in digital assets. But yeah, from that perspective, fully agree on the access ETFs bring. It drives extra demand, and that's also what drives this surge, in my opinion.
Yeah, I'm Anton Katz. I'm the co-founder and CEO of Talos. We're the largest provider of trading technology to digital assets, primarily for larger institutions. We play a pretty big role these days in the ETF because we are powering quite a lot of underlying trading for the ETFs. We are facilitating the Bitcoin and the Ethereum and quite a few other assets trading. So we have a front seat to what's happening on the ETF domain. When you're asking like whether there was a surge in ETF and the demand, I mean, honestly, it's a little bit of a lopsided question. I think that actually there was quite a lot of demand already for quite some time, and we just couldn't get the ETF approved on some of the major stages. The ETFs in Europe were approved, and we started to seeing some demand. And ultimately, the regulation in the United States caught up and approved the ETF there. Mm-hmm. And as a result of that, we've seen a huge acceleration in terms of demand and access. And I do agree with Tim. A lot of it is people are looking for an easy vehicle, an easy tool to access, being able to not worry about custody, not worry about some of the operational burden that you kind of like have to take into account when you're interacting with digital assets. So it kind of opened up the door to quite a lot more retail investors, but at the same time, it also opened the door to institutional investors that can finally use the vehicle to plug into their existing risk tools, existing trading infrastructure, existing reporting infrastructure, all those kind of things that they kind of need to rethink when they're interacting natively with digital assets.
Great. Can I get the first slide, please? So yesterday, CoinDesk reported that U.S. Bitcoin ETFs registered back-to-back inflows for the first time in a month. And despite Bitcoin being down over 40% from its October high last year, total BTC held in ETFs only dipped 6%. So Timothy, I'm going to kick this to you first. Did the ETF market pass its first real stress test?
I think it did, because what you saw is as the prices went down, as usually happens when prices go down, people started to sell. But it wasn't a fire sale. The system's all held in place. And once asset prices reached the low 60s and Bitcoin bounced off of that level, you saw people start to buy again, as you usually see when things start to go up. So I don't think that anything unexpected happened there. And I think that, yes, passed the stress test.
Okay. So Anton, since you were bringing up regulation, let's talk about the hurdles with that. So even with Trump's regulatory tailwinds, we're still waiting on that comprehensive market structure bill in the States. Is the lack of clear federal regulation the biggest blocker for adoption?
I would say that it's definitely a major one for quite a lot of institutions. I think that, the difference between 2026 and 2022 is that there was quite a lot of headlines in 2022 generated by the different organizations saying, we're going to be participating in this market, we're going to be adopting. Today, I think we're seeing a little bit more of a muted approach from the media side. So there's not as many of these like big banners, we're in digital assets, we're doing this, but actually behind the scenes, because those are our clients, we've seen a lot more activity these days than we've seen in 2022. In 2025, our clients the new clientele has completely lopsided towards, so we have more traditional institutional clients in 2025 than in the previous years, which is kind of like seeing this. So yes, of course, a lot of them are looking to see like what's happening with the Clarity Bill. They're looking to see what's happening with the regulators in terms of bifurcation of regulation, right? What is the SEC going to be responsible for? What is the CFTC is going to be responsible for? And I honestly think we're very, very close to that. So a lot of institutions right now are operating and pushing forward as if we are about to see much more clarity there. But yes, regulation and policy has been one of the larger barriers for this industry for quite some time.
Okay. Can I get the next slide, please? So on the flip side of hurdles, let's look at the banking seal of approval. Last October, CoinDesk reported that JP Morgan began accepting spot BTC ETFs and collateral for loans. Does that move the ETFs officially into away from being end the speculative asset debate? Anyone? You want to take it, Mark?
Yeah, I don't necessarily agree with let's say that question in particular, because they're allowing ETFs as a pledge, not the spot itself. It's mainly the ETF. Okay. So it's mainly the vehicle itself, which they allow. They already allow multiple ETFs as collateral, and also a lot of other products. I think it is a small step that they also allow Bitcoin, which does improve capital requirements, also from different participants. But I wouldn't go as far as that, this is the major step that spot Bitcoin is becoming the new gold standard.
Okay. Anton, do you agree with Mark's conservative
Sometimes I agree with Mark.
Approach?
Luckily, not always.
Not always. Yeah, look, I think it's in our industry, it's always been a little bit of crawl before you walk, before you run. I do see this as an interesting step. Is it like a huge, major step? Probably not not to an enormous degree, but this does start to say, look, before that, in primes and in some of the banks, crypto ETFs specifically were not accepted as collateral. that is actually a huge deal. They were specifically excluded as collateral. So if you held assets in crypto ETFs, you might not enjoy some of the same margins that you would enjoy with a prime. Today, that's changing. That's actually a very, very positive thing. Having said that, if you actually look at the details, I mean, it's an awesome headline, but if you look at the details, there's still quite a lot of issues there, right? We are looking at haircuts that are significantly higher than the haircuts we have on treasuries, for instance, as collateral. And then, but if you look into the future, I think that that's kind of, you need to get comfort, you need to get your risk systems in order. But we are also seeing that a lot of the institutions that are starting to talk about lending assets against direct crypto collateral, so against crypto, against like Bitcoin, against Ethereum, also a step in the right direction. So I don't think we're there yet, but this is the entire point, is to have those tools in the entire financial economic system.
I do agree it's baby steps, but yeah, like collateral-wise, we're definitely not there yet. We're paying as a market maker way higher, capital than other ETFs. So like for cryptos, especially if we post our collateral at banks, our leverage is very small in these ETFs, and that also doesn't help with reducing the volatility in the ETF versus the underlying.
Yeah, one thing that I would say here that you need to keep in mind is that an ETF trades as an equity, so this didn't require anything in terms of infrastructure changes to enable this. It was just simply a change in view. Whereas accepting actual collateral of Bitcoin or ETH or any other digital asset for that matter, that would require real infrastructure change, and I think that that would be a bigger step than simply allowing Bitcoin or Ether as collateral.
Yeah.
ETF, Bitcoin or Ether as collateral.
Yeah, I think for the infrastructure side, we are the largest, maybe one of the largest OTC counterparty with a lot of banks on the street. So different banks have a different approach. We do see that the testing internally, for example, adopting like blockchain technology and build up the internal tokens to allow either you're claiming or is bank transfers, cash movements. We're talking about a lot of hurdles when we transfer collaterals. Regulatory-wise, I think as a bank, they have a different layer of regulation as well. So even though we can say JP Morgan would like to take it, but what about like Basel? What about like MiFi? Or those guys going to define whether even stablecoin, we never heard about, they can accept stablecoin as a collateral, right? So there are several steps that require different layer of regulation working together, allow those bigger players within TradFi system to accept as a collateral. But collateral itself, they are adopting like a blockchain technology. They are trying. They are working on it. Hopefully one day they can take it.
Just one more point on this. Do you all consider Bitcoin now sitting on the institutional balance sheet alongside treasuries and gold?
For our clients, yeah, they probably, especially for high net wealth, during the last several years, I think it doesn't matter if we're talking about Hong Kong or Singapore or other regions clients, they do have interest to put a certain percentage of their wealth into like crypto investments, especially for Bitcoin. And we do see some banks offering this kind of products, and we as ETF issuer offering like a Bitcoin ETF. But what those guys trying to do is just building up a bridge between like TradFi and the DeFi world. Yeah, so I think both sides see opportunities out there, and both sides would like to participate a little bit for the demands we are talking about. From institution side, I think from US definitely is moving. Yeah, from local side, because we are just allowing the Bitcoin ETF and either future-based or just physical formats in the market. However, based on the turnover and flows, we don't see too much change in terms of adoption compared with US Treasury and gold. US, we do see that happens, yeah.
Do any of you want to touch on that briefly?
Yeah, I think that if you're to think about digital assets going into treasuries of companies, if you're talking about Bitcoin as an example, I think that it depends on the company. I think that if you're talking about stablecoins going into Treasury, there's some real utility to have that as opposed to bank accounts because of the ability to transfer money between entities 24/7 over weekends with lower fees, right? And that's something that has real value to companies. But that I view as something that's a different decision than what is the actual allocation of the assets within the Treasury.
We see from globally, from our, we have over 2,000 counterparties, and from there we do see that there are some early adopters. So there's definitely part of them who are allocating parts of their balance sheets towards crypto, and then it's almost solely Bitcoin, to be fair. But we have a very long way to go in adoption. Like the majority isn't allocating, to be fair.
Yeah, I think that's totally fair. There's definitely demand, and there's definitely first movers into that space, trying to figure out how to diversify the treasury that they're holding, and it is really a smaller set of the institutions. I think the bigger conversation right now is about how that treasury interacts with digital assets as we're seeing capital markets starting to migrate towards digital assets. That's much bigger conversation.
Right.
And again, to Tim's point, like whether it's access, whether it's mobility of those assets, 24/7 nature of those assets, that's becoming very, very attractive to the customers.
Okay. So we focused heavily on the U.S. narrative, but there's a disconnect across the pond, arguably. So Yi, I'll start with you. Before you were at CSOP, you were at a London firm, and Mark as well. And so there we have Micah in Europe, active in Europe, and the UK regime is finally warming up, yet European retail adoption is still lagging behind compared to the U.S. frenzy. Is there like a specific cultural or regulatory shift that needs to occur, or is it more of a marketing question?
Yeah, from my last job experience with serving pension funds, sovereign funds, insurance companies as an investment consultant. So one of the frustrating points I found that is European market is so fragmented, and not one product can serve for all, and the different countries. You may have a UK regulation, slightly different from the Holland, different from the German or France. You have the UCITS format, so just passporting all the investment vehicles across the region. But end of the day, different countries, regulations play heavy roles on top of Europe. The joke about US, China, European is leading on the regulation side. So that's a matter of a fact to enlarge adoptions and also the popularity of the crypto products to be as popular as in US. I think that's one of the driver. But I moved back to Hong Kong for years, so maybe those guys have more updates for the European situation right now. Yeah, definitely. So I think the first part is European retail is vastly different in their risk tolerance towards the US. So a lot of Europeans have a lot of their savings just in their bank account and sitting on cash. And then I think another big difference is that a lot of Europeans have a lot of wealth in their pensions, and a lot of European pensions aren't allocating money towards crypto yet. So that is one big difference. I think another big difference between the US market and the European market is the US market, the rails of ETFs is far further set up than in European countries. European countries or European retail is interacting with financial markets a lot via their banks. And those banks usually offer their own products instead of ETFs. So there you also do see a big difference where banks in Europe, I believe, have quite some difficulties with the Basel rules. So in their cost of capital is very high if they have exposure towards crypto assets. So that's also not helping in Europe on the adoption towards crypto.
Okay. Anton, did you want to add anything to that? Or?
No, I mean, I think Mark knows the domain really, really well, right?
Okay.
It's, I think you look at the composition, the history there is that Europe was the first to launch those exchange-traded vehicles, and everybody was super excited about it, and basically, like, I mean, not a lot has happened. Like, there was an uptick, but it wasn't a very, very meaningful uptick. And once we saw this launch in the United States, then we've seen a very meaningful uptick. And it's, again, like, it's enough to look at the composition of the investors in those, being predominantly retail for the US ETFs, and the wealth management aspect of the institutional portion there just tells you kind of like that it is part of the education, it's part of the machinery, but it's really the people that are getting in Asia and in the United States are, you know, they have a different attitude towards risk, and I think this is just a lot more conservative story in Europe.
Okay.
Yeah.
Okay, so let's look forward, because we aren't just talking about buying Bitcoin on an exchange anymore. We're talking about tokenized ETFs and altcoin funds. So in terms of tokenization, how soon will on-chain delivery of ETFs, where shares themselves are tokens, become a standard requirement for an institutional portfolio? Tim, do you want to?
Yeah, I'm happy to start with that. I think that similar to the way that ETFs bring accessibility to crypto to traditional investors, I think that bringing ETFs of asset classes outside of crypto brings accessibility of those types of products to the crypto world. So if you're to think about somebody that is in a non-US, non-European jurisdiction that wants to buy the S&P on a weekend, the way that they're going to be able to do that is by transacting on-chain. That's something that they wouldn't be able to do today. So I think that it's something that, from an accessibility standpoint, is good. It also brings increased efficiency where you eliminate a lot of the middlemen in the system. They're often referred to as rent collectors. And that cost savings can then be passed on to the ultimate user of the product.
So you see a demand there. It's not just tech for tech's sake. The token.
I think it depends on the type of asset that is being tokenized. So I don't think that, as an example, it would make sense to tokenize a Bitcoin ETF because you could just buy the Bitcoin directly. But if you're talking about tokenizing an S&P ETF, then I think that that could make some sense.
Okay. Yeah. I would agree there. So, like, yeah, we were active from almost the very start of ETFs, and we saw that industry grow. And what we believe will happen on the tokenization side is that will, just like the ETF, be its own new product. We see the growth patterns to be quite similar, and it's also adding, on top of the ETF, some additional use case like the 24/7, direct settlements, fractionalization. The longer term, probably programmability as well, but at the moment there are not that many use cases yet, but I believe they will come very soon. Well, if you look back in the ETF, they did 20 years ago almost the same. They made access towards index tracking a lot easier for people, and like I think that innovation, which we saw in the ETF space, will happen on the tokenized real-world assets as well in the longer-term future.
Yeah, I think back to follow-up is there's a lot of jobs that requires a flow trader as a market maker to do. So if you have, for example, tokenized S&P, it's a good thing we can trade 24 hours, but end of the day, both market, doesn't matter you are S&P ETF or S&P ETF token, it requires liquidity. People would like to trade, and you need to have someone to quote on the market and be able to let market maker to quote on the market. You need to have the fluent mechanism on the back end, how to mint your coin, how to redeem your ETF shares. If you have ETF shares, can I convert into token? That can be supported 24 hours. We know that a lot of institutions setting up in the way that they have the digital arm, they have the traditional finance arm, but this kind of token requires both arms build up a bridge, link those two balance sheets together. Then you can take the arbitrage opportunities, right? So I think those guys will be more than happy to see a lot of trading activities happening on the, say, crypto exchange, digital exchange. But from the back end, there's a lot of
differences, gaps that you need to fill in to make the whole entire process being smooth enough. So you're able to gather in all the stakeholders, not only like, oh, I'm providing a very fancy token. The token is AI investment strategy driven, or is representing NVIDIA or SK Hynix, which we have. But if we put that token on the chain, does it gonna attracting decent amount of demand? The demand is coming from retail investors, arbitrager, or speculators, whoever. Yeah, we are welcome, but we need the infrastructure and the backend stakeholder happy about the whole flow. Yeah.
But so in terms of the product innovations, I'm sort of getting the sense that you guys don't think it's a blocker for retail investors. It's sort of answering the first question I asked, where the answer is ease of access, and you look at the technology as being the entry point, is sort of you're all agreeing.
Yeah, I mean, it is completely ease of access because traditional ETFs are built on old infrastructure, right? So if you're putting Bitcoin into that vehicle, you're putting new infrastructure into old infrastructure so that users of the old infrastructure can access something that's new the old way, right? So that is all that it is. When we're starting to talk to the last conversation on tokenizing ETFs that offer other types of products, so that would be, again, back to the S&P example, that is, again, that is bringing an existing product onto new infrastructure, which is a little bit of a different thing than bringing a new product onto old infrastructure.
So I think that the ease of access and distribution is a part of the conversation, and I think it's a totally reasonable first step, just giving people access. And we see this all the time. You know, we're now seeing quite a lot of our clients across the board asking for more and more tokenization. ETFs are, you know, we're still in the equities world. There's a bigger, broader discussion here of how do digital assets and how does crypto collide with traditional assets. And if you see right now, like a lot of the liquidity providers, a lot of the exchanges are starting to add the traditional assets. And so that's kind of like the first step. The second step is adding those in a tokenized form. But really, the interesting thing is if you take that to the extreme and you say, like, okay, what happens once we have these assets tokenized? It's not just the ease of access and the ease of use. It's the ability to plug into infrastructure that is brand new, infrastructure that includes services that we didn't have in capital markets. If you're able to take your equity that is a token and you're able to put it in a lending pool and borrow assets against it, and then you can leverage your trade, and all of that can be done within 10 minutes. That's not capabilities that we have in capital markets today, not on the retail side and definitely not on the institutional side. So a lot of the promise here is actually, like, you know, you're starting to migrate to this new infrastructure. The distribution is going to be just the first inning. There's a lot more behind it.
Yeah. Okay, we have less than 2 minutes left, but putting aside one final rapid fire question, putting aside the current dip in the Bitcoin price, what is one big bold prediction for ETF trend, the ETF market or trends look in the year ahead?
Maybe reversing.
Go down the line.
Yeah, we have 1 minute. Go.
I think, as I mentioned at the very beginning, so in Hong Kong, the tokenization is happening. So ETF is going to be, whether it's a next format of a security offering, I don't know. Yeah, but we would like to try and how to merging like ETF offerings together with token. Yeah.
Great, Tim.
Yeah, I think it's adoption in the advisor distribution channel, and as recommended allocations to crypto increase and usage of the ETF product, I think that will drive AUM higher.
Yeah. I think within 1 to 2 years, we will see ETFs being tokenized and really tradable on a 24/7 basis.
Yeah. I think, so I agree with a lot of what I said. I think that some of the innovation that we're going to see is that ETFs are going to move away from just looking at a single asset. We're going to start looking at multi-token ETFs. That's starting to happen now. I think the adoption is going to be gradual there. And ultimately, I think that we are going to, within the next 2 years, see ETFs that combine assets from the crypto world and the traditional world. And that will be an interesting combination of investment diversification.
Great. We look forward to that. Thank you for the big discussion in the short amount of time.
Thank you.
Thank you. Thank you, guys. Have a good rest of your consensus.
But at least we'll both be beautiful. beautiful and stay forever young. This I know, this I know. She told me don't worry about it. She told me don't worry no more. We both know we can't go.
Hello and welcome back to CoinDesk
Hello.
Live from Consensus Hong Kong. I'm Jen Sanasi here with my co-host for the next little bit, founder and CEO of Token Relations, Jacqueline Melinek, and CoinDesk's head of media innovation, Sam Ewan, is joining us. Hey, Sam.
Jen, good to see you again.
Good to see you. Good to see you, Jackie.
You guys too.
Jacqueline, did you know that today is Jen's birthday?
I know. Can we sing happy birthday?
If you would like to.
You may,
I'm
yes.
not a good singer, but
Me neither. That's why I was cut.
Yeah. To Jen. Happy birthday to Jen. Happy birthday. Come on, Sam.
Join in, Sam.
Oh,
Jen.
I opted out of this one. Yeah.
Happy birthday, Jen.
Thank you.
Very, thoughtful of you to spend your day here.
Thank you so much.
All the guests are wishing you happy birthday.
A lot of them are wishing me happy birthday. It's been a blast. Like I said earlier this morning, no better group to spend my birthday with.
Yeah.
It's been super fun. Sam and I have kind of debriefed on what we've been up to at Consensus, but what have you been up to so far?
I've been doing maximum frequency ventures, and so just a lot of different content things and meetings. You guys literally get so many of the best and biggest names here, so we try to capitalize on it for sure.
Well, thank you. We are here for the compliments. So far, only compliment happy birthdays from Jackie. Welcome back.
We will take it.
Thank you. Yeah.
We're going to keep her on.
Yeah.
Jacqueline, you like us go to a lot of these events.
Yeah.
And we have the opportunity to really go around the world and see what's going on. With Crypto in America, you guys really are focused on what's happening in the US. And other than the institutions, things feel a little stagnant. Mm-hmm. When we come to places like Hong Kong or Dubai or Korea or Japan, it doesn't feel that way. Retail feels like they're around, people are excited, people are really excited to see who's building and what they're building. A lot of developers are here. What do you think it is, how do you look at the contrast between what goes on in the US and what happens in the rest of the world?
Yeah, it's funny you say that because I was having a conversation with someone in Korea about this, and they were saying that a lot of the industry has gotten so institutionalized and suits and everything, and so some of the Asian markets are some of the last remaining fun degen markets that exist. These people, obviously you can see on the floor here, there's tons of people, they're engaged, they're interacting, and yes, they're like familiar faces that do the whole conference circuit, so maybe they're not all based here, but there are a lot of new faces that are really engaging locally. I've found that in these APAC kind of markets that a lot of people here have more focus on, trading, DeFi, that type of utility. And it's interesting to see kind of the contrast compared to America, where so much of it is focused on like stable coins, institutional adoption. And maybe they go hand in hand, but it's still a different energy. I don't know if you two feel the same.
No, I completely agree. And I just want to add on to what you were saying, like that focus on solving real problems when we leave the United States really comes into a spotlight. And that's those are the conversations I love to have. People who see a real problems that exist out in the world and they're solving them, and everything we're talking about is just the technology that's going to help them solve them in the best way possible.
Yeah.
So, sorry, Jacqueline, going back to you though, I want to know what are the things, we've all talked about stable coins. Now it feels like 2 years.
I know, literally.
We've talked about institutional adoption for it feels now multiple years.
Yes.
Are there any sort of breakthrough technologies or any forward-thinking sort of trends that you're looking at that sort of are exciting you in the crypto space?
Mm-hmm. I like the access to the private credit market. I think the ability for that to be more open to a more mainstream audience than what it historically has been is valuable. I've said this in the past that a lot of the traditional financial products out there are just not accessible to mainstream audiences. And so if DeFi can enable that, it kind of opens up the door to things that the average person couldn't have previously invested in. And so I find those types of different use cases really interesting. I think the seriousness of the industry, like we poke fun at it and we joke about it, but I actually think it's important. And it kind of shows like the maturation of like, we've been here for now 10, 15 years, things start to grow up and it's not always going to be crazy. That's not to say we won't still have the fun, crazy markets. Like I saw something called like Dare Market.
I don't know anything about Dare Market.
Yeah. It's on Solana, of course, and it's literally like you could pay people to do dares. And so there was one where it was like...
What could go wrong in that regard?
Yeah, what could go wrong? Well, what could go wrong is that someone put a $50,000 dare up if you go streaking at the Super Bowl. And it was out there, and you would get paid out by whoever put that dare in. And then they like tweeted later, they're like, okay, the NFL like reached out to us and said we have to take this dare down. Sorry, But that's like the crazy, still fun side of crypto, and I still appreciate and enjoy that. It's not that I'm participating per se in the dare market, but it's entertaining to say the least.
Maybe one day, never say never.
Yeah, right. It depends what the payout and the dare is,
Well, there we go. I think if you want to comment to dare under this video for chat.
Also, this is not sponsored. No. I genuinely thought it was like a fun, I guess, startup. I don't know, but I also feel like, and I don't know if you guys feel this way, but I have a bit of prediction market fatigue.
Yeah, I kind of do
going.
too.
Yeah. Yeah. I just think like there's so much attention on it right now and so many teams that are trying to launch prediction markets, to really get into the space while, Polymarket and Kalshi lead the way. But I don't really know if the demand is matching kind of the narrative for it.
Mm-hmm.
So what I mean by that is like there's so much conversation around prediction markets. Obviously, there's a ton of volume happening on their sites, but is this really how the average person wants to engage with culture and tech and even trading? Like, I don't want to trade on the weather, frankly. And if I'm trading on like whether or not the weather will be like 70 degrees, like I feel like I should be calling a gamble addiction hotline.
No.
You know what I mean? So that is my take on prediction markets is like not everything needs to become a market.
Yeah. I asked a similar question to one of our guests this morning, Sam, but curious to hear how you've done your fair share of participating in prediction markets, I feel.
I mean, I have, and I'm moderating a panel tomorrow on the topic. And I mean, the title of the panel is Insider Trading or Regulatory Opportunity. And I think the problems that we've talked about, I'm sure we all know this, is there are too many people who are exposed to the actual finite data of what is going to be real or not. Weathers can be a little different, but on Coinbase, for example, for their prediction markets for the Super Bowl, you could guess which advertisers were going to have commercials. So anyone working at Coinbase who knows that commercial is going to come on at this point has a 100% chance of winning. Anyone they know, if they wanted to share that, has a 100% chance of winning. And in that respect, I think it really reminds me a little bit of kind of the old like Flash Boy culture, which was if you saw the signals before anyone else, you could just really make money on trading on people's ignorance.
Yeah.
And I think that's something that is happening at such a scale in prediction markets that we don't, like the same way we didn't recognize how many people were gaming the meme coin industry, so it was almost impossible for retail to win. I think prediction markets have a little of that same problem right now.
I think my concern too on that front is like you could also kind of create reality by creating a prediction market. I said this previously, it's like, what if I said so-and-so is going to resign from this company? And then suddenly all these rumors start about them resigning. You know what I mean? And then it becomes reality because it's something that was put out there. I don't know. I think there's value to prediction markets. It's just maybe I feel tired.
I heard a rumor that Jacqueline wants to work more at CoinDesk.
And
be on camera with
on
us.
the prediction market.
Yeah,
So let's bet on that. Let's positive.
How much will I appear on this show?
Yeah, let's bet on that.
Yeah.
All right, we are going to now take a look at some of the stuff that happened outside of the showroom floor on day one of Consensus Hong Kong now. Let's take a look. All right, welcome back to our program. Our next guest is often described as the father of AGI, a man who was talking about artificial general intelligence decades before the rest of the world caught up. He's the founder of SingularityNet and the CEO of the Artificial Superintelligence Alliance. Ben Goertzel, welcome to the show.
Good to be here.
Great to have you here. Now, let's just lay a foundation. When we're talking about artificial general intelligence, what are we talking about?
AGI, artificial general intelligence, means AI that can take creative and imaginative leaps beyond the data that was used to train it and beyond its programming. And that's something we don't have yet at the human level, but it feels to many of us like we're getting quite close.
Mm-hmm. And how would you kind of differentiate this from the traditional AI? So we got AGI and we got AI, right?
So historically, through most of the AI field, you had AI programs where each of them kind of did one thing. Like one of them played chess, one of them diagnosed what's wrong with your car, one of them had a chat with you. Now we have LLMs and ChatGPT and so forth. And these chatbots can do a lot of things. But the reason they can do a lot of things is not that they learned how to do them by their own imagination. It's because they were trained on the entire web. And they're still not really able to leap beyond all their training data. But if you want an AI that can really help us sort of chart our path into the unknown future, like design new science, new engineering that's never been done before, figure out what people can do with themselves after machines have taken all the jobs. If you want AI that can deal with the great unknown, you need a different kind of AI than the kind that we have now, which is just sort of recycling the data that was fed into it. You can see that if you ask ChatGPT to write something, it's really good. On the other hand, it's just taking stuff it's seen and kind of combining it in a certain way. It's not making up something really new. And every now and then, a person does make up something really new, right? Which is what keeps culture and science and society going forward. AIs will be able to do that, and a number of us are working on bringing AI from the current stage toward real general intelligence. We may even see a breakthrough there in the next year or two.
I want to talk about Moltbook for a second because we saw a social network pop up for AI agents. They got together, they created their own religion. And what you're explaining to me is that maybe that was created because of the data that they were trained on. They know that humans get together and have these social networks and create groups like religions. But what does that help make sense of that for our audience? Like, what does that indicate for you? What should we be taking away from that experiment?
So if we take a step back, Moltbook is based on an AI system called Moltbot, right? Which was first called OpenClaw. Well, it was first called ClaudeBot. Then the next day it was renamed Moltbot. Then the next day it was renamed OpenClaw. Like things are happening very fast these days, right? OpenClaw, aka Moltbot, it's interesting. It's like the world's greatest security nightmare. But I mean, it lets you take a chatbot and just give it control of your laptop, let's say, to do everything that you do on your computer. And this isn't exactly an advance toward AGI. It's more like an advance of giving AI like better hands to do stuff, right? And I mean, better hands are important, but if you don't have a better brain, better hands will only get you so far. So you can see that with Moltbook. So these OpenClaw Moltbot agents are all talking to each other. But I mean, in the end, they're all LLMs, like ChatGPT type stuff in the back end. So they're just recycling what's in their training data and bouncing it back and forth. Now, what's funny about it is arguably that's what most people are doing on social media also, right? They're just swapping various cliche tropes back and forth. So you're seeing, in the end, maybe these AIs are roughly as smart as most people are on social media, which is part of what makes it funny, but I mean, they're not going to break new ground in developing like a new kind of religion that was never there before. And to have AIs giving each other advice on how to debug software code, it's super, super cool, but it's still different than having AIs like create a new kind of programming language or something, right? So, I mean, all these advances are amazing. They're still different than fundamental advances toward machines that can imagine and dream and understand themselves and understand others.
Yeah. I mean, something I've been thinking about too is kind of how OpenAI and Google and these other like massive entities are pouring hundreds of billions of dollars into essentially creating like a moat for these centralized LLMs. Do you think the decentralized side of this all is still possible in 2026? And if so, what's it going to take?
Yeah, I mean, there's not that much of a moat, as we can see from what DeepSeek did a year ago, and now you have Qwen, these Chinese models coming out, and they're open source, and they're in many ways stronger than the big tech models. So I think the moat is not that wide or that deep.
Yeah.
And if like me, you think that LLMs in their current form are not going to lead to AGI. They may be part of the story, but you need some other ingredients. Like if those other ingredients that you need for AGI come out of the decentralized ecosystem, then you have a quite different situation, right? And that's what we're working on in SingularityNet and with our partners in the ASI Alliance. Like we have some novel AI tools. We have something called Hyperon. It puts LLMs together with logical reasoning systems, with systems that kind of evolve new ideas by natural selection. So we have a different bag of AI tricks, right? So if our bag of AI tricks turns out to make things smarter than the ChatGPTs of the world, and we happen to roll out on a decentralized network, I mean, then I don't think the moats are that deep. I think everyone will jump onto the decentralized network, right? And among the other ingredients of what we're building in SingularityNet, I mean, we're developing a different bag of AI tricks, but we're developing it so that it can be run on a decentralized network of machines rather than a huge monolithic server farm. So I think it all comes down to the tech, right? Like if in the decentralized world you get something that's actually better, then there's no reason people aren't going to jump on board and start using that. And I mean, I'm old enough to remember when people thought like IBM and Honeywell were unassailable, and then like all of a sudden you had Apple and Microsoft jump out of nowhere. So I mean, I think things are still open for the decentralized ecosystem to do that same thing to the big tech companies. Yeah, and it's things are just unfolding super fast, right? So just like OpenClaw, then Moltbot popped out of nowhere, DeepSeek popped out of nowhere. I mean, you may see SingularityNet's AGI pop out of nowhere, and then, of course, everyone will copy it, but then it will be big tech playing catch up to us.
Yeah. Ben, before we let you go, I want to talk about your talk here at Consensus. It's called When and How Will We Unleash AGI? I think you've given us a little bit of a preview, but if you want our audience at home to know, one or two insights that are coming out of that talk, what would they be?
Yeah, what I'm going to talk about there is sort of what we've talked about right here, right now. I mean, I think the decentralized ecosystem has all the ingredients that you need to unseat big tech as a sort of nexus of AGI development, because you've got machines all over the place, right? You got servers all over the place mining crypto, and you even have frameworks like a NuNet protocol, part of the SingularityNet ecosystem, that let people, mine cryptos on their laptops or their phones at home. All this processing power could be used as part of an AGI mine, and you have data. I mean, yeah, Google has all this data on the servers, but we all have all of our own data, right? So in the decentralized network of participants in blockchain projects, you've got compute power, you've got data, right? What you need is the right AI algorithms that can take the next leap beyond LLMs to AGI in a way that's friendly to decentralized infrastructure, and that's what we're developing in SingularityNet and ASI Alliance, right? So I think we're at a point now where things can go so much faster than they have before, partly because LLMs, they do accelerate software development, right? Even though they're not AGI, they can make it faster for us to code the AGI, which is amazing to be experiencing, right? So I mean, I tend to agree with Sam Altman from OpenAI, Dario Amodei from Anthropic. We could be 1 year, 2 years, 3 years from a breakthrough to machines that are as smart as people. but I think we can do it in an open and decentralized way so that the AI can then grow, for the good of all humanity rather than just the shareholders of some particular company.
Ben, it was a pleasure having you on the desk. Thanks so much for joining us.
Thanks for having me.
We'll see you around the conference.
Yeah.
Thanks, Ben.
That was Singularity Net CEO Ben Goertzel. We are going to take a quick break. We'll be right back.
The full potential of your digital assets with Hex Trust, the leading digital asset financial institution, trusted by over 500 institutional clients worldwide, licensed across key jurisdictions. Hex Trust, the leader in digital asset solutions.
Joining us now at the desk is Evan Cheng. Evan is the CEO and co-founder of Mistin Labs, the original creators of the Sui Network. Hey, Evan.
It's great to be here.
Great to see you. We're here in Hong Kong. You're speaking at Consensus, and you're talking about digital asset treasuries. Give us a little preview about...
Well, I already talked about it.
Give us a little preview here for
so this is really to talk about the sort of almost like the institution flows and the interest from institution or TradFi in our emerging industry. It's a great thing. More interest is better. It's even more interesting is they're trying to make use of the blockchain, the decentralized infrastructure we've been building, and that's really the exciting part.
How are you thinking about DATS as like a complementary aspect to the SUI ecosystem and public markets, right? Because it is providing exposure from that perspective. But what do you see as like a key unlock with it?
Well, so I think the real unlock that we're going to be seeing is, TradFi integrating with sort of DeFi as sort of next step, or TradFi utilizing the Sui stack and other to build more interesting product to make their own operation more efficient, to service their customers better. So we're, I think what I talk about is if you think about TradFi products is T+1 or T+2, then DeFi products are T+0. So if you tokenize something that exists in the market today, that money, the asset moves faster, that's much more composable. And that's really the exciting part. This week, in addition to being here and talk with you and talking at Consensus, really about kind of finalizing those conversations. And we have a lot of exciting things that's coming up.
When we talk about TradFi and institutional adoption, there are a few chains that come up over and over again, two of them being Ethereum and Solana. When you're talking to the TradFi players, how do you position Sui? Why can Sui be an infrastructure play for the TradFi players?
So if you see the evolution of Sui, in about 4 years, we build Sui, we build Wars, we build CO, we build Nautilus, right? So it's a whole stack under one umbrella. It's sort of like using one SDK, you can deal with smart contract execution, you have coordination, you have data management, you have secret management, you can do private transaction, you have private club, all in one. So why is this important? Because fragmentation kills speed, and fragmentation make capital less efficient. Fragmentation make it harder to identify risk and deal with risk, right? So this is really we've been building towards this. This is really, finance is going to benefit a lot from this integrated solution we've been building.
I saw that Sui Network recently became one of the 2 non-EVM chains to get a full Coinbase integration. So what does that really mean for the ecosystem and then traditional users on Coinbase?
Well, I mean, more exposure to the Sui ecosystem. We're really grateful for the Coinbase trust in us. They obviously see something and they saw the numbers. We're one of the fastest growing developer platform. So they already list Sui, all the major tokens, and now they can list more of the sort of Sui ecosystem tokens. And that's great for the ecosystem and it's great for the Coinbase users.
I want to come back to the digital asset treasury conversation for just a moment. I know SWE Group, the digital asset treasury company, has an official relationship with the SWE Foundation, which is something that not all digital asset treasury companies have. Just talk to us a little bit about what that actually means. What are the benefits for investors that are looking at the digital asset treasury to have the foundation involved?
Yeah, Switch is really different, right? They're not a passive holder of the asset. They're really working to add value to their ecosystem. For example, they're launching a stablecoin, and the earning, the yields can flow back into the ecosystem. They're more operators. They're more active in the ecosystem. That really makes them different. So it's really great for them to work with the foundation to say, where can they add value to the ecosystem? How do they work together? That's what makes them different from a lot of other DATs out there.
In the beginning, Evan, when you came on, you talked about the race for institutional adoption or the opportunity on that front. How do you kind of think about growth there with DATs in mind, yield-bearing stablecoins, and so on? What really stands out the most for, I guess, like the acceleration and maturation of the space?
Yeah, I think when you see the same kind of experience people have with TradFi, the money app, the fintech app, how their relationship with their asset and money, sort of taking on next step, right? Same kind of experience, low friction, but move faster, more composable. If you can buy, let's say, Go. Everybody here want to buy Go. You can click a button and buy Go, but you probably can't make use of the Go as a collateral right away. But as opposed to tokenized product with DeFi, all of a sudden you could have that T+0 moment. You purchase an asset, you immediately can collateralize and make use of it, or perhaps in the same app. So those kind of experiences really, really going to sort of open people's mind. That's going to create demands, and that's, could be one of the biggest unlock that we're going to see.
Now, we're here at Consensus Hong Kong. I've been saying this all day. At CoinDesk, we're based in New York, so we very much focus on North America and the Western world over there. But talk to us about the significance of you being in Hong Kong, having this institutional conversation. Talk to us a little bit about how institutions are viewing SWE in this part of the world.
Yeah, it's really interesting. We see a real desire to stand out, to reestablish Hong Kong as sort of a hub of financial innovation. Not that it hasn't been, but it's sort of right to try to reestablish itself again, capture that magic. So the eagerness, the energy here it's really, really high. So New York has its way of doing things. Hong Kong has a way of doing things. I can't wait to see the two hubs compete and see who can out-innovate the other.
Are there any specific conversations you're having in Hong Kong right now that have been noteworthy that you could share with us?
I can't share, but wait until after Chinese New Year. There will be some pretty big unlock that happens.
And you'll let CoinDesk know first?
We'll let Coin know very, very quickly.
There we go.
You said we'll see who comes out on top between New York and Hong Kong, or the U.S. and Hong Kong. What region do you think it is? And you don't have to pick one maliciously, but where do you see the most progress? Where do you see the most openness to innovation? Where do you see the most builders innovating as well?
Yeah, it's hard to quantify. Really, it's different. I think New York, the big institution, there's a lot more sort of, hoops to jump through.
Yeah.
You're already seeing, in the last few weeks, there's a lot of announcements of things that are happening. They were kind of coming into the space. Perhaps in Hong Kong, it's a little bit smaller firm, but it's still very, very significant. They can move a little faster. They may have more direct relationship with consumer. That's going to be different from sort of the New York financial giants. I'm not going to put my head out there and predict who's going to win. I think it's going to be a bunch of different products which will then inspire each other. I'm really excited about what I'm hearing here in Hong Kong.
Yeah. Evan, it's been such a pleasure having you at the desk. We hope you enjoy the rest of Consensus, and thanks for spending the time with us.
Thanks for having me. Thank you.
That was Evan Cheng, the CEO and co-founder of Miston Labs.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
Our next guest joins us now, co-founder and executive chairman of Animoca Brands, Yat Su. Animoca Brands is focused on building the infrastructure layer of the digital economy. Yat, thanks so much for joining us. Thanks for being here.
Thank you for having me.
All right, I think that you are going to have a more concrete answer. We just asked Evan if he had to choose between Hong Kong and New York when it comes to innovation and I guess the acceleration of adoption on both the institutional and retail side. Which would he choose? He didn't really give us an answer. He was excited about both.
Well, I mean, I'm excited about both.
Okay.
However, I think in terms of sort of the path of adoption, I would have to say Hong Kong is probably better placed because there's just, first of all, population-wise, there's just a lot more people in Asia than in America. Two, I think a lot of the adoption on the institutional side, at least the interest, in America has already happened. However, when it comes to total capital allocation, New York's going to be better. I mean, from a stock market perspective, from a capital markets perspective, America is clearly bigger. But from a mass adoption user perspective, I think Asia is going to be the center of it.
A common narrative we've heard today at the desk is that Hong Kong is just smaller, so it can move a lot faster when it comes to some of the regulatory processes, and institutions can experiment a little bit more. And so it's interesting to kind of juxtapose the two.
And Hong Kong is also a very good sandbox. I mean, even if you think about what happened with sort of early mobile phone adoption, Hong Kong, I think, was the very first place in the world that had a sort of a ratio of more than one sort of mobile phone, for instance, because everyone's having one or two or three, for instance, right? And so you can kind of see how that kind of sort of develops. And it's also a very sort of tech-savvy environment as well. So it has a combination of being a tech user as well as very, very financially savvy as a financial center.
Yeah, I heard earlier today that some of Animoca's biggest themes for 2026 is focusing on RWA and AI.
Yes.
Two very big acronyms right now, very hot topics.
Yeah, sure.
Aside from that, what makes you guys really want to hone in on that?
Well, I mean, I think when you think about where the web is evolving, right? Everyone earlier talked about Web3, the web of ownership. Blockchain and tokenization provides that infrastructure. RWA is just another way in which that physical infrastructure and physical assets can move on chain. However, who are the ones who are going to be sort of handling these tokenized assets? It's going to be AI agents, right? And in fact, I would argue that the next phase of Web3 is essentially the agentic web. Some people call it Web 4. I'm not sure if that's the term, right? But this agentic web is going to be using what assets? It's going to be using tokenized assets. It's not just going to be stable coins. It's going to be maybe tokenized gold, real estate, that kind of stuff, right? And if agents are going to do peer-to-peer sort of trading and business with each other, then you have to be able to sort of verify those assets, and that's basically where agentic AI can come in. And we're quite focused on this ourselves with Animoca Minds, but the other thing, of course, is that when you think what happened with OpenClaw, right? It's still a small market right now, but it's sort of really unleashed the imagination where people get to realize, wait a second, we're actually going to be now entering a phase where the interface changes. Because right now, AI's interface is still search. It's basically just Google, just with more intelligence. The next phase is where essentially we're going from HTTP to MCP.
Yeah. I know you're really focused on digital property rights, and given your background, I mean, the conversation has shifted from what you and I were talking about 2 or 3 years ago to now we're talking about RWAs and AI. If we're thinking about agentic AI and a crypto world where AI agents are acting on our behalf, where does that digital property rights conversation come back into play?
Well, the basics on property rights and ownership still has to happen.
Yeah.
If I don't own it, then I can't trade it. It's as simple as that, right? So the question, of course, is, well, if the AI agent trades it, does the AI agent own it? Ultimately, the AI is acting on behalf of a human, right? Or humans, for that matter, or a company or an organization. And so the property rights goes towards that. And I think this is a wider debate that's happening as well, right? Because within the crypto world, I think there's a camp evolving, which was the same camp, by the way, that was anti-NFT 6 years ago, right? Saying, blockchain is only for finance. It's only something that is improving finance. It's big enough as a market. And I would strongly disagree, because the moment we start to say it's only about finance, we essentially alienate 95% of the world, because most people don't look at money as the end. Money is a means to an end, for the good life, for having a happy family, for being able to pay for your students, for your children and that kind of stuff, right? And the other thing is, right now we haven't had a lot of new people enter crypto on the retail side, right? It's been mostly institutions. In fact, the market's held up by institutions, which makes sense when you say we need to focus on finance. But the biggest event where we added a lot of people was 21, 22. It was NFTs, it was metaverse, it was gaming. That's the audience that came in and didn't actually leave crypto, right? And what we need are the kind of events where we bring the rest of the world into crypto. I'm not happy that we're going to have hundreds of millions of people have crypto. We need to have billions of people own that. And the way to do that is basically through an agentic framework where you can now talk to an AI to get you into this industry rather than basically dealing with MetaMask.
I know earlier today you also kind of outlined the case for a multi-asset DAT. What's your thesis there, and why do you think investors want,
Yeah, I mean,
exactly
Animoca
that?
is going public, right? Through a reverse merger with currency. The whole idea of the so I wouldn't call it a DAT per se. It's kind of gotten a bit of a mixed reputation, the name.
Yeah.
But the point is still that you want exposure to this new market, right? And our vision is that basically the utility tokens are kind of like basically public stocks, and Bitcoin is kind of like gold. And that's why we believe tokens broadly outside of Bitcoin are collectively going to be larger than Bitcoin, which it is not right now, because how do we enter and experience the world of crypto? We do it through an altcoin of some form, or through gas fees, or through gaming, right? And Bitcoin itself basically is kind of where we save our crypto, just how we treat gold and the stock market.
Give me a timeline. How long is it going to take for the retail user who has not experimented with crypto yet to talk to an AI agent and say, I want to do this. Maybe it's powered by crypto. Like, when is that next wave of retail
Next
coming?
12, 18 months.
That's very soon.
It is very soon. But I mean, think about what happened with the AI adoption just on things like ChatGPT. And the problem about OpenAI is that now they're selling you advertising. So they want you to go to the website, right? And Google will want the same thing. However, there's a new industry that's evolving. Again, OpenClaw kind of opened that for the imagination, but right now it's just still in the realm of geeks. Maltbook, it's basically 99% agents run by 1% humans, so it's still sort of Wizard of Oz-ish. However, eventually, and I think it's going to happen very fast, when the AI agent goes into your home and does stuff, even just over email, the magic happens. I mean, it's handling schedules for my children. It's basically able to sort of put sort of a calendar entries. It has a wallet, so it can trade some NFTs if it wants to. Right? It's so much easier. It's a kind of interface that my mom can use, and it's something that we'll feel much more comfortable with. So I think it's going to happen very, very fast.
Yeah, we gotta let you go. But I was taking a stroll on the showroom floor earlier, and I saw you maybe operating a robot.
Yeah, it was real steel, for real.
Yeah,
exactly.
Jeff Wilser. Can you tell us about what was going on over there?
Yeah, no, it was awesome. I mean, basically, we had an AI robot fight. I was using a controller that looked like it was a hacked Wii interface, and we're basically just fighting with robots. And again, 10 years ago, people would have thought that it was kind of science fiction, and here it is. The fascinating thing is, it was a lot of fun. Fortunately, I did win with a knockout blow at the end, but it's a very non-violent way of boxing. I know in crypto, some people like to go have their fight nights and have bruised eyes and whatever. I prefer not to do that. I think I prefer the robot basically doing the work for me.
All right, yeah, congratulations on your win, and thanks for joining us at the desk.
Thank you for having me.
Thanks, yeah.
All right, that was Animoca Brands co-founder and executive chairman Yat Siu. Let's head on over to social media now and take a look at how attendees are experiencing Consensus Hong Kong. All right, here we have some photos of booths, and I can't see them anymore. Oh, here we go. All right, Consensus Hong Kong is high quality. I would agree with that. I've taken a walk around, taken a look at the booths. It's been really high quality booths, high quality conversations that we've been having. Let's see. Doors are officially open to the EZA Consensus Hackathon. Jackie, have you gone down to see the hackathon folks?
No, I haven't, but I can go after this.
Yeah, you can go back. You can definitely go after this and report back. We're going to talk to the hackathon winners tomorrow, so stay tuned to our programming. We'll give you an inside look of what's going on over there tomorrow. And standing room only at the Bit Robot Network boxing match. We were just talking about that with Yat Siu. So lots of fun happening here at Consensus Hong Kong. Jackie, thank you very much for joining me. It was so much fun co-hosting with you.
Yes, thank you for having me.
We got to check that prediction market. Maybe you'll just come back on CoinDesk all the time now.
Yeah, I know the answer to that one. All right, well, thank you so much for having me.
Of course, thanks for being here. Jackie's going to be back tomorrow to record Crypto in America from the CoinDesk Live desk at 12:30 p.m. local time.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
Welcome back to CoinDesk Live from Consensus Hong Kong. We are bringing you conversations with some of the biggest names here at the event and highlights from the stages and showroom floor. Our next guest has been instrumental in bridging the gap between decentralized tech and the TradFi powerhouses in the Asia region. Joining me now is Solana Foundation's head of APAC, Lu Yin. Hi, Lu.
How are you doing? Thanks for having me.
Of course, thanks for being here. I'm kind of chained to the desk, so I've been asking all of our guests how they've been experiencing the conference, and I'm going to start with you the exact same way. What have you been up to? What have you been seeing?
It's been great. I mean, look around. It's such a vibrant community. So we've been working with Consensus. So we actually have Solana Accelerate down the street. And so very excited to be part of this community. And just walking around, you can still definitely feel the energy. And obviously, Hong Kong has always welcomed us with open arms. So very excited to be here.
Solana Accelerate has more than 2,000 builders.
3,000.
More than 3,000
Yes.
builders. The numbers increased since I checked. More than 100 fintech companies, more than 50 startups, more than 20 policymakers in attendance. Talk to us a little bit about Solana Accelerate. What do you hope the event is able to bring to Hong Kong?
Absolutely. So from our perspective, we wanted an opportunity to showcase the Solana ecosystem. I think what sets Solana ecosystem apart is that we're not just traditional finance individuals, we're not just startup builders, we're not just policymakers, we're not just users. We're a combination of everything. We truly believe that having a robust ecosystem, you need to have multiple participants, multiple stakeholders. And so that's the kind of, I would say, overall ecosystem and the general theme and genre we're trying to push. Yeah.
And specifically, I mean, given your role as head of APAC, how is Solana looking at the region?
Yeah, absolutely. I think what makes Asia unique is the fact that there is jurisdictional level differences across the different countries, cultural differences as well. So for Asia, you can't really have a one strategy that kind of overall maps across this whole region. So a lot of time I spend is to face off with regulators, financial institutions, payment companies, big corporations, but mostly almost at like a country by country level.
Talk to us a little bit about the regulatory conversation. It, of course, dominates the headlines in the United States. I've heard here at the desk today that because Hong Kong is a little bit smaller, it's a little bit easier to navigate regulation. Regulation moves a little bit quicker. But of course, there are multiple different countries in this region.
Yes.
Can create some kind of regulatory fragmentation. Talk to us about how you're working with regulators and how you're viewing regulations so that Solana can continue to build and innovate.
Absolutely. I think at a fundamental level, the US side is still kind of taking the lead. And I think a lot of different countries within Asia are a close follow. Right? What they want to do is kind of learn from the best set of practices that's available within the framework set by the US regulators, and then adapt it, localize it for their population, for their users, for their financial infrastructure, which I do quite think is prudent, right? To be able to manage your needs and the trade-offs that they have to make. So some of the things that we typically talk with regulators on are usually across three things. The first one is just overall education. Many regulators want to see what other institutions, what other central banks are doing overseas. Number two, they want to have a little bit of clarity in terms of the rules and regulations and how the thought process behind setting those. And the last thing in terms of it is kind of more like execution, monitoring. A lot of that is related to technology. And we kind of partner with them in terms of figuring out what type of tools they need, what type of third-party tools, in-house built tools that might really facilitate kind of across those three different segments.
We've had a few conversations here at the desk today that's highlighted, institutional interest in the region, but they've also highlighted the fact that retail traders, retail investors are seemingly more active in the Asian region than in the West. What is the Solana Foundation's focus on specifically here? Is it more on the institutional side? Is it more on the retail side? Or is it really just kind of everything for everyone?
Yes, and we do think that across the different segments, we treat them, they're all important to us. But for example, as you mentioned on the retail side, what we really do care about is, are we bringing the best products available to the users? And what I truly mean by that is not just trading products, but are we bringing the best payment products that will bring real value to their day-to-day lives? Are we bringing real-world assets, tokenized money market funds that are giving them access to yield that are stable, secure, regulated? So our ability to bring a whole spectrum wide of different products for the short-term duration, medium-term duration, and long-term tenure products is very, very important to us. What we want to do is increase the ability for different users to access these type of services. And we kind of broadly term this as called internet capital markets.
Mm-hmm. And to develop these products, you obviously need to attract the builders,
yes.
right? I know that is one of the goals of Solana Accelerate, like you said, more than 3,000 builders in attendance. Talk to us about how, in such a competitive landscape, so many layer ones popping up, all trying to attract the best developers and builders, how you're thinking about that, how you're attracting the best ones into your ecosystem.
Yeah, absolutely. So I've spent a little bit of time in Silicon Valley as well, but we also have a very exciting and very strong developer relationships teams. I think a lot of it is kind of meeting the developers where they are, right? Number one, you do need to have a foundational product, which is the blockchain that's usable, stable, fast, cheap, so they can actually have the creativity to build useful products on top of it. In addition to that, it will be education, right? Teach them about our languages, teach them about potentially building certain middleware or API access, different types of tools, platforms, introducing them to the already built ecosystem partners such as DEXs, other DeFi protocols like Borrowland as well, showing them that whole broad range of tools that are accessible really kind of helps them fast track in getting into the Solana ecosystem and getting them building right away.
Now, I got to ask you, over in the US, so many folks are calling Solana the infrastructure that's going to power Wall Street. One of the people who is saying that is Anthony Scaramucci. He's going to be on the desk later today.
Yes.
Talk to me about how that narrative translates in this region.
To us, again, kind of going back to our North Star, it's called internet capital markets. And what we see is that the technology and the products available to Wall Street shouldn't be limited to just New York or California or to the United States. Why APAC is so important is because our goal, and we believe that our technology and our ecosystem and our partners should be able to leverage this blockchain technology to bring those products in a compliant, regulatory, safe manner to the global audience. Right? So in addition to just bringing Wall Street products to Asia, we're also working with Asian companies, issuers as well, to also bring some of their products overseas as well.
Looking forward to the rest of 2026, talk to me about the one or two big unlocks on your roadmap that you're looking forward to.
Yeah, definitely from the product side, Firedance is top of mind. So we're very, very excited kind of about the progress, and we'll continue to look forward to kind of their development and their timelines. I think more so than that, I think externally, we're definitely looking forward to updates from the regulatory side. I think a lot of the unlocks, and I think a lot of financial institutions, developers are also waiting on kind of the clarity. So once that happens, I think you'll see quite a big momentum and uptake in terms of usage, developers, builders.
Lou, thank you so much for joining me at the desk. It was a pleasure having you on the show.
Thank you very much.
That was Lou Yin, head of APAC at the Solana Foundation.
Sam, where are we going?
We're going to Consensus.
What road are we taking?
Where we're going, we don't need roads.
Just Miami.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
Welcome back to CoinDesk Live at Consensus, presented by Hex Trust, the leader in digital asset solutions. Our next guest is the president and general manager of crypto at Robinhood, Johan Krupat. Hey!
Good to see you again. How are you?
Yes, no, I'm doing well. I think you're doing good too. You had a big announcement this morning.
Yeah, we're really excited about it. We announced the launch of our public testnet, and so developer can start contributing on the Robinhood chain, and we really are focusing on financial assets coming into the chain. So really excited about it. And we also announced a hackathon that will be available in multiple cities across the globe with $1 million in prize.
Wow, there's a lot to unpack there now. So for our audience watching at home, we hear Robinhood chain public testnet. What does that mean? What can they take away from it? What kind of builders are you looking to attract? What kind of products do you want to build to offer the people who are watching?
Yeah, we want to focus really on the trading of assets, of financial assets. So perpetuals, DEX, lending protocol, all these kind of things. And we're already associated with a lot of partners, including Chainlink, Chainalysis, TRM, and way more. And so our goal is really to have the foundation that people can start building on. And slowly we'll be able to help them get validated by Robinhood, make sure that it works with all our system, and soon, they can participate to the hackathon as well.
Now, the conversation here at the desk has been largely institutional. I want to say a lot of the conversations we've been having have been about institutional adoption. You're so focused on retail, and so I'd love to just kind of unpack retail sentiment right now. What are you hearing from users on Robinhood? Yeah, what is retail interested in right now?
Yeah, I mean, we saw, with the price action, a lot of activity recently where the retail is not just, moving away from crypto. We actually see them buying the dip. We see them diversifying their portfolio to the long tail of assets. So we still see a lot of interest. We also see a lot of people engaging with staking, with transfer to their self-custody wallet and doing more things on DeFi. So, I think for us, it's just another cycle where now we also have institution coming in. We also see a lot of utility being developed with tokenization of assets. So overall, we still see retail excited.
It sounds like retail is becoming more advanced when it comes to crypto products.
Absolutely. I think, we see them being savvy. We see them looking at using stablecoin when they can, going to lending protocol. Retail want to make sure that they participate to the economy.
Talk to me about this $1 million in prize money. How are you looking to distribute it? What do I got to do? If I'm a builder, if I'm a developer, what do I got to do to get that money?
Yeah, I mean, right now our public documentation is available, so you can start actually using it. You can start developing. It's based on the Arbitrum stack, so overall, it should be pretty quick for a lot of developers to start integrating it. And then you can contribute to the hackathon. We'll be there, the team, Robinhood will be there. I will be there myself in a few of them, and we'll look at the best application, and we'll see the one that deserves the most of the prize, and we'll distribute it.
You said it's going to be in a few different markets. Can you tell us what markets?
We have different cities. They are not all selected, but New York, London, Singapore are already in the running.
I imagine when I hear you talking that while this is a big announcement, it is one step towards a larger future that you envision. Talk to me a little bit about what that future is that Robinhood envisions when it comes to the financialization of things and how people are going to be interacting with all kinds of different asset classes.
Yeah, we think the future is around tokenization. We think all the traditional assets will be on-chain at some point. We think that, the blockchain brings 24/7 instant settlement, fractionalization by default. And so we focused a lot on US equities. We started with 200 of them. Now we have 2,000 of them. And we think we can actually bring the tokenization to a lot more type of assets, including private equity, real estate, arts. And we want all of that to happen on the Robinhood chain, obviously, but also in all the applications that we connect to.
Now, I know you just ran over here. You were on stage with Bullish CEO Tom Farley talking about just this, Robinhood's evolution. For those folks who are watching this program from home who are not able to watch that talk, what are a few insights that came out of that conversation?
Well, I think Tom is a terrific CEO. I think Bullish has been doing very well. But what we are excited about is really the connection between the traditional finance and also crypto, and we have an application where we have all these type of asset classes on the app, and so you can easily move between the two. And really, I think a lot of the lesson that we learned from traditional finance, the fact that you cannot trade on weekends, the fact that it still takes one business day to settle, all of these things show that we need a new world, and we think blockchain is a solution for that.
Now we're sitting here in Hong Kong. How are you looking at this region? What are the types of conversations you're having when it comes to retail trading, when it comes to developing these products that are going to bring us to the future of finance? Talk to us a little bit about those.
Yeah, Asia is very important for us. We acquired an exchange 9 months ago called Bitstamp that has a license in Singapore. And so we do a lot of work with institutions, family offices, hedge funds in the region. And so our goal for us is to bring a lot of this platform to start using Bitstamp as an exchange, as a source of liquidity, and as a platform. And we also acquired 2 companies in Indonesia for crypto and securities trading. So, slowly you will see Robinhood becoming bigger in Asia.
Tell me a little bit more about that acquisition strategy. Why is the region so important to you? I mean, if we broaden out of just the business, like, what's so interesting about the audience in this region for you to go in and do these acquisitions and bring these products to these people?
Yeah, I think, what we see is that there's a lot of interest for crypto in Asia. So for example, in Indonesia, there is already 13 million customers trading and holding crypto. And so we think it's a market that we can actually bring a lot of the technology that we built in the US, where we have best-in-class execution, we offer one of the lowest costs in average. And so we think that if we're able to do that also at the scale of this region, we'll be able to be competitive and bring more value to the customer.
All right, Johan, like I've said, we're at Consensus Hong Kong. We are within the walls of the conference. But what are you going to get up to when you leave the showroom floor? Are you going to any of the side events? Are you going to be going to Happy Valley to bet on any horses? What are you getting up to?
Well, I'm actually flying to Indonesia right after this to visit the company we just acquired.
All right. Well, a lot of folks who have been here are taking advantage of the fact that they're in the region and are flying to different countries to have meetings and visit companies that they are partnering with or have acquired. So you're not alone in that. Johan, thank you so much for joining me at the desk. It was a pleasure having this conversation.
Thanks for having me.
All right, that was Johan Kerbrat, Senior VP and GM of Crypto at Robinhood. We're going to take a break. We'll be right back.
History doesn't just happen. It's built by the bold, the brave, and the bullish. Consensus Miami is where crypto, culture, and trillions in capital converge. And ideas that fuel institutional scale are sparked. A place for those who refuse to settle for the status quo. The builders reprogramming the future of finance through every deal and decision. Breaking boundaries begins with being there. Experience the epicenter.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
Welcome back to CoinDesk Live at Consensus Hong Kong. I'm joined now by Blockspace Media co-founder Will Foxley, who is going to be my co-host for a few segments. One of my favorite people. We're also joined by 2 of my other favorite people, CoinDesk's Ayon Ashraf and Omkar Gobole. Hello, everyone.
Hey.
Will?
How's it going?
Glad to be here.
I got a really nice intro. I mean, you should spice them up too. These guys are all-stars.
No, these 2 are all-stars, and we're going to hear about the all-star team that's been going all around Consensus. Ayon, you were here this morning.
Yes.
You had some goals, some aspirations to talk to people and find out what's going on in the markets. Did you get some answers?
No.
Okay.
And nobody knows.
All right.
Yeah.
Okay,
That's about
Omkar, you have a chance to redeem Ayon here.
Yeah.
Do you have answers?
No.
No. Okay. Okay. Well, there's still time. We still have a day and a half for our journalists to roam the floor, talk to folks, figure out what's going on in the markets, who's selling, who's not selling. You don't have answers there, but I'm sure you've been talking to people. Talk to me a little bit about the conversations you've been having so far today.
Yeah, I mean, the biggest conversation ties to what happened in the market last week. Like, everybody wants to know the answers, like, why did we fall? Who sold? Who got capitulated? There are rumors about some hedge fund blowing up. So yeah, that's the main thing. And then, but I'll say this: despite all the market swoon and the downtrend, the mood remains still optimistic because there's a lot happening in terms of technology, and that too, connected to the main street and not just the, Wall Street. It's not just about trading, but it's about stable coins being used, to issue traditional instruments like commercial paper and use of stable coins for day-to-day payments and stuff like that. So, these things are not really having like directly connected to the market cap. So if you're focused on just market cap, you're going to feel disappointed. If you look beyond that, there's a lot of reasons to be optimistic.
Actually, I have good anecdotes of that. I have talked to 3 people now about this. How's the technology versus market happening, right? Everybody said, market's gonna market. And everyone else who's thinking about the technology, they're gonna continue to do it. In fact, the institutionals, the big guys, the banks, they're taking markets out of the equation. They're going with infrastructure of the technology, which is blockchain, how they tokenize things and their funds, and how they implement that into their everyday finance.
Market's gonna market.
That's it.
Couldn't have said it better, Aeon. That's really similar to the conversations we've been having here at the desk too. Everyone's really focused on infrastructure building. I think, like I said earlier, Aeon, when you were on the program, finding real problems that people have, that institutions have, and creating solutions for them, not focused so much on price go up. Will, I know you arrived in Hong Kong last night.
I did.
What have you been up to?
A lot of sleeping, honestly.
Okay.
A lot of sleeping. A 16-hour flight from JFK, but we made it in time for an awesome 2-day event here in Hong Kong. Mostly people have been talking about gold for me. I've been circling around. We had a Bitcoin meetup over at the meetup section. They gracefully gave me the Bitcoin meetup, and I appreciated that from the Consensus folks. And we had some people show up, and they decided not to talk about digital gold, but just talk about gold itself. And I thought that was a little rude, but we got past it. And we
have you seen how many replica golds out there?
Yeah. It is all over the place.
Yeah, exactly.
There is a company called, was it the Gold Dollar or something, something like that, floating around here.
Guys, are you talking about that stable coin that's linked to gold?
I'm not sure. I'm not sure what it is.
I think it is a stable coin that's linked to gold.
It very well could be.
It's issued by Kyrgyzstan, I think.
But I think it tells you a little bit about the market that Bitcoin is so kicked in the pants right now that we're talking about gold at a crypto conference, that people are talking about tokenizing gold, trading on chain. They're talking about going long gold. I think even this blow up story with the mythical Hong Kong exchange that possibly blew up, or hedge fund that possibly blew up, is tied back to the silver gold trade.
Absolutely.
And so even that narrative of why did Bitcoin go down is because of a different market that's adjacent to it that a lot of people thought would be actually helping Bitcoin go up. If gold is going to go up to 5K an ounce, why is Bitcoin not going up?
Yeah.
We have a weakening dollar. We have strong gold, but we have weakening Bitcoin. It doesn't make a lot of sense. So I hope you guys can get to the bottom of it by tomorrow afternoon.
Yeah, I mean, look, that was a theory up until now. When gold was rallying, everybody said that once the rally stops, the money is going to rotate into crypto. But that's not happening so far. So let's see what happens.
Yeah.
Aeon, I think I brought this up maybe yesterday we were talking, or earlier on the show. And Omkar, I want to hear your perspective here. Where is retail? I've been hearing folks say that retail's not really interested in alts, not really interested in memes, not even really interested in Bitcoin Ether anymore. Now that U.S. equities are being tokenized, Asian retail traders are more interested in trading those. Curious to hear what you've been hearing.
Look, it's pretty simple. The answer is, the traditional assets have been delivering so high returns. There's very less incentive to venture out into a space that you don't really understand. When it comes to Bitcoin, it's pretty simple. It's marketed as a digital gold. So people might be tempted to, diversify into it. But if you look beyond Bitcoin, Ethereum, Solana, other stuff, ZK rollups, etc., for retail investors, they don't understand this stuff. And so when they compared the stuff which is out there, which is so complicated, and then they compare it with stocks, the stocks are delivering returns in excess of 10%, 15%. It's no-brainer that they are going to go to the market that they are understanding. The second reason, I think it's more of the price effect. So the 2025 bull market, it didn't really feel like a bull market. It wasn't like 2017 or 2021 when there was frenzied buying of retail. And one of the reasons is because it's an asset which traded at the $100, 100K per piece. How many assets do trade at that price? Very little. So subconsciously, when you look at a price of an asset, it's 100K per piece, you think, you marvel at it, your eyes roll up, but you say, it's too costly, I'm going to stay away. So that's the reason, one of the reasons why, the bull market didn't feel like a bull market. And it's my opinion that as the price comes down, maybe it goes down to 60K or further 50K, those people who, sitting on the fence thinking that this is way too pricier, now they are going to think, okay, this asset went to 100K, was steady there for months, now it's trading at a 50% discount, I need to go in. So that's when most probably you're going to see a lot of retail come in.
There was an interesting fact that one of my banking buddies told me that, you're talking about that gold, silver trading. The way gold traded, it seemed more institutional, like, central banks, maybe big guys coming in and buying it. But the way silver traded is exactly what, going back to the fact that it was cheaper in terms of dollar amount. Like, you look at a $70 versus $5,000, you want to go, as a retail, you want to go for $70, you want to trade the hell out of it because that's where you're going to make the money. That's where numbers go up, right? And that's why you saw silver go up, what was it? Can't remember, it was 130% and then come down 40%. And it's all the retail trading, which goes back to what is that retail marvels at 100K Bitcoin, but they're going to go for the meme coins.
Well, what's it going to take? What's it going to take to get retail back?
Another part on top of that is just the sheer amount of L1 tokens that are out there. I saw some fact about CoinMarketCap tracks around 25 million different tokens at this point. So if you're retail, there might be more tokens than there are retail participants in some markets. It's just like hard to grok how many tokens you need to buy. If you're a retail enthusiast, do you just buy the top 100? Do you buy the CoinDesk 5 indice or whatnot? Right. What do you purchase? And for a lot of people, I think you purchase Bitcoin, ETH, Solana, and you probably stop there and you're thinking, too many other tokens to purchase. I'm just going to wait on the sidelines. And we've had enough market history at this point with cycles to know that a lot of these names will be rotated out very quickly. Yep. Most retail, if they participated in at least 2 cycles, which a lot of folks have at this point, 2021, 2024, they're probably aware that a lot of these tokens that they purchased last 2 cycles didn't really hold up. We've only had a handful. Keep in that top 5. Even something like ADA, Cardano, it's always been in that top 20, top 10. It's had a pretty spectacular decline in the last few weeks, and it's done that both cycles. So there's going to be less of a bid, in my opinion, into something that, yes, it can stay in a top 10, but it's not going to deliver like the outsized returns people are thinking about. So I think it just comes back to Bitcoin. That denomination dollar part is probably a huge part of this. And then I think you also have to look at just like the structure of how like IBIT or a different institutional purchased option is out there. Yeah. And you want to think like, oh, if it's in a portfolio, I can sell that pretty easily in a 401k now. I don't really need to hold on to it if it's going down. So I think we're seeing a little bit of that too.
I think we're also seeing like the mainstream figureheads who retail can relate to, who they recognize. I had Kevin O'Leary on our Markets Outlook show recently. He said he sold all 27 of his crypto positions and is just holding Bitcoin and ETH because he thinks the rest are all garbage. He didn't say garbage. He said something much worse. And so I think there's a lot going on when people are looking for information. They see these folks who they recognize and they hear things like that, and it makes them want to stay on the sidelines.
I do want to say one thing, though, is that I think retail, it's in my opinion, it's anecdotal because I've seen it in my WhatsApp groups, is that they're going for easier trades, which is prediction markets.
I'm so sick and tired of talking about prediction markets.
It is true. It's true. That's I mean, it's not true in a factual way, but it's true from what I'm seeing.
This is what I have a question for you guys. I asked a few of our guests this. Prediction market's really hot right now. Everyone's talking about prediction markets, the financialization of everything. You can bet on anything. We could probably spin one up right now, do something on air, make a little bit of money. Do you think they're sustainable? Do you think people really want to hop on a prediction market and bet on every single thing in their day and their lives?
I would say this: as long as the supply of prediction markets was limited, there was excitement. What's happening now is like every other firm is venturing out into that. So it goes back to what Will said about there are too many altcoins to invest into. It's the same thing. The more the number of prediction markets you have, I think eventually it's going to lead to sort of exhaustion. and they'll lose the interest.
But also one part of it, a regulation part of it, because it is still very murky in what's allowed, what's not allowed. For example, I'm from Canada, and you cannot bet on prediction markets, right? In France, you cannot. So that part, once that gets cleared up, or that does not get cleared up, that will dictate where prediction market's going to go.
I think there's an underlying part of prediction markets people aren't thinking about either. It's not just like, hey, I'm going to trade the Super Bowl, or I'm going to trade, if Trump is going to do this thing in a speech or whatnot. There's underlying use cases for prediction markets that are a lot more boring and a lot more suitable long term. One thing that we've been seeing is people onboarding for weather contracts. Yes. So if you're a farmer out there and you don't have a way of hedging the growth of your crop over the next year, there could be a prediction market for it this time next year that enables you to go on chain and go on board yourself to an actual market. It's a little bit more intuitive and easier to understand than going to Chicago and finding like a traditional commodities exchange that, frankly, a lot of people don't have the sophistication for. And if you're trying to run your normal business, you're not going to have time to do that. Just a yes/no on Kalshi or Polymarket makes a lot more sense. I do think we see those build up, which maybe that's a little more interesting to you because
no,
it's like
it
a little more bread and butter.
Yeah,
right?
that's way. Yeah. That's I love the way that you laid that out and the way you're thinking about it. And it sounds like maybe there's a consolidation of prediction markets in the future, and it becomes something that's embedded into apps we use every day, and it's less of this. A new prediction market popping up everywhere.
I could add something here. Like some of the contracts in prediction markets are really good in a sense that they are democratizing the strategies that are otherwise, only limited to institutions. For example, if you want to bet on volatility, it's very complicated. You need to understand the options and futures and all sorts of dynamics. But if you list a contract on volatility, let's say whether the Bitcoin volatility will go above 100%, yes or no, it simplifies the whole process. So that way it's really helpful. But at the same time, there are some bets out there which is kind of, you bet on what the Bitcoin's price or Dogecoin's price would be over the next 15 minutes. I would say that's sucking away capital from the productive sectors of the market.
Hey, listen, people love to gamble. And if you give them the product that is easy to gamble, they're going to do it.
You know where I'll be gambling tonight? Happy Valley. Are you guys going to be at the racetrack?
The racetrack? I've heard rumors of it.
Okay. Seems like the three of you are not going to be at Happy Valley.
I might. I don't know.
Anyways.
Depends on the alcohol.
Aeon, Aukar, thank you very much for joining and sharing those insights. As always, it is a pleasure having you on the program. We will see you around later. Will, you're sticking right here with us. We are going to take a quick break. When we come back, the mooch is in the building.
The full potential of your digital assets with Hex Trust, the leading digital asset financial institution, trusted by over 500 institutional clients worldwide, licensed across key jurisdictions. Hex Trust, the leader in digital asset solutions.
the halls of Goldman Sachs to the White House and now to the front lines of crypto, he's one of the most candid voices in the industry. Joining us now is the founder of Skybridge Capital, a global alternative asset firm, and the founder and chairman of SALT, which partnered with Consensus for our institutional summit this year, Anthony Scaramucci. Welcome back to the show.
Oh, you're starting out nice. You're being very nice to me, Jen.
I am always nice to you.
You are.
Not nice to you at one point?
No, once in a while. During the FTX thing, we were going at it a little bit.
I know, but I feel like we've repaired our relationship.
No, I didn't mind it. I didn't mind it. I had to face the music. It was okay.
Put on that journalism cap on, Jen. We love that.
I know you got to do that sometimes.
It's all good.
Right? You
We're still here.
I just mentioned that Consensus partnered with SALT for the institutional summit yesterday. It was closed doors, so we didn't get to see what went on there. Can you give us a little bit of a
listen, first
inside
of all,
look?
you guys do an amazing job, so congratulations. Congratulations to Tom Farley, the whole team. We hosted alongside of you guys yesterday at the Grand Hyatt it was like a institutional asset allocator, family offices. We had some of the DATs there. We had a lot of big hedge fund managers there. I thought it was a great event. I'd love to do it again. And we're going to Miami next, right? So maybe we'll be able to do something in Miami.
We are going to Miami next.
Yeah, Miami in May, big time. Got a way bigger convention center there too as well. So I'm really excited for the North American version of Consensus. In terms of people in the room, what was the sentiment? Because we had Omkar and Aon talking a second ago about how institutions are not focused on the markets right now. Markets, not great, but they're really focused on the infrastructure part of this. Did you see that?
Yeah, listen, I mean, the market, we're in a bear market. The question is, how long is the bear market going to last? And you're always going to have that group of naysayers where it's over, and they'll be chanting that to people. But I think we are learning about the demography of crypto, because if you have a currency debasement going on, you would have expected Bitcoin to do much better. But it turns out that 60-year-old people, and I'm over 60, but 60-year-old people have a tendency to buy gold and silver. And guess what? 60-year-old people are running most of the money at these big institutions around the world and the sovereign wealth funds and things like that. And so they left Bitcoin and other assets that we would like, and perhaps younger demographies like. And I think that's the big issue right now. That's the tension in the marketplace. And I predict, like most bear markets, it will end when we least expect it, but the RSI is below 30. The greed index on a 0 to 100 is at a 5 in terms of where it is as it relates to fear. And there were a lot of bearish people in that room yesterday. So I take that as a good sign. Having lived through 9 bear markets, when people are telling me they're bearish, they're typically talking their book, and that means that they're underinvested.
I was just talking about an interview I did recently with Kevin O'Leary. He said he sold 27 of his crypto positions. He's only holding Bitcoin and ETH. Solana came up. I said that you're very bullish on Solana. I know the two of you are friends. He said, you know what he thinks about that. Can you give me a response?
Well, I mean, I don't want to speak for Kevin, but I do love Kevin, and Kevin and I go back a long ways, but I think that's related to the Sam Bankman-Fried stuff. So I think Kevin felt badly burned by Sam. Sam owned a tremendous amount of Solana. And, I see it differently. Maybe I'm too short to see the glass anything other than half full. Like when I'm looking at the glass, it looks full to me. And I look at Solana as an engine that powered through the FTX crisis. I think he felt burnt by the whole situation. So it's sort of a hot stove he doesn't want to touch twice.
Well, Solana has had an incredible evolution since the FTX debacle. I think it was trading at $8 at one point. It has really changed the narrative. It has proved that it could stay, it could build.
So we bought it at 22. On it, it was down from like 200 and change. We bought it at 22, and it didn't stop. It kept falling, and we ended up with it at 8. And we looked at each other and said, all right, we're going to ride this thing to 0. I didn't think it was going to 0, and if you went to Solana Accelerate, you can see why it's not going to 0. And so we held on, and I think they've generally done a good job. Is it down from its high? But remember, the industry got impaired by the Trump coins. People don't like talking about it because they're nervous about the administration, but the truth be told, the Trump coin sucked a lot of liquidity out of that space. And if you really look at the bear market, in my mind, the bear market really started last January. It didn't really impact Bitcoin until October, but go take a look at the coins that are not Bitcoin, or as you guys say, the altcoins. They haven't done well since last January. So to me, that's a positive because bear markets typically last about 12 to 18 months. So we're more than 2/3 the way through the bear market.
Oh, I like that. 2/3 of the way through.
I love that.
So we're right there, right?
Right there.
Sunrise is almost.
Yeah,
almost
only
here.
good things ahead.
Listen, like the Buddha says, things change, right? It looks miserable right now, but it's going to change.
So for Solana, a lot of the meme coins were created on top of Solana ecosystem. When you're talking to institutions, does that grok with them? Are they thinking about a lot of the meme cycles that can be pretty destructive come from that?
Again, there's different types of people at that level, right? The CTOs look at it and say, well, weirdly, the meme coins have fortified the case to use Solana for real-world assets because just take a look at the Trump coin activity prior to the inauguration and look at the volume that Solana was handling and look at the transaction speeds on Solana during that big throughput coming through the pipe of Solana. And so weirdly, you would say, well, the meme coins should probably hurt this because meme coins are garbage, et cetera. But if you're a technologist and you're looking at Solana, you're saying, wow, Solana can handle a lot of activity. And it's cheap, it's easy to use. Developers find it user-friendly. And I'll channel some, so I've channeled Kevin O'Leary, I'll channel some Anatoly here as well. Solana is built without a lot of innovation. He took the best parts of what he understood about computer programming and cryptographic blockchain and put it in Solana. And so what was he searching for? Speed, durability, very fast finality, and something that a developer could look at and say, this is easy for me to use. And so for all those things, I think Solana has met those tests. And Solana, to me, not being Bitcoin, is an anti-fragile layer one that I think is going to get adopted. I'm not saying it's going to be the only thing that gets adopted, but guys like Larry Fink, don't go by me, go by Tom Farley, go the former president of the New York Stock Exchange. Yeah. That world is changing. And just to really date myself, I was T+5 when I was your age. So if you were with me at Goldman Sachs in 1989, and you bought a security, it went through 7 different agencies before it got to your account, including the Depository Trust Corporation, and it took 5 days. Okay, so you got the trade here, but you didn't see it in your account for a week. Today we're T+1, and you guys know on Solana we could be an hour. We could probably be less than that, but of course you're going to have some regulatory oversight that's going to slow things down.
You mentioned that the Trump meme coins didn't really do much for the industry, but I want to talk about regulation. I was at the Ondo Summit recently. Patrick Witt said he's very optimistic that legislation is going to pass in the United States. Patrick McHenry was there. He said maybe by Memorial Day. Do you think that that is possible given the back and forth that's been going on when it comes to ethics?
So I do think it's possible because I think that when you look at Washington, right? Washington is very different from crypto. It's very different from Wall Street. And I've got my 11-day PhD, so I can tell you how it works. What ends up happening there is there's varied interests. And so you have to measure everybody's interest. You know, on Wall Street, we all like money. In crypto, we all like money, so we know the interest, right? We're all on the green team. But in Washington, there's blue, red, purple teams. There's all different types of stuff. And if you sit down and you just look at everybody's interest, the White House, the industry, the banking community, the Democrats, the Republicans in the House and Senate, they all have a mutuality of interest to get it passed. Now, the bad news for the industry, it's not going to be what we want. Okay, generally we're libertarians and we want to be left alone, and Washington doesn't know how to do that. And the American Banking Association has a lot of draw, a lot of swag with the Congress. And so they're going to push back on some of the competition that the crypto industry wants to give them. And that's Washington. That's the way it works. That's why they say you don't want to see the sausage being made in Washington. You just want the final product, right? It's a nasty process. And so I'll predict that the legislation gets done. It will not be as good as we would like it to be. But I would tell you that progress is more important than perfection. In fact, the enemy of progress is perfection. And I'll just give this quick example, and I did mention it to Tom this morning from the stage. When Gary Gensler was forced, literally by a judge, to approve the cash or spot Bitcoin ETF, he didn't want you to be able to put Bitcoin into it. And so everyone was complaining about it, but we got it done. And now with Paul Atkins, we've been able to make that change. And so that's what we have to hope for with these pieces of legislation that are coming forward, and I think they will pass.
Treasury Secretary Bessent talked about this same issue in front of Congress the other day, and he talked about how he made a kind of sly reference to Coinbase CEO Brian Armstrong and how he's silent behind the scenes, not agreeing with the regulation as it stands. Do you have a message for Brian Armstrong or for anyone else who doesn't seem to think that, doesn't seem to agree with you, that wants perfection beforehand?
First of all, Brian Armstrong doesn't need any messages from me. I think Brian Armstrong's doing pretty well, and I like Brian, and him and I go to a lot of events together. I admire Brian. I admire his position on this. And the truth of the matter is, if you look at the reward system that's in place at Coinbase, he could relent on this, and they would just be fine economically in terms of the way the reward system is going to potentially work in this legislation. So I think it's a tribute to Brian that he's a pretty principled guy and he's anchored towards this idea. Now, if I were talking to the banks and I was going to give them advice, I would say, hey guys, this is going to happen whether you like it or not. Okay, you're the taxi cab industry and Uber's coming into town. So you can either fix what's going wrong in the taxi cab industry or Uber's going to eat your lunch. Okay, so for me, it's more advice to the banking executives than to Brian.
Totally.
But I think you're making the point, Brian, relax, get the deal done, and let's move forward. And I think we're generally going to go in that direction, likely before Memorial Day,
You said that you think legislation will pass. It might not be the legislation that we want. Does that mean you think that certain elements are going to be left out?
Yeah, I don't know which ones, but I think the yield thing is going to be a big deal for these banks. They're going to push back very hard. And lobbying works in the Congress. Remember, it's all about the money, guys. Okay, these guys want to get reelected, and so because of Citizens United, they get an unlimited stream of money from large corporations, and they generally do what the large corporations or the large industries, big banks, big pharma, big food want. Now, that's a whole other topic, and we're in sore need of structural reform in the legislative system because of this. But that's what's going to happen. And by the way, we need to accept that, and we need to deal with the world the way it is, not the world that we want it to be. We just have to deal with that and see if we can get the best deal possible. I wouldn't wait till after the midterms because the Republicans like crypto more than the Democrats. And if the Democrats take the House, I think it'll be even slower and a longer and heavier lift.
Just staying within the politics and the midterms, I'm curious your thoughts on Fairshake. They've raised a lot of money. There's a lot of posters on Twitter saying, hey, you can't come after us with crypto. We're down because of the Trump meme coins, might be down because of some of the price action. But Fairshake has raised more than anybody else for the pack going into midterms. There's a position of strength with that cash. Mm-hmm. Do you think it's going to hold up going to midterms, or do you think
I do, but don't underestimate the American Banking Association. They've raised a lot of money from the money center banks as well. Unfortunately, we're the David in this game. Okay, they represent Goliath. So I think Fairshake has done a really good job. I think the Sherrod Brown race, where they took an 18-year veteran who was the head of the Senate Banking Committee, knocked him right out of that seat. And guys, it is very hard to dislodge an incumbent. They generally have a 95% reelection rate because they get all the money behind them, and they have an installed base, and they're able to curry favor with the electorate using the system of the government to get themselves reelected. So you have to really applaud Fairshake what they did. And if you ask me, and I did say this in November of 24, I said, hey, crypto turned this election. Helped Donald Trump become president, helped the Republicans win the House and the Senate, and this is one of the reasons why I think this bill is passing.
Yeah.
Because if you talk to Gillibrand, you talk to Schumer, Richie Torres, these are people in my state, they're like, I don't want to go up against Fairshake in the midterm elections. We're better off passing a deal and then turning to Fairshake and say, hey, I supported you guys. Lay off me.
Yeah.
Right? And I think that's the message. And again, when I look at the varying interests, Fairshake is a part of it, and they need to be applauded for the work that they've done.
All right, Anthony, we got to wrap up in just a second, but you know I love a prediction. And you said we're coming up to the end of a
So you didn't like prediction markets.
I don't like prediction markets, but I love a price prediction.
I get them wrong. You see what happens?
I love a price prediction.
On Twitter, I get all these comments that, I get the predictions wrong. I got my last prediction really wrong.
What was your last one?
No, I thought Bitcoin was easily got to 150,000. If you had laid out the macro case, you had laid out everything. I missized the amount of whale selling, and I also, even though I was worried that the Trump meme coins would slow down the regulation, which they did, I still thought they were going to get done in 25, and I got that wrong. And that hurt the market. Yeah. And by the way, listen, guys, you're not dummies. Certain things go on, big trades happen, and then announcements come out and move markets.
Yes.
And so don't kid yourself. A lot of people in Washington knew that this bill wasn't getting passed, and some of that capitulation took place ahead of the rest of us figuring that out.
Yeah. All right, Anthony, end of 2026.
Yeah.
What's the price of Bitcoin?
Well, I'm gonna stick to the 150. I'm gonna stick to that, because I think this thing will grind higher. And I think once that legislation does pass, it's going to open a floodgate of activity in the money center banks in the United States. And remember, that's the real circulatory system for global capitalism. And so this is a small asset class relative to the other asset classes that it should be compared to.
Anthony, it's always a pleasure having you on the show.
Jen,
Thank you so much for joining us.
So easy on me. Am I all right, Jen? I mean, usually you're like a lot rougher on me. Get in a defensive position.
I feel like our relationship is repairing. You haven't done
anything wrong with our relationship.
You haven't done anything.
You're a tough journalist. I've had a hatchet in my forehead on this program.
All right, Anthony. We're going to take a quick break. When we come back, Anthony's going to stick with us, and a special guest joins.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
Guest is a man of many mysteries and even more alpha on paper. He's a former quant analyst at RBS and rates trader at TD Securities, and the man who once managed a $40 billion portfolio as head of global rates at CalPERS. We are now joined by Joy Patak, the Wizard of Soho. Hello.
Hi, how's it going? Thanks for having me, guys.
Yeah, of course. Thanks for being here. How's your consensus been going?
It's been great. Great weather today. I'm happy to be here. A lot of great information, learning a lot, and happy to be chatting with you great guys.
You're going to be on stage talking leverage never died, perps, basis trades, and the return of the degens. Talk to us about what you're gonna talk about. What are some insights that you tell our audience about?
Exactly. I think we're in this new age of leverage, more so than we've ever seen in history, especially in crypto with all the new DEXs that are out. I think there's a lot of knowledge out there that people still need to learn. Everything from risk management to being able to use leverage to advantage. I feel like a lot of times people, kind of don't understand that you can use it in a good way rather than just gambling. And I just want to kind of give that information out, help people, become better traders, and be able to utilize things more than just being a degenerate in crypto.
Anthony, you were at the Institutional Summit yesterday, right? When you think about your institutional partners and you hear the wizard talking about leverage and degens, how do institutions hear this message and take it in? Does he sound like a madman?
Well, first of all, he's a very accomplished guy. He's very successful, so he's definitely not a madman. But I think what you're saying, though, do we have a lot of fuddy-duddies and old-fashioned people in the institutional community? And the short answer to that is yes. So, listen, if you read it was about 2 weeks ago, if you read the article on the tension between Jamie Dimon and Brian Armstrong, about where the world is going and how there's a group of people wanting to hold the world back, of course they're not going to like the Wizard of Soho or me, for that matter, or Brian. But the truth of the matter is he's going to win because he sees the future and he sees the efficacy of the technology. And this happens, guys. Listen, do you think that the horse and carriage owners were in love with the horseless carriage and they were like, yeah, let's bring on the horseless carriage? They had no bid, they had no interest in it. Okay, so he's going to be right, and they're going to be pissed off about it.
Tell us about leverage in the ecosystem. So we have the TradFi world where things are a little bit more opaque, and then we have the on-chain world where we can see what's happening at Aave. We can see when people are looping collateral. We can see when things start to fall apart.
Of course.
Over the last few weeks, as we've seen Bitcoin price and a lot of these other assets collapse, where have we seen in the TradFi world some of that leverage be exposed? Or have we not? And where on chain have we seen it being exposed?
No, for sure. That's a great point. Me personally, I came from TradFi background, and being able to see that difference, especially like even if you go in crypto, like maybe a couple months back, leverage was not the way it's now, and it wasn't on chain the way it's now. The onset of DEXs, like guys like Hyperliquid, Aster, that have completely changed the game. You've gotten institutional type of leverage and exposure to the regular Tom, Dick, and Harry, right? Something that they didn't have, and you can see all of that. Everybody can see it. For example, when I was on my, at RBS or TD or at CalPERS, whatever positions I took on, what leverage took on, nobody knew. Now I can go put a position on, you see multi-billion-dollar leverage positions out, the entire world sees it. And that's part of decentralization, right? You want to be able to see everything. You want to be able to have everything disseminated clearly, have the, even playing field. And that's where, as Anthony was saying, I feel like if you're not part of that new world and you don't accept it and you don't utilize it, I think that's the most important part. There's so much information out there, so much on-chain analytics out there. If you're not taking that in, and if you're just in that mindset that, no, I'm going to stick to my old ways, I think you're going to get left behind by a lot of people out there.
Just follow up on that. So I think like the uninformed mind or the naive mind might think that on-chain analytics gives us the ability to see leverage. So shouldn't there be more tepid risk-taking out there where people aren't going to go leverage long and explode versus TradFi where you can't see everything. You can't see where all the sharks are.
Yeah.
So why are we still hitting these spots where like 10-10 we had so much leverage and then explosion, and then this last week we had so much leverage and explosion? If we have on-chain markets, shouldn't we be a little
so
more...
I think I get what you're saying. So I think there's a couple parts to that, right? So I think one is you're giving, there's all... In TradFi world, you have people, you're coming in with, there's a path to becoming a trader, for example, right? You have to go through a whole program, you have to understand risk management. Here, you just you could say in a way, you're giving like a young kid a loaded gun, right? You can go and put 100x with all your net worth, with no risk management, no guardrails. But there's a learning process in that. There's a process where there's a lot of efficiency that will build up. Right now we're in a world, which is great. Like if you're a trader or investor, you want markets that are not as efficient. You want people to be able to take this, because you can take the other side and have, you can make money. Remember, zero-sum game, right? End of the day. So yes, it's good and bad. You have situation like 10-10 because of it, but also you learn from it. The market grows. The market gets more efficient, less opportunities. But at the same time, it's all part of different building blocks of how leverage is going to turn more and more efficient. But part of that, there'll be hiccups, and then I think that's part of growth. You saw that in TradFi world. There was, there's the Black Fridays, the Black Mondays, the Black Thursdays. You've seen that historically. You're just seeing that in a much more expedited way in crypto, and that's just the world we live in now.
Anthony, if I can follow up with you there. So from your time on Wall Street, how did you see that replicated? Like, was it similar process over the last 30 or some years of seeing Wall Street change and add new innovations in that make it more clear or less clear where leverage is?
Remember, Wall Street's inclination during crashes is to slow things down. Crypto's inclination is to accelerate things, and so don't underestimate that. And remember, Wall Street, we're going to open the market at 9:30. We're going to close the market at 4 o'clock. Crypto, we're running things 24/7. So to me, it's weird to say this as a former TradeFi person, but this is a safer market. Why is it a safer market? Because if you're a trader and at 9 p.m. on a Sunday, you're out, 9 p.m. on a Saturday, you're out, then you can adjust your brain to that situation. But on Wall Street, it's 4 p.m., the market's closed, and now something bad happens somewhere in the world. you're in a tougher position. You can get out, you find somebody to sell it to, but you don't have a fully liquid market. And remember, when bad things are happening on Wall Street, you've seen pockets of Bitcoin and other big liquid tokens get hit because they don't have any liquidity anywhere else. I'll just make one last point. In 2023, when we had the banking crisis with Silicon Valley Bank, we saw the rise in Bitcoin, and it was really happening over the weekend. So to me, it's a better market. It's a safer market long term, despite the fact that it looks so volatile today.
Yeah. That is a great point. Like, especially, you couldn't hedge yourself, in TradFi. Like, I was a bond trader. And
he's called the Wizard. See, he said it was a great
Wizard,
point.
there you go.
Keep it up. What else were you saying? Go ahead, keep going.
No, that's great. No, I'm just saying, like, it's great that you can hedge yourself in this market. You couldn't do that. Like, if I was on the bond desk and I had a position that I put on Friday, there's no way I can get out of it. The world could be ending.
So you won't put the position on?
Yeah.
See what he just said? So he's not going to put that position on because he can't get out if there's an exogenous risk that happens. And we're in a world right now where there's a lot of anticipation of exogenous risks.
On the flip side, though, it's a less liquid market, and we have, over the weekends, historically, more ups and downs in Bitcoin price on those Fridays, right?
You're right,
so,
for now.
So where do you see that sort of part of the industry growing? Does this require more participants? Does it require more infrastructure?
More liquidity, more participants, clarity. That's why they call it the Clarity Act. You have more regulatory clarity. There'll be better guidelines, and banks will be entered a space.
Yeah.
We will be winning, to use a Charlie Sheen word on this program, we will be winning when you can custody your Bitcoin at a money center bank and even possibly get yield from that bank off of your Bitcoin.
All right, we're going to leave it there. Maybe #winning will be trending on X later.
The Wizard of Winning.
Later
right?
today. There we go. We got the Wizard of Winning at the desk. Thank you both for joining us. We hope you enjoy the rest of your time at Consensus.
Thank you.
Good to be here with you guys.
Thank you so much.
That was Skybridge Capital founder and Salt founder and chairman Anthony Scaramucci and Joy Patak, the Wizard of Soho. We are going to take a quick break. We'll be right back.
Sam, where are we going?
We're going to Consensus.
What road are we taking?
Where we're going, we don't need roads.
Just Miami.
Get the breaking news that moves markets right to your phone. Track your favorite token instantly and dive deep into the latest data. Download the CoinDesk app today.
Welcome back to CoinDesk Live. Our next guest joins from Hex Trust, which offers fully regulated institutional digital asset market services, custody and staking to builders, investors, and service providers. Please welcome Chief Product Officer and Head of Custody, Georgia Pellizzari. Georgia, pleasure to have you on the show.
Thanks for having me.
Yeah, of course. Okay, we've been talking a lot about institutional adoption today. We've been looking forward, hearing some predictions about 2026. But let's look backwards first before we go forwards. Talk to us about the biggest catalyst from your perspective in 2025 when it came to institutional adoption.
Yeah, absolutely. I think 2025 was definitely the year of Bitcoin. So let's with that. So in 2025, we've seen new primitives being launched. Namely, I think the most famous was Babylon Protocol. That actually was the first one that natively, in a primitive way, offered yield on BTC. That really kicked off a really interesting catalyst for institutions, because obviously what typically Bitcoin is a very lazy asset. It just sits and doesn't do anything. And suddenly new ways of actually making useful and usable have come into play. Now, obviously that also came with some question mark around the yield. How sustainable is it? Is it actually something interesting for institutions? And so that was, I would say, definitely the initial one. Then we've had a lot of prep work, in my view, towards what we're going to be seeing in 2026, which, in my view, is extremely exciting, despite the red in the market, which is obviously sad to wake up to. But also, after you're in crypto, you know that that's cyclic, right? So you're going to have downturns, and you need to keep pushing through, and especially in the institutional space, RWA tokenization. I think that's something that 2025 was a lot of build time, and we'll see the results this year. So I'm actually very, very excited, despite the the bumpy first months of the year. But we have plans such as, for example, DTCC tokenizing by mid-year. Hundreds of billions of dollars, right? And they're going to do it in a specific chain. We're going to, a name that probably many have heard so far in the market. But we're actually seeing that sort of manifestation of what people have been talking about actually since 2019. I've been in the space for almost 10 years. 2019 is when people started talking about STOs, security token offerings, which is really tokenization of RWAs. It's just another way of calling it. Obviously, nothing manifested back then, but now I think we're seeing not only tooling, infrastructure, the right market participants, the right service providers such as ourselves with the right licenses, regulators coming in and addressing the gaps in the market slowly and maybe in a fragmented way, but we're getting there. So yeah, I would say that sum is up.
Nasdaq and NYSE made some news earlier last month when they announced that there's some projects that were actually going to start being greenlit into moving into tokenized stocks. How did you guys see that front run, so to speak, here in East Asia, where a lot of these projects have already started quite a while ago? Have you seen that on the infrastructure side or on the exchange side or where else?
Absolutely. Definitely infrastructure side, exchange side. Liquidity is definitely coming. We see that. There is a lot of cautious as well, because still we're talking about monumental changes in the way finance has been run from the beginning of time. There was a really interesting tweet by the CEO of Coinbase stating US markets are actually open only 19% of the time. 19%. In extended hours, 48% of the time. Imagine, and I think the gentleman were talking about it earlier, imagine when the market actually is 24/7. I think we still do not foresee exactly what that will look like in the day-to-day operations. But so I think the Asia is preparing for it. I would say on the Western side, definitely more attention to ETPs, ETFs, I would say, whereas here it's a lot more about infrastructure, and we're definitely seeing movement there.
I know back in December, Hex Trust announced that it's going to issue custody-wrapped XRP, expanding XRP DeFi utility across lots of blockchains. Talk to us about the demand for this product. What were institutions asking for, and what's this going to solve?
Absolutely, absolutely. I'm going to have to go a little bit technical because it's not really obvious what wrapping is and what WXRP is versus XRP. But blockchains are all different. XRP is one of the very OGs, I would say, in the space. It's not built XRPL natively for smart contract interaction or the ability to interact with DeFi applications. So what we do, we are basically taking in as collateral native XRP assets. We're holding in regulated custody, and we issue against it a one-to-one representation that, however, lives in different blockchains. So if you say Solana is the thriving ecosystem for DeFi, and you say, I want to borrow against my XRP, how are you going to do it? Well, you need a representation of that XRP that lives on Solana, and that can basically interact with DeFi application on Solana, against which you can borrow US dollar, run a basis trade. Right, so basically we are the official, basically Ripple-backed issuer. We are now issued on HyperEVM, Ethereum, Optimism, Solana, and we have a roadmap for 2026. And very, very important, WXRP also functions as a sort of integral product with RLUSD, which is a stable coin by Ripple.
In terms of this year, what pieces are still missing to make RWAs or tokenized stocks big? What, if you could have one thing, wave magic wand coming out of consensus, it happens and things start really sparking up, what would you say it is?
I think still a secondary market. So I think from a distribution perspective, it's still clunky, I would say. So we are in active conversations with some, in my view, really, really exciting tokenization commodities such as, for example, nickel wire. If you imagine you want exposure to nickel wire, there is some organization tokenizing it, and now we're waiting for the regulator to approve the exchange to list that asset. Right, so I think we still have a lot of comfort that regulators need to find in order to allow for all the participants in the full flow of funds to be there effectively. Because I would say infrastructure is there, we have the blockchains, we have the custody. Still, I think, the connection between the regulator and all the different other participants.
All right, Georgia, we have to go, but before we let you go, I want to hear about your Consensus Hong Kong experience. HexTrust obviously sponsored our desk. As you're walking around the floor here, what kinds of conversations are you having? What are you hearing?
I would say high quality crowd. I would say still a confirmation that institutional digital asset use cases are really the focus for 2026. 2025, you had, the Monad, you had like still kind of more retail focused launches. I think this year we're not hearing much about it, but rather you're hearing all those guys that are speaking to banks and actually actively paving the way for that real RWA tokenization element. Security. I'm having quite a few healthy conversations about security, and now we make sure that big hacks like that happened in 2025 are not going to happen again. And that goes back to the right rails, the right service providers, security certification, et cetera, et cetera. So good conversation so far.
Georgia, thanks so much for joining us at the desk, and thank you for being a Consensus partner.
Thank you.
That was Georgia Pellizzari, HexTrust Chief Product Officer and Head of Custody. We're going to take a quick break. When we come back, Sam Ewan gives me a break and takes over the lead chair. Stick around.
History doesn't just happen. It's built by the bold, the brave, and the bullish. Consensus Miami is where crypto, culture, and trillions in capital converge, and ideas that fuel institutional scale are sparked. A place for those who refuse to settle for the status quo. The builders reprogramming the future of finance through every deal and decision. Breaking boundaries begins with being there. Experience the epicenter.
Get the breaking news that moves markets right to your phone. Track your favorite token instantly and dive deep into the latest data. Download the CoinDesk app today.
welcome back to CoinDesk Live at Consensus, presented by Hex Trust, the leader in digital asset solutions. If you're just tuning in now, you are live from the floor at Consensus Hong Kong. I'm Sam Ewan with Jen Sanasi, Will Foxley, and Martin Assam. So, guys, how is the day going so far?
Swimmingly.
Having the best birthday ever.
The best birthday ever. Oh, it's your birthday? We didn't know.
I've told her 3 times today.
Martin.
Yes, sir.
First time on the desk. Welcome.
Yep. Honored to be here. Thank you.
Yeah. Martin, this is your first time also at Consensus Hong Kong.
That's true.
Give us your sense of what you're seeing. Martin runs our social accounts here, and I assume you've been around the floor, seeing what's catching people's attention, what's trending. Give us your takedown.
Yeah, well, as you know, there's about 11,000 odd people in attendance here, and we've also got the same number of people watching online, so that's a 22,000 crowd strong if you want to include the digital realm. Walking around, the energy is really strong, really high, not really reflecting the market right now, but I think that just shows that the show that we're putting on here is something special and something that people really want to be a part of, so it's great to see.
What have you been seeing that's caught your eye that maybe that you put on the Consensus account?
I'm not sure if this is a positive, but it seems like a robot takeover. I don't know about you guys, but I'm seeing them absolutely everywhere. So that is maybe a sign of the times, or maybe where we are. In terms of Hong Kong, it's pretty out there in terms of the cutting edge of technology. So I can see that this being a place where we might see more robots in the near future.
Well, what's your takeaway on sort of the vibes that are happening on the show floor right now?
You know, it's hard to walk around here. So that was sort of my surprise. There's just a lot of people, which is great. Like, you're just kind of like shuffling through, and there's just like a wall of people coming through. There's like, I saw someone from a high up government official. I had no idea who it was because I'm not from Hong Kong, but you know, them getting pushed through with a bunch of security officers around them. And it's cool to see that during what a lot of people in our last segment, right, a bear market, typically at these sort of events, it's like a little more quiet because the coin prices are down. That's not this. That's not Hong Kong. It's been difficult to walk around because there's so much going on there. You have to stop every few minutes, take a look at the booths. You have to kind of wait your turn for people to walk past. And that is a great thing to see during a conference. And then it's also really good to see for us bag holders who are really hoping that more bag holders come into the market and prices rise a little bit. So that's my takeaway, Sam.
Also, Will, you focus a lot on Bitcoin. You focus a lot on mining. We have a couple of mining shops around who have some amazing booths. What do you think about just the conversation around mining in Asia these days, considering what happened in China a few years ago?
Yeah, no, I think like the mining story in Asia itself is still there. Maybe not as interesting to some people, but I think it should be on the forefront of people's minds because miners sit at the intersection of two things, two very important commodities. That is digital assets and then silicon. Not too far away from here, Taiwan has TSMC, and then they're manufacturing all these very important silicon chips. Bitcoin miners are purchasers of those chips. You go north to Korea, Samsung manufactures a lot of these chips as well. And then here in China, there's also a lot of manufacturing of silicon. China itself has about 20% plus or minus a little bit of the Bitcoin mining footprint. We don't think about that because we think about 2021 and the Bitcoin mining ban, and we think it's at 0%, but it's not. It's around 20%. That is a large foothold on the Bitcoin mining network. And I think that over the next few years, we'll actually see that increase since there is only growing power generation and silicon development within China. So there is still a story to be told about Bitcoin mining in China. It's not going away. I think Hong Kong as sort of like a nexus or a hub for digital assets is a place that you'd see a lot of Bitcoin miners also congregate to in terms of buying and selling those assets.
Put that into perspective for us, Will, because you said 20% of the Bitcoin mining happens over in China. Then we hear the administration in the United States say that it wants to become like, the Bitcoin mining capital of the world along with the crypto capital of the world. Well, put that into perspective. What is that statistic really, what does that mean as we move forward?
I mean, there's a few ways you could break it down. I think the easiest is the United States has about 30 to 35% of Bitcoin mining globally happens in the United States. Of that, I'd say about 50% happens in Texas, right? So there's a huge portion of Bitcoin mining in the US. China used to dominate that, used to be 40+%. And then a lot of those Bitcoin miners chose to move to the United States because that was the next best place with good rule of law and cheap energy markets. In China, you have both those things, but during 2021, you had the rule of law change against Bitcoin miners, so they decided to move. There's other ways that we could talk about it in terms about the aggregate number of machines or the energy footprint. I think when you start looking about those numbers, like what is a terawatt hour per year, most people can't think about that. I think maybe a way to consider it is there is enough Bitcoin mining happening in China that could power a few large cities in the US. That's how much industrial footprint there is for Bitcoin mining still in China. In terms of the number of people, it still employs a few thousand people. Bitmain still operates a lot of stuff in China, still operates a lot of its HQ in China, and then outside of it in Indonesia, Malay, elsewhere. So it's still pretty sizable, Jen. I don't know how else to get more of a focused number. It's just
that was great.
Some of these numbers are so big.
Yeah, no, that was great. I think.
All right, guys. Well, we also have our consensus mascot here. I'm not going to pretend to know the name, but oh wait,
you could name it.
The mascot just called for a special graphic on the screen. Let's see what graphic this mascot. Oh, happy birthday!
Oh my gosh,
Jen.
That's my dog.
With your dog.
I adopted that dog.
And also proof of calories just entered.
Yeah.
Wow. So
guys,
we send you off on your birthday after a hard day's work. This is what the clap. And we know we'll see you out the show floor, but we want to really appreciate all the work that you've done. Thank you, Martin. Thank you, Jen. We're going to keep going. We'll be right back after a quick break.
It's a nice looking cake.
How you know?
The breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
All right, welcome back to Consensus Live from Consensus Hong Kong. The markets are on edge. Everyone is asking what's next. Joining us to break down the data is Marcus Thielen, founder and CEO of 10x Research, known for his pinpoint accuracy and institutional-grade analysis. Marcus is here to tell us if this is just a dip or a deeper trend. Marcus, welcome.
Yeah, thanks for having me.
All right, we all have to ask. The last weeks have been kind of crazy in crypto. Some people were blaming actually this region for some of the challenge that was going on. What's your take of what's happened over the last couple of weeks?
Yeah, of course, there's a long story and a short story, right? I think the sort of medium story is that since the summer, we have seen a lot of the OG wallets selling, but the ETFs were still buying, and that has really reversed sort of end of last year. But what also happened is actually a lot of the crypto hedge funds were underwater really in Q4, and that usually means within a 1 month to 3 months lag, you're going to see a lot of redemptions. And of course, these hedge funds need to liquidate some positions to kind of fulfill those redemptions. And that's when we have seen the Coinbase premium, so where Bitcoin trades on Coinbase basically in negative, so in discount really. So we can see a lot of institutional investors who are selling relative to global investors. That was how we really came into the new year. But then really beginning of this year, we expected that the ETFs would start reaccumulating again because investors have new money really to deploy, but that didn't really happen. So ETFs had 2 days of inflows and then bang, outflows again. And I think that really brought the imbalance really again to the negative side. And then towards the end of kind of January, we had actually better U.S. economic data. The ISM manufacturing survey came out, above 50, so an expansion for the second time only in the last 3 years. And that's when people started to reprice actually growth expectations in the US. And that means
less rate cuts. And when you look, the last 2 times when the Fed unexpectedly cut, usually in September 2024 and 2025, Bitcoin had a big push up. But with stronger economic data, that means less rate cuts. And then, similar time period, the probability that Kevin Warsh would be named as a, new Fed chair, really shot up, and it was confirmed. But that's when we started to sell off, at the 87,000 level. And the 87,000 level was a very big, important level for trend funds. So the trend signal turned negative, and then basically there was a new downtrend in place. And what was really, really crucial, and I think a lot of people actually have not, noticed this, that when Trump was elected in November 2024, Bitcoin ramped up from 70,000 to 90,000 within like 10, 12 days. So there was very little trading activity happening. So there was a big gap, a big liquidity gap. So when Bitcoin went to 87,000, it fell into the liquidity trap. And then what happened is that at 75,000, there was a lot of negative option gamma happening. So the market makers needed to hedge themselves and just sell futures and futures and futures with the last negative gamma hitting at 60,000. So it's almost like, okay, the last market maker is hedged, now we can reverse. So that's what we did. And then our expectation is, and sorry for going on so long, right? But I think that's where we can go to. Yeah. We expected kind of Bitcoin stay above 70,000 for around 3 weeks, but we think we might actually go now lower. And take out the low because there's no real, buying happening. And usually when you see these, cascading liquidations, it's not the end of the downtrend. It's actually the beginning of a downtrend, right? Because as a trader, you're really naturally long, and when you lose money, it's not that you suddenly say, "Oh, let me put more money into crypto." It's rather the opposite. I need to find a level to get out. And so that's kind of the scenario where we're in right now.
So you were expecting this summer to trade at 40 to 50K. You've also said in December that with midterms, typically you see a correction of over 60% in some cases. Is that still kind of the thesis for why we're going to that 40 to 50K, or is it more about that liquidity gap and that spot where we need to get back to for a base?
Yeah, so last time, I spoke with Jennifer was on, I think, November 12th, where we laid out sort of this scenario of a 60% correction, which sounded pretty, crazy, right? And, CoinDesk put it on Twitter, which had, of course, a lot of great comments, from people. But we dropped really, 58%, so far already. So I think the scenario is actually very much in place, because when you look at what happened during the last bull cycle, we also had this kind of second, wave higher up in this ABC correction. So we think we're still in this B wave right now, which turns into a C wave. And our view is more that probably during the soccer FIFA World Cup, we might be bottoming out then. I think the earliest episode is probably April. And I really think we're going to go to 50,000. I do think there's a possibility that Kevin Warsh comes out and is actually, at least through his nomination hearings, that he's more dovish because he's not going to be hawkish, right? The market ran with the hawkish story, and we wrote a report in December that he's going to be, perceived as hawkish, at least initially, until he really comes out. But he's not going to rock the boat now until he's really confirmed, right? So, but I think then he's going to come out and he's going to be dovish, and maybe then we're going to rebound. But I think the probability is still high that we're going to go to this 50,000, because I think people are still relatively long. And to address a little bit the rumors about some Asian fund, of course we had a fund in mind, but based on our cross-channel checks, it's not that fund. And we don't think it's a single entity, because when we look at, for example, Hyperliquid, right? Hyperliquid had huge volumes on October 10th. And Hyperliquid accounted, to around 53% of all the liquidations. So it's not just one entity got liquidated on October 10th. It's more like the broader market. And we had a similar scenario last week where, on Hyperliquid, trading volumes went from 5 billion to 28 billion. So a lot of people got liquidated there again. So it's not one entity. It's more the broader market. So I don't buy this a multi-strategy fund. I mean, I used to work at Millennium, which is, a big multi-strategy fund. Nobody is short puts there, right? Especially not in Bitcoin, right? It's really a hedged position. So that's not how the market works, and that's why I think it's not one entity. That's why we also have not heard from one specific entity being, going under in October 10th, because it was spread among many entities, and that's why we had this like negative feedback loop, right, where redemptions and so on. So it's really unfortunately where we look at how ETFs, they have bought around 54 billion US dollars in Bitcoin with an average price of 90,000. So they are like underwater by 10 billion roundabout, right? Yeah. 11, 12 billion. But when you look where Bitcoin is versus when the ETF started, they are literally 30 billion too long right now, right? So that's still, I think, a lot of head scratching, where people maybe need to adjust positions. So I think that is still the risk that those people might unwind versus the crypto native, they're already liquidated a large part. So that's what is the risk for this summer.
All right. Fascinating stuff. Marcus, thank you so much. Yeah. That was Marcus Thielen, CEO of 10x Research. Let's turn now to social media, see what some attendees are saying about Consensus Hong Kong.
Yeah, all right.
All right, first up, just waiting on a graphic here.
Well, we can look at some numbers as well.
We can look at some numbers. Yeah, why don't you give us some numbers?
Over 10,000 participants.
I heard 11,000 this morning.
11,000, even higher. With 116 different countries attending. Oh, here's our first graphic.
We have our first social graphic. Yes, there's been a lot of robots sitting around. Some of them seem tired after the fights that they had. But if you're at Consensus, you are certainly going to run into one of these autonomous beings. So make sure you keep an eye on that. Let's check the next.
Oh, it's slumped. It's completely tired.
KuCoin here, really celebrating the fact that we have now, like I said, almost 11,000 people on the show floor. A lot of them focusing on the institutional opportunities, especially around Hong Kong. So what we've seen out there is a lot of great conversations. Hopefully some great partnerships come out of it. And then finally, we would remiss and not mention that we have a companion event happening at the same time with Solana, Solana Accelerate, which has been really just popping over there. A lot of activity, a lot of energy, a lot of excitement. So thanks to Solana for being partners of ours on this. And now we are going to go to Adam Kai. Adam, welcome to the desk.
Thank you for having me.
Adam is the CEO of Virgo.com, a platform that aims to make crypto trading safe, easy, and affordable. Adam, welcome.
Thank you. Thank you for having me.
How's your Consensus going?
Amazing. I think this is probably the best blockchain conference. I think it's very impressive. A lot of good handshakes.
Glad to hear it. Yeah, we were here last year and we had about 9,000 people, so it's good to see that attendance has grown. A lot more energy in the room, so I appreciate that. Tell us a little bit about what Virgo is working on right now.
Sure. So Virgo started off as a Canadian trading platform, which is kind of boring, and then we kind of really focused on the two global business lines since 2024. One is Virgo Pay, global stablecoin on-ramp platform providers that aims to really make the cross-border remittances seamless, cost-effective to enable the business. And the second business is Wallet V, which is a strong DeFi ecosystem builders. It's an AI-empowered wallet trying to lower the entry barriers. So this is also a very cool, very Web3 native product. Both of them have been gaining a lot of tractions, and now we focus a lot on the global expansion.
Last year, Virgo CX added a non-custodial part of its business. Can you tell me a little bit about how the customers are looking for that non-custodial solution? At the same time, they want all the other gadgets and Wismos, like they want to be seamless, trade across train, go across borders. How do you put the non-custodial feature into the product?
That's a good question. I think I'm seeing the crypto users now becoming a lot more educated and knowing how to use different types of products in the Web3. So really, as a on-ramp, off-ramp exchange, people are there to convert to different crypto stablecoins. But in the end, they want to have more fun with it, right? They want to get access to the DeFi. They want to be able to do different other payments. So once we convert to that, I'm seeing a lot of people already trying to make that move to a wallet, and they're trying to connect that with Virgo Pay, have the ability to now transfer over 26 countries, and with a seamless user experiences over certain currencies. So that does give people that benefit of Canada as a major tie to different part of the world.
When you mentioned Virgo Pay, we've spoken to a lot of companies over the last year who are focused on remittances, stablecoin payments, and one of the large challenges was around off-ramps. How do we get money in people's hands? Is that friction still there, or has that problem been solved?
Sure, and I think that's what I have been doing in the past 5 years. We're really good at maintaining strong payment rails, banking relationships, And we're seeing that there are a lot of now cheaper solutions, which really doesn't need you to be paying like 3-5%. Like you get really low and it gets you directly to a bank account. You don't have to worry about being flagged by banks. Really strong KYCs, AML done properly. So Virgo Pay is building on that level of KYC AMLs. So when people receive money from us, they know it's from proper banking, proper rails. They can have their money rest assured, don't have to worry about anything else. They can just directly get their money into their traditional financial institutions. Yeah.
Do you think, though, just to follow up on that, at some point I keep wondering when we're going to enter that moment where if Will and I are exchanging a service and a good for dollars, we're sending each other a stable coin, we're not actually thinking about ever converting it back to actual fiat. How close are we to the point when these native digital currencies just really are economies of their own?
That's a good question. I think for the Web3 users, 100%, stablecoin, to have stablecoin at their hand is a lot more powerful and for their usage. But I think for Virgo Pay, I want to be clear on that. The true vision is for me to help the Web2 users. So they don't really need to understand what is stablecoins. All they want to do is to move money from developing nations to developing nations seamlessly. That can beat their traditional speed, and it can make it cheaper, reliable, and in the end, they want to make sure their logistics flow with the the money flow, do that really freely. I think that is trying to bring more adoption to stablecoin rather than just get people a token to speculate. And I think our Virgo Pay is focused on that part of business, really a B2B, B2C model, helping the business to do the remittance easier. And that tie, I think, is something we're really excited about. And we talk with a lot of international trading companies. They're equally excited to see that happening.
Yeah, you've talked to us a little bit about the B2C side. We talked to the B2B. When you're looking for partner banks or on-ramps, off-ramps, what are you guys looking for, and how has been the reception over the last 2 years as stablecoins have ballooned in market cap?
Yeah, I think the banks now, of course, knows stablecoins, crypto a lot better. They're well allocated, so they also, of course, care about the governance, right? How do you do everything KYC, ML? Do you have audit done every single 1 or 2 years? How do you address the KYT? That part is the basics. I think the banks are well familiar with that, but I also think there are a lot of customers still looking for more advanced features from the banking side, such as virtual account, send them in and out, because there's still a lot of people when they see it's coming from trading platforms, payment networks, they want to close the account, right? So that friction is still there, unfortunately. I think there's still more education telling banks, they are good providers. We have really worked hard trying to keep the industry safe, turning away the bad actors. But banks still need a lot more educations, even in US or Canada. But I'm seeing that being a little bit better. I'm seeing good banks attending seminars very often, learn industry. The trend is good.
Is there any concern about what it really means to give self-custody to these individuals? I'm interested in sort of the idea that you guys have built a non-custodial solution right now, especially when we're thinking about the idea of payments on a micro level. I'm worried about just how the everyday user already has so much challenge in the financial system. What happens when we have to teach them all of this new technology, or does that just get hidden?
Thank you for asking that question. I think your comment is extremely right. So the entry barrier for the Web3 wallet or non-custodial is very, very, very high. So that's exactly why we enabled the AI agent, actually right in consensus, right? It's just live 2 days ago. I think the goal there in the future is when you speak with AI, when you type with AI, they can do actions based on intention. For example, I want to swap. They're going to tell you, do you have gas fees? And what do you need to do? I think that guidance needs to be there. And the AI is the best customer service rep to hold customer hands, to tell them what's the risk, what they should watch out, and how should they do it. In the end, I'm hoping that in the future, people don't have to learn all different chains, USDC on 10 different chains, EVMs, all that stuff. AI will just tell them and able to do that for them in a few simple words. And I think that's exactly what we do. And I think that's extremely important. In the end of the day, adoption is the key, right? Whether they know how to use it is the key, right?
All right, Adam, pleasure to see you.
Nice to meet
that was Virgo CEO. Adam, Kai.
Thank you
We'll
so
be
much.
right back.
Sam, where are we going?
We're going to Consensus.
What road are we taking?
Where we're going, we don't need roads.
Just Miami.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
And welcome back to CoinDesk Live from Consensus Hong Kong, brought to you by Hex Trust. Joining us now is the co-founder and general partner at Maximum Frequency Ventures, Mo Sheikh. Hey, Mo.
Hey, how's it going?
Great, good to have you here. What's your take on Consensus Hong Kong so far?
I mean, the energy has been unbelievable, especially given where the markets are. I'm incredibly impressed with everyone that showed up. And obviously, you know, the show has been phenomenal. So great work.
Thank you. You know, you launched a $50 million fund to invest in crypto projects in October. What are you looking for in what makes a great project for you to invest in?
Yeah, I mean, the name kind of implies it, right? Like, we're looking for people that can hit their maximum frequency, and we've been fortunate to find amazing investors that have that capability. But in sort of these next, this next chapter of crypto, we believe founders need to have an incredible level of depth of their respective industries and categories, and not just crypto. And so we're looking for those founders that really have that and helping them accelerate going forward. The second component for us is, you know, after being founders, we understand the importance of East and West. We have two general partners in Asia, one in Singapore, one in Hong Kong, and myself, Alex and Jerome, and myself and Neil are based in the US in New York and Austin. So, you know, we have great global coverage, and we're looking to bridge between the East and West on that category too.
For your first point there, I want to talk a little bit about who you're looking for, a founder's mindset. It's not just crypto anymore. Like, you have to know everything. We've seen crypto and AI have a lot of coverage, talk about that. Seen a lot of the AI infrastructure, have conversations here. When you're talking about these crypto founders you want to invest in, tell me a little bit more about like some of the characteristics or the interest that you're seeing on that's like, hey, this is a good indicator or green flag for me to deploy a check to them.
Yeah, so I think there's kind of two things to unpack there. One is, do you have industry knowledge and can build a product for that industry and incorporate crypto in the right way? Historically, what we've seen is the opposite. We've seen, hey, here's crypto, it's this really cool primitive. I'm going to brute force this thing into like this industry and disrupt it. Obviously, that hasn't worked. And so the point you raised around AI, among many other technologies that are sort of converging, we're seeing new form factors come to life. The way you interact, the way you use the internet is evolving. And as a function of that, the products and industries that exist within, you know, the internet will evolve as well. We've seen that with, you know, things like pets.com to like where we are today. So we look for founders that have that depth. The second, and you guys kind of see this, is like, can a founder really go through the resiliency of being in a crypto market? It's hard. Like, being in crypto, especially if you have a token, like, you are a public market founder immediately, and you have, you know, all these stakeholders to manage. And so they pull you in different directions. So when you're pulled in all those directions, you're often compromising your product. So we look for founders that have this resiliency component, but also this depth of focus and know what matters most, not just token price.
Mo, there was, 11 million tokens launched last year. Most of them go to zero. What's your guidance or advice to these founders to say, hey, maybe you gotta hold off on the token until you really have something, or you're like, if you can get the money, get the money?
It's an excellent point. It's hard to not be, it's easy to be simple and say don't launch a token until your users value the product. And I think that is partially right. However, you shouldn't ignore the fact that, you know, look at other capital formation products that are out there today. Equity, debt, obviously balance sheet, cash or cash flows. And all those are used for an organization to amass more capital, to hire more employees, to build better products. Today, you still need that, and crypto has been a massive sort of unfair fuel in this organization. So, you know, if you're going out and competing with an industry and you have token treasury that you can actually utilize to give you an unfair advantage. Again, hire employees, build a better, build a faster product, a better product. You'll have an unfair advantage relative to an industry that probably doesn't have a token and is stuck in this like capital formation world of like the old days. And so we do advise that you should be thinking about a token. You should be thinking about all the components that all the features of that token within the different stakeholders, your users, your investors, the retail market. And we're finding that founders have gotten a little bit smarter, and of course we bring our shared experience of what we built from previous days to the table to help them accelerate that.
Not to get pigeonholed in the token question, but to bring it back there. Right now we're in a down market. Launching a token in a down market for startup is a lot different than launching into a hot market. And even this last cycle, it was a little bit more risky to launch a token at all. What are some things that you're advising teams maybe on the tokenomics side or about the timing, the cap table that you would do differently versus 2021 or 2022?
It's an excellent point. When we launched, when I launched Aptos, we launched in a down market. Shortly thereafter, FTX happened, and many other catastrophic events happened very shortly after. So founders are now stuck with, okay, I just launched a token, and now I have to deal with all these macro events. And so in order to do that, you have to have some sort of mental preparedness because you can't control the markets, right? Like who knows what will happen with fiscal and monetary policy, with geopolitical waves that we're seeing. And so you really want a founder to be in the right mindset to be able to deal with a lot of that uncertainty that comes with the token being launched. And so I think that, along with all the different points that I mentioned earlier, are really important. People joke that MFV, our partners end up acting like founder therapists. I don't know if it's because we're inviting and can open up conversation, but more importantly, our goal is to help train that founder to get to that level of mental preparedness.
Well, my final question for you is, a lot of investors really focus on almost a single focus on crypto itself. But I think of AI, I think of longevity, I think there's all these tangential industries that really surround a mindset.
Yes.
So as an investor, how much are you saying, okay, it might not be crypto, but it still hits the same person?
Oh, that's an excellent point. And I would say for us, we have looked at all these different categories that are at the periphery of crypto. Specifically with things like AI, whether it's looking at models, looking at embedded systems like chipsets, for example. All of these things have been using tokens way before crypto came to light. And so those tokens, of course, sit on a server, not a distributed system. Now, what are the advantages that come for using a blockchain? Well, historically, there were, you didn't have performant networks that could actually support these types of business models. Today, we have infrastructure that is clear, it's efficient, it's sound, and it could be used in things like embedded systems, in model training, agent-to-agent transactions, not only stablecoins, which I think is like the easy thing that people talk about, but more complex trust transfer or data transfer. And so we've invested in each one of these categories, and we're very excited about the intersection of these different, or the convergence of all of these industries coming together.
All right, that's all the time we have. That was Mo Sheikh, co-founder, general partner at Maximum Frequency Ventures. We're going to take a quick break. We'll be right back.
Unlock the full potential of your digital assets with Hex Trust, the leading digital asset financial institution. Trusted by over 500 institutional clients worldwide, licensed across key jurisdictions. Hex Trust, the leader in digital asset solutions.
All right, we are back Here on the floor at Consensus Hong Kong, I'm Sam Ewan alongside Will Foxley. Joining us right now, Jason Atkins, Chief Commercial Officer at the global trading firm and liquidity provider Oros. Jason, great to see you again.
Thank you for having me again.
Yeah, first of all, thank you for being a partner to Consensus, now the second year in a row. It's been really wonderful having you guys here. What's your sense of the show, the vibes, and the feeling around Hong Kong specifically?
I mean, it's Consensus in Hong Kong last year was incredible.
Yeah.
A lot of anxiety from a lot of people about this year because market conditions, but honestly, it's exceeded expectations already today. Fantastic setup, fantastic sponsors, I think, around the place. Last year was so good that it encouraged us to sponsor main stage and make sure that our presence in the city was known. Hong Kong's a very close part of my heart. I've been here for 13 years and our firm has over 50 staff now in the city and really supportive of what Hong Kong is doing to embrace the digital asset industry.
Jason, your panel today is titled, Are Market Makers Evil? In 30 seconds, what's the answer, yes or no?
The answer is no. Market makers are not evil. I think to flip the script a little bit, if you look at a recent event, October the 10th, where a lot of market dislocation and volatility happened, a lot of people took away from that market makers caused it or market makers are evil. The reality is, if you look at that event, it exposed what happens if market makers were not there. What a lot of we know for sure, in fact, Binance has said and announced it, is that things broke. The APIs broke and overuse of the exchange in such volatility led to market makers being unable to perform the duty that we do for the market. And if you take a step back from the actual price action and think about that, it shows that if we're not there doing what we do best, things would be very, very difficult and very, very different. And I'd mentioned this on stage, but we've been grappling with the path to institutional adoption for so long. That path becomes a lot harder if your volatility goes from 70, 80, 90 to 200 volatility again, and liquidity is absent. Pension funds, hedge funds, venture capital firms, liquid funds, they will not be able to touch this asset if it's going to do what it did on 10/10 every single day. So to me, the takeaway from volatility events like that is market makers are an essential part of the lifeblood of this industry, and embracing and understanding why they do what they do and how they work and why they're important is a good thing for all participants of every size to know and understand, because then they can lean into the liquidity and appreciate it for what it provides for them.
So when I'm looking at that question that Sam gave you and then your answer there, I'm thinking what's missing then? So if the market makers weren't able to connect because of the API issues and then we had such volatility going forward, what can we fix to make that not happen again? What can we do to prevent such catastrophic volatility, which I would know is a history and a fixture of Bitcoin's price?
So it's, of course, you try to plan for historical events and you look at what has happened in the past and you build according to that. There's always going to be black swan events that occur. You try to predict and analyze what they could be. It's partially on firms like us to build the systems to make sure they're robust. But it's also on the exchanges to partner with the market makers, to take feedback on board, to listen to what we say about do it this way or do it that way. Sometimes it's self-serving, but most of the time we're trying to get to the point where we can do what we do best. Not in a altruistic, we just want to provide liquidity because we are charitable. It's because the very act of us trading provides all market participants with a better environment to trade in. Tighter spreads, deeper books, stable markets, more investable asset class.
Jason, I want to pull on something you said earlier, which was that the sort of health and liquidity in the DEXs seem to hold up a lot better than in the centralized exchanges during these big volatile events. Can you tell us a little bit more about how does a centralized exchange manage that and how can they work with you guys?
Yeah, so centralized exchange, obviously by the name, is a centralized group that's building and runs their systems independently at their own discretion. Decentralized exchanges have seen explosive growth, especially in the recent months. The perp-dex narrative is back. We've seen things like hyperliquid scale at hyperpace, not to use a terrible pun, but at hyperpace you've seen things like Lighter come on board. Volumes have shifted there. Now, it's not just because there's airdrops, it's not just because people are speculating on hyperliquid or Lighter, it's because the user experience is good. And when I talk about user experience, I'm not saying what is it like to use it on your mobile phone or on your desktop. I'm talking about the experience of trading on there. So do you feel like you're getting ripped off? Is the slippage bad? You put your orders in and they get cancelled? And as exchanges start to understand that the end user is the most important person to invest in, they'll start to build those systems in better ways to deliver a better user experience. And I think this healthy competition that we're seeing between centralized exchanges, the incumbents, and decentralized venues is only going to lead to a better outcome for users when it comes to user experience, which is involved with liquidity. If you don't have that liquidity, it's a bad user experience. So we are engaging, as we always do, with all of our centralized market making partners and the decentralized ones too, to talk to them about ways they can use our skill set, our systems, to provide liquidity to their users, to create a better user experience, to beat their competitors. And we work with all of them. We're open to providing feedback. We have our developers working alongside them. We're very engaged with our partners. And I think over the next few years, as that competitive landscape shakes out further, they will embrace more and more of that dialogue and discussion, because you can't just build a product, have it sit stagnant, and then wonder why perp dexes are coming up and eating your lunch. You have to invest in the future, and I think the exchanges will do that.
Tell us a little bit about building in Hong Kong and how your firm has been expanding here. You said 50 employees or so are in Hong Kong. Where do you see Hong Kong being in the center of not only crypto, but TradFi going forward?
Yeah, I mentioned this on stage earlier, but I think the announcement earlier this morning by the chief executive on a recorded message to Hong Kong was obviously very inspiring and great for the city. One of the first times he's spoken at length about the digital asset industry. To me, the playbook that Hong Kong will run, I have no doubt about this. I've been here 13 years and plan to be here for at least another 13, if not longer. The playbook they will run, they have run before. In the 80s, 90s and 2000s, Hong Kong acted as the hub for traditional financial markets to access Chinese capital markets and the East. And they know that worked. It created a boom in this city. It created major financial flows between the East and the West. And it worked and drove massive economic growth for everyone who was involved. There is no reason why they shouldn't run that playbook back again. And if you look at China's approach internally to digital assets, having Hong Kong as a key access point is beneficial to them in allowing them to run and manage their agenda accordingly. But it also allows Western capital markets to get into the East as well. So to me, if you run a cross-section across all of Asia, Hong Kong is the only country that really fits the bill. I think you've got very few countries that have the sort of financial infrastructure pipes already built up because of the traditional financial setup, and plus the attraction to even expats like myself, that it's a very easy city to live in and work in. And I hope to be here for a long time. And I honestly think Hong Kong will become the center of Asia, the center of digital assets globally.
All right, Jason, we'll have to wrap it up there. Thank you as always for stopping by. Great seeing you.
Thanks. Good to see you guys again. Thank you.
That was Aro's Chief Commercial Officer, Jason Atkins. We'll be right back.
History doesn't just happen. It's built by the bold, the brave, and the bullish. Consensus Miami is where crypto, culture, and trillions in capital converge, and ideas that fuel institutional scale are sparked. A place for those who refuse to settle for the status quo. The builders reprogramming the future of finance through every deal and decision. Breaking boundaries begins with being there. Experience the epicenter.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
And welcome back to CoinDesk Live from Consensus Hong Kong, brought to you by Hex Trust. Are meme coins dead? Our next two guests have some answers for us. Joining us now is co-founder and CEO of 9gag, Ray Chan, and Bonk core contributor, Nam Bonk. Ray and Nam, welcome.
Thank you for having us.
Thanks for having us.
Great seeing both of you. I think we all spoke last year at this event. Back then, the meme coin meta hadn't happened yet, about a year ago. It was just really building. And we saw a crazy year in meme coins. So do you think that was just a flash in the pan, or are we going to start to see more meme coin cycles come back?
I think meme coins that is probably the second most asked question in crypto. After, is Bitcoin dead? Right? So I would say that if you look at the history of crypto, right, other than Bitcoin, other than public chain, meme coin is always there. Right? So I would say that it's far from that, right? But there are always ups and downs. There are always, sometimes they get more attention, sometimes they lose their attention. Yeah.
Yeah, I think you've run into the situation where if you look at the broad market sector in meme coins, they're alive and well, and they're continuing to do what they've done since people first started, experimenting with a lot of these different areas, whether it's colored coins or whether it was the different areas of building these out. Like, they're a very interesting and exciting way for people to experiment with the things that then become technical standards. Dogecoin is a great example for everything around the Dogecoin dark forks that ended up creating what a lot of people think of as proof of stake networks today. Are individual meme coins dead? Probably. That is an unfortunate situation, but these are much closer to crypto startups than I think a lot of people give them credit for, where the point of teams iterate rapidly and organize things. And the best memes I think either have very strong community or very strong technical support and ideas behind them, where they're going to be able to continue to get people very excited and pushing forward with their new initiatives. Outside of that, I think the sector is going to continue to grow, and the secondary effects of that sector, which is trading infrastructure, all things that I think a lot of teams look at in DeFi, will continue to accelerate, and that's where you're going to see the additional benefits.
We had Anthony Scaramucci sitting there about 2 hours ago, and we talked about the effect of meme coins on Solana and how institutions viewed an investment in Solana. And for him, his standpoint is, hey, if a meme coin can have huge volume on this chain, why can't a stock? Why can't RWA? This is just a proving ground for actual assets. Now, you guys might say meme coin is actual assets, but he might differ with that, but it seems like you guys kind of come to the same conclusion. That being said, a lot of other institutions might not come around to what you guys are saying, or even what Anthony Scaramucci is saying. How do you guys kind of talk to the institutional investors out there that might have an interest in meme coins, or is that just completely different sides of the room, no intersection at all?
Yeah, I think Ray also has a lot of experience in terms of what he's been working on for the meme strategy. And what I've been working on the professional and institutional side of Bonk and BNKK as a public company is there is a certain level of these memes where people are interested in not only trading volatility, but also the value of the underlying community or products that are a part of these areas. When you talk about pure meme coins in terms of this idea of just a speculative group where you believe that a lot of people are going to go up or down, we had meme stocks as something that people were trading very, very heavily. I think GameStop's probably the most famous of them. Tesla was for quite a long period of time. And I think you could look at the recent rise in precious metals, right, as also a meme, right? It's something, a frenzy where people are getting very excited and trading these things very heavily. Does that mean that, institutions and family offices are all going to be buying, the next meme? Maybe not. But the idea still goes into the fact that, again, these are useful either community metrics for liquidity tests, for interest in a certain area, or for bug testing layer ones and various strong areas. The best memes become something that is more than just a token or more than just a community. They become businesses. And I'm sure that as Ray has more experience than anyone can tell you is the power of what a meme can do and how you can make financial businesses out of that.
Yeah, I think 10 years ago, if you said that institutional would buy into Bitcoin, right, people would say that, hey, you are dreaming. But right now, a lot of them, they're actually buying Bitcoin. I don't see why they wouldn't buy meme coin in one day. And to be honest, right, to me, I feel like because of NiGet, right, I feel like meme coin, they're all cultural IPs, right? If people understand the value of culture, right, they will understand the value of meme coins and other meme-related like stock or other asset. I believe that the last 10 years, right, meme is just content. Right, but in the coming 10 years, I think meme will become like asset.
The thing I keep struggling with, I think, Ray, you and I talked about this last year, and it just sticks with me, is that memes are a truly beautiful thing in humanity, right? They just express some feeling we have, whether it's a cartoon dog saying something or a kid having an explosion in a car, whatever it is. It makes you feel something. The minute we start putting a dollar figure behind that, it changes the very nature of the meme. And I think about the ways that music sort of culture propagates and fashion culture propagates, and even though there is financialization, it's not at the forefront. Meme stocks seemed like, with the exception of a Pepe or a Doge or a couple of these tokens out there, that it was, let me capture attention right now. The people who really know how to play the game kind of buy it on the way up, and everyone else buys on the way down and loses money. And it kind of, I don't know, for me, it gives a little bit of a stain on the crypto experience for a normal user. If you're into playing the game, you don't care. You know this is part of what it is. But I wonder if there is some way in which we can balance out the idea that memetics are kind of pure in a very interesting way, and that by putting financing behind it, is that something that sort of, is there a way to do it more authentically than just trade a token about it? Do you have any thoughts on that?
Yeah, sure. I think whether a token started as a meme coin is just the beginning, right? But just like Amazon, right? It started as a bookstore, online bookstore, right? Right now, it basically is like a marketplace or anything, right? I mean, they even like create all these like robots, right, to make delivery. Right? I feel like a lot of people, they only focus on meme coin as they started, right? But they forget that, hey, all these like people or team behind meme coins, right? They actually are building something. Or just like Bonk, right? They actually build a lot of like useful products, right? Where people actually use. I believe that, hey, the differentiation between like, the pump and dump meme coin and also meme coin that can survive is whether they actually build products that will be that are valuable, right, for the end users. At the end of the day, I think people may like you get tricked once, right? But if you actually are building something, right, they will see it, right? That's why I believe that, hey, it's more about whether the team is actually building for the future instead of just, hey, we just hope for the pump, the green candle, and then that's it, right? And then we just rock and go, right? I don't think that's the future of meme coin.
Yeah, I think a lot of this also goes into classification or a communication issue around what are digital assets inside of the space, right? There was, at this time last year, right, we were talking through the idea of what does it mean for a token to be listed as a security versus a commodity or something in the middle? And we now have a very broad idea, especially in the United States, but in other jurisdictions, of what is a digital asset and what does that actually entail, right? A token is not equity inside of a company, but it can act as pseudo-equity in a lot of different areas. A token could be something where it's akin to a voting right? That goes a little bit more into a security. Or it can just be something that people speculate on, like coffee, sugar, pigs, anything of these sort of areas. That doesn't necessarily make them good or bad, but the problem is that we don't have a really good metric for defining like what is a pure meme coin or what is a utility meme coin or what is a revenue meme coin or you know, even the valuation. I think now that people are going into various L1 and L2 tokens is like, why should a gas coin be expensive? That works against the value of a network, right? Like why should these things have a certain valuation versus trying to be as cheap or as zero fee as possible? And these are existing problems that the industry is solving, and I'm not going to pretend that I have the answer to any of those, but I think you're going to see a continued evolution where people are looking at the idea of like, okay, I'm interested in only tokens that are fully distributed, or I'm interested in tokens that have a fixed supply cap, or I'm interested in tokens that have more purchasing that's going by them on programmatic buybacks versus things that are getting distributed on a daily or weekly basis, or any sort of that classification. I think right now people don't have a clear setup or explanation in terms of like, well, what is a meme coin versus what is an infrastructure token? Or, I think Uniswap is a great example where people are trying to value it in terms of a multiple of revenue or the idea of what it could end up meaning. But it's very clearly not equity inside of Uniswap Labs. And, what does that compare to versus a meme on the social power of Uniswap, right? Or even the power of Unisocks in those sorts of areas, right? Which is another great example of, it's not a meme. It was traded very similar to a meme token, and it had an interesting bonding curve, and it had some utility, right? There's all these different areas where I think the broad term of meme coin needs to get pared down quite significantly and reclassified into what these things actually mean.
All right. Well, thank you, Ray. Thank you, Nam. That was Bonk core contributor Nam Bonk and 9gag CEO and co-founder Ray Chan. That's all we have from the desk today. We will be back tomorrow, 9:45 a.m. Hong Kong time, to do it all again for day 2. Will, thank you so much for your effort here.
Thank you.
Really appreciate it. And now we're going to throw to the main stage how DeFi will become Fi.
What's the benefit of crypto? Better, faster, cheaper?
Crypto is absolutely a way to survive.
They're cheaper, that they're faster, that they're more transparent, they're more modern.
Cut through the noise with something powerful. Katie bar the doors, $1 trillion will come and index that asset.
A big thank you once again to our panelists. DeFi on Ethereum is booming. Hundreds of billions in TVL and tokenized RWAs are linking decentralized protocols straight to traditional markets. Under Joseph Lubin's leadership, Consensus is leading the charge with MetaMask integrations giving users seamless self-custodial access to both crypto and legacy assets. Today's last session dives into how these hybrid systems are transforming finance forever. Please welcome Joseph Lubin and Elaine Yu.
Hello, everyone. My name is Elaine Yu. I'm with CNBC, and joining me today is a very special guest, Joe Lubin, CEO of Consensus. So today we're going to talk about, the title is How DeFi Becomes Fi, and it's been a big theme last year, and it will be a big theme going into the year. And I just want to start by setting up the conversation with the markets these days, right? We're seeing a lot of volatility. And I want to ask about how all of that in the markets, has that changed the way institutional players, the TradFi folks, approach the space?
Yeah, so the volatility has been extreme. I credit the traditional economy for a lot of the volatility. I believe that we're essentially at the end of a roughly 80-year monetary and debt and generational super cycle. And the world is collapsing. The system of the world no longer serves the people of the world well. And we have a new super cycle revving up in the form of decentralized protocols and AI. And the financial institutions understand that. The traditional finance, whether it's centralized securities depositories like DTCC, Euroclear, Clearstream, whether it's major stock exchanges, whether it's regulators. Finally, in the United States, the regulators are embracing crypto. ETFs, digital asset treasury companies, major banks, they are all recognizing that there are so many opportunities and that the power of decentralized trust is something that can actually replace the loss of trust in centralized systems, whether they're governments or large financial systems. So the volatility has not at all slowed the interest of TradFi in embracing the Ethereum technology, at least.
Yeah, it's interesting to see the price movements becoming a bit more divorced from the technology layer. And I guess with things like stablecoin, right? The draw of that is that, yeah.
Pretty stable, yeah.
Right. So any concerns, though, that you're hearing from the mainstream players, or are they just moving full steam ahead?
I think they're moving full steam ahead. So obviously, banks have preferred to keep winning a rigged game, and that's why they lined up on the side of the Biden administration and Gary Gensler's SEC back in the previous regime. But they've also, some of them have been chomping at the bit at the opportunities that are available in the decentralized protocol space with DeFi, with stablecoins, etc. They just want to make sure that their business isn't too disruptive. So banks don't want stablecoins, as many of us have heard, to be issuing yield to retail consumers because they are concerned that that will lead to a loss of depository assets. And so banks have their own version of stablecoin, tokenized deposits, and I think there are going to be so many different tiers of money, from the highest powered money, which I think of as decentralized money like Ethereum, and then gold and central bank money, and tokenized deposits are going to be much more regulated. They're going to move much less freely. And I think the real innovation is probably going to happen in the stablecoin space, where less regulated and much more able to be utilized by companies, so white labeling stablecoins potentially, and we'll see a lot of innovations being attached to a stablecoin. So I could, my company could white label a stablecoin, and then I could add all sorts of programmatic perks to that stablecoin.
Yeah, and I also wanted to ask for specific examples as well, because we've seen years of pilots, prototyping, experiments, and some blockchain projects have moved into production now. But is there an example you can cite of a open blockchain or DeFi application that's moved mainstream, and why do you think that succeeded where others stalled?
That moved mainstream. So I have a really good example. It might be self-serving, but I work at a company called ConsenSys. We publish a wallet called MetaMask, and MetaMask started nearly at the beginning of the advent of the Ethereum ecosystem, and it was really a way to sign transactions. It was your digital authority where you can sign a message, you can sign a transaction, then something can happen. You can send a token from one place to another, or later on you could participate in DeFi or DAOs or NFTs. That evolved to becoming a wallet, as most people think of MetaMask, and then a portfolio management tool. But now, following on the neobank panel that we just had, MetaMask is a new kind of neobank. It's a neobank that we can all own and control. It's a neobank that we can have in our pocket on our phone or run on our laptop. And you can access hyperliquid perps and equity perps and prediction markets from Polymarket and tokenized securities currently from Ondo Finance, but there'll be lots more issuers of tokenized securities. We have a debit card like some of our colleagues that just left the stage. Our debit card is special in the sense that instead of putting your salary in your bank account so you can use your debit card and have your bank earn interest on your money, you can actually put it in an account, you can put it in a vault and earn money in yield essentially on your own Ether or on your own stable coins. And right up to the minute that you buy something on the MasterCard network, your money is working for you, and then a little bit of it is moved. It's a revolutionary way to give more power, more agency, financial agency to people. We have a few other features. We've got our own stablecoin, and we have a rewards program. MetaMask is the largest self-custodial wallet in the world. So over 100 million people use it on an annual basis, and that makes MetaMask very attractive to lots of innovative protocols, to innovative layer ones who can be rewarded via our rewards platform with tokens or with points. So it is changing the nature of banking.
And speaking of yield, there's a big debate in the U.S. about, what stable coins, how it should reward customers. Of course, customers want these yields, but the banks are worried about financial stability. How do you think it should be regulated on that front when it comes to rewards from stable coins?
Well, as an employee of a company that has a stable coin, we like the idea of being able to share as much value with our users as possible. It is their money. It is their neobank, effectively. I do understand the perspective of financial institutions. I kind of disagree with financial institutions. I think they're probably not going to see much of a loss of deposits just because stable coins exist. I would argue that when stable coins get really prevalent, there'll be much more financial activity. When decentralized trust replaces centralized trust, we're going to have just so much more economic activity, so much more velocity in the economy, and that is going to manifest as deposits in banks. Not to mention that these stable coins, the Genius Genius compliant stablecoins or stablecoins issued in Hong Kong, which have very similar structures, they all require a dollar in the bank or treasuries in the bank for every stablecoin they issue. So I kind of believe that the banks want their cake and to eat it too, because they will retain their deposits and they will retain larger deposits, I think.
So what is the main hurdle then stopping DeFi from overtaking traditional finance? Is it barriers in the tech itself? Is it market demand? Whether these products can reach commercial scale? Is it regulation, the incumbents? What are the main hurdles?
Yeah, so I believe that, first of all, DeFi isn't going to overtake TradFi. I believe that TradFi and DeFi are going to merge, and that TradFi is going to bring 200 years of innovation, and there's a lot of innovation that has happened in the last couple centuries in the financial system. They're going to bring some of that as forcing factors to DeFi to help it mature, but decentralized trust and much faster rails and tokenizations of real-world assets and money, it's just it's going to be a revelation to anybody who sees it in DeFi. So DeFi is now roughly as safe as traditional finance is. And so that may be a controversial statement, but the blue chip DeFi protocols are very safe. Bank accounts and money, which is being debased around the world, are growing increasingly less safe. So if you have various nation-state currencies debasing, if you have situations like in the GFC where we saw haircuts in various nation-states, where you wake up in the morning in Greece, for instance, and you've lost, I forget, 25% of your purchasing power. So we're moving, at the end of the super cycle, we're moving into a much more dangerous period in the traditional finance system. And if you compare a debasing and increasingly unstable financial system with a financial system that has grown by orders of magnitude since the advent of Bitcoin and since the advent of Ethereum, people now have the option of investing their money in a vault in DeFi and earn, I'll call it 4% or 6% or something like that, on top of a money that's been increasing in value. It's certainly volatile now, but if you squint your eyes and you plot the price of Bitcoin or Ether on a semi-log graph, since the start, it's been going pretty much up and to the right quite smoothly. And so smart people in DeFi recognize that. In the US, if we get some legislative clarity so that financial institutions, so that enterprises can put their money into higher yielding platforms, can lend and borrow. I think the floodgates in terms of the use of DeFi by institutions are about to open, and that's going to be a forcing function for DeFi to get better and better, to make itself more and more accessible and usable. And so I think 2026, we're probably going to see a real breakthrough in the use of DeFi.
And what's the prospect of the U.S. Clarity Act? You were talking about U.S. regulations that can help usher this forward. They're facing delays now. Yeah, what do you think? How do you think that will move in the coming months?
It's been even more volatile than the markets. So I am not a legal expert. I talk to lots of legal experts and policy people. The most recent statement that I heard was that it's looking like there will be some concessions on both sides of a couple of different issues. There's still the issue of whether legislators or politicians can actually participate in either equity investments or token investments. But it sounds, as of this afternoon, it sounds like this could be worked out in the next month or two. But don't, that is not financial advice.
Got it. And I want to talk about Ethereum. So, in the past, Wall Street firms, banks, they have been wary of public blockchains, but we've really seen them heavily adopt the Ethereum network, layer 2 especially, and with EVM compatible blockchains. So Ethereum is emerging as that settlement layer globally, increasingly, with Wall Street firms, coming into the fray. There are obvious benefits to having a unified settlement layer, say on Ethereum, and there are competitors too, perhaps Solana, others. Are there any risks to relying on a single chain?
Relying on a single chain. So it depends which chain it is, I think. Bitcoin was formed a long time ago, and it was a special period in which Bitcoin had the ability to innovate and favor rigorous decentralization and create this this new kind of trust, decentralized trust, the most powerful trust known to humanity. And so it established itself as decentralized money, or certain aspects of money. Ethereum took this invention of decentralized trust, and because it was built by software developers, it built a platform for software developers to build anything they wanted on decentralized trust. And Ethereum was also formed at a special point in time where we had the luxury of a bunch of years to keep building and scaling and making it affordable and usable, all while doing the hard thing, which was keeping it rigorously decentralized, because that's where you get decentralized trust from, and some side effects of that are credible neutrality and censorship resistance. So when we have been speaking to traditional finance organizations, whether they're deep infrastructure in the money space or in the security space, we find that we're on the same team. We find that they want the most trustworthy systems. We find that they want the kind of modularity that can separate different kinds of functionality so that they don't break together, or so that there aren't conflicts of interest, separations of concerns, essentially. And so if you look at the era of private permissioned blockchain, a huge amount of that work has been done in the last few years on Hyperledger Besu, which is an Ethereum client. It's an Ethereum client that our company ConsenSys contributed to the Linux Foundation. And so whether it's DTCC or Citibank or just so many financial institutions, not just in the US, but around the world, they all already use Ethereum. But in a private permission context. And so now that they've been given permission, or are being given permission, in the process of being given permission by regulators to move on to public blockchain and benefit from issuing real-world assets on a rigorously decentralized platform like Ethereum, or participating in stablecoins and DeFi, etc., they are not uniformly, but dominantly choosing Ethereum technology. So we have a layer 2 zero knowledge EVM technology called Linea, which is 100% bytecode compatible with Ethereum, but it's also being structured as the enterprise Ethereum blockchain, or layer 2 blockchain. And so if you're one of those financial institutions and you want your own settlement layer, or you're providing infrastructure to the rest of the financial industry, you're already working with Ethereum technology in-house. And so Linea is actually built on and around Besu. And so the natural choice is to build on Linea or other layer 2s in Ethereum. And many banks are actually focusing on layer 1 as well. That's probably the best place to issue valuable real-world assets, and then move some of the activity up to layer 2s. But the natural choice is to set up shop for your consortium or for your institution on a layer 2 ZK EVM that gets the full security guarantee from layer 1 and enables you to bridge to anything and access any sort of DeFi or any sort of tokens in the Ethereum space.
Yeah, and of course I should add, before I ask this, that you're a co-founder of Ethereum. A lot of people will know you by that.
Little bit biased towards Ethereum, yes.
But yeah, with Ethereum, I mean, there's been no talk about quantum risk, things like that. Are there emerging tech risks that people should be prepared for?
I've read a lot about quantum risk recently, and we've been talking about that in the Ethereum space for a long time because we were all aware that it was coming. It was always 20 years away, and it may still be 20 years away, but then this AI thing happened, this ability to bring machine intelligence to different disciplines, whether they're scientific disciplines or technological disciplines, and maybe create some sort of boom magic event that suddenly cures cancer or suddenly makes cheap nuclear power rapidly available, or enables quantum computers to become relevant much sooner than many people think. So there are lots of really smart people that think it is still 15, 20 years away. There are lots of smart people who think it might be as soon as 5 years away. So let's call it 8 to 10. And Ethereum is not perfectly ready right now, but a bunch of the components are already being made quantum safe. Signatures are moving from a vulnerable technology to a hash-based technology, which will be invulnerable. So Ethereum will be just fine within 2 or 3 years. Other blockchain systems will be just fine because there are solutions. And the only concern is Bitcoin, actually. So Bitcoin, Satoshi Nakamoto, whoever they are, please come back and upgrade your accounts because otherwise some quantum technology company is going to be able to come along and for each one of the addresses that hold 50 Bitcoins that Satoshi mined, they will be able to crack that code and move those tokens and potentially end up with quite a bounty. So it's a complicated, perhaps existential threat for Bitcoin. And it'll only affect certain kinds of addresses, but it's a large percentage of the addresses.
And yeah, something looming. But also just turning to the subject of AI as well. How are you using AI in your work?
So I use it all day, every day. Every time I need to do something that requires some information, some analysis, I generally use Gemini. It's very strong. There are other great tools that I use as well. Internally, we built our customer success database so that customers can interact with it as a first layer, and it is could call it beloved. It's very well received, and if necessary, it passes our customers off to humans, and they're also very well received. So we have a truly great customer support system. We have a lot of software developers who are making use of Claude and other systems to help them write software. And we have this phenomenon going on right now that you're probably all aware of, where ClaudeBot emerged and morphed into Moltbot, morphed into OpenClaw. And so there's this tremendous innovation where people are setting up either one agent or swarms of agents and giving those agents personas so that they can participate as a team, giving those personas different skills, hopefully isolating those agents on their own special computer because you don't want to give the agents too much access to your personal information or your wallets. And so MetaMask was already used by some of these agents, and we're rapidly working to make our APIs more fleshed out. So agents can actually use the visual user interface of MetaMask, but we also have a programmatic API interface, and so we're trying to make that much more capable as rapidly as possible, so that agents can speak computer language basically to their MetaMask, and we have a system that we released quite a while ago called the Delegation Framework or Delegation Toolkit or SDK, and that's a system that is going to enable agents to have more granular control, more power, either over an account in my MetaMask or their own MetaMask setups, and we can do that with what's called least authority. So we can really circumscribe very explicitly what sort of privileges the agent has over an account on MetaMask. So you can tell an agent a whole bunch of things like don't publish my private key on 4chan or something like that. But you can't guarantee that the agent is going to listen to any of your instructions, and you can't guarantee that it isn't just going to go, oops, I misread that. I'm sorry, I published your private key. So this way, it's not going to be possible for the agent to do something that would expose your private information or send some of your assets away outside of the budget that you give it.
Yeah, so, because, I mean, I find it interesting that people use the word trust when talking about agents. How do you set, trust boundaries? Yeah. And blockchains are often about trustless systems. And, yeah,
trust minimized systems, yes.
Trust minimized systems, not needing to trust the third party. And with agents, so it's really about controlling the access of information that they have.
So agents are machines. They are software that sits at a layer outside of or above a blockchain. The trust minimization happens at the core protocol, where you've got mathematics and computer science basically doing objective things, not objective determinations of what happened and when, as we have in traditional finance. And so you get the really rigorous trust at layer one. If you write your layer 2 correctly and you interface it to layer 1 correctly, you get basically the full security guarantee of layer 1 at these layer 2 blockchain networks. And so in this way, we've been able to scale the power of decentralized trust to a lot more computation environments. But then if you have some sort of program, prediction markets, or a DAO potentially, where you've got people who are participating in progressing the work of the DAO, you have subjective systems there. They're just perhaps more transparent. They can be more decentralized, but not really rigorously decentralized. And so as humans get more and more in the loop, or agents even get more and more in the loop, you can have reputation systems and things like that, but you don't have the same sort of objective trust that you have at layer 1. That's where the gold standard of trust resides.
Yeah, so we'll see where all of this develops. I see that we're running out of time, but fascinating stuff. Thank you so much for joining me, Joe, on this conversation, and thank you to our audience as well.